Yes, guys, happy morning, all of you. How are you? I can't hear you. How are you? Awesome. So, yeah, thank you. Okay, buddies. So, how was the program for those of you who went, those 6, 7? It's good. It was good? Okay, nice. Okay, guys. So, today, let us begin a new chapter. We had done basics and we had done house property. And this week, I'll give you the Q&A. As I told you, it's getting ready, almost done, just finalizing the stuff and all those things. I will give you the copy so that you can also start solving, we can also solve together. Okay. So as I told you, we have finished the basics and we have finished the, house property, and we have part of residential status, not full, part of it, right? We saw only the residential status. Other things are still there. We haven't even touched all these things. Only this much we have discussed. So now with that knowledge, let us get into a brand new chapter, which is very, very important. Profit and gains from business or profession. PGBP. Most important chapter of our syllabus. And maybe this and capital gain, I would say. Both are very, very, very important. You will not only learn this now, but also for your future. It is very, very important, guys. So let's dive right into it, the concept of PGBP. So all of you can write the heading, Profit and Gains of Business or Profession, in a new page. I told you there's no point, you can keep whatever book you already have, or you can keep a new book for this, no issues. We already discussed. Profit and gains of business or profession. Right? So, first and foremost, we need to understand PGBP. It's popularly called as PGBP, right? And in this, what we need to understand? We need to understand the charging section. So write down charging section. Charging section, my dear friends, is section 28. So we need to understand what do you mean by business, what do you mean by profession, and all those things. So now, if you remember, we had one definition called income, which we had not seen. So income was defined in which section? 2 clause 24. Income was defined in 2 clause 24, and income will be profits, income will be gains. This is section 28. Does income include loss also? Since they have used the word income includes, income will also include losses. Even negative income is called income. So income will also include losses. So income will include profits, income will include gains, and income will also include what? Losses. So any loss also will be called income, which means what I am trying to tell is, if there is a business loss, can it be claimed against the profit? Yes. So that's why income will include loss as well. Profit, gains, and losses. Now, the thing is, we need to understand what's the difference between three things. You can write along with me only, no problem, no issues. Because here there's no heavy duty stuff for you to understand, for you to stop. You can write along with me, you'll easily understand. So income 2 clause 24, what guys? It is profit, gains, and losses. Profit and gains covered under section 28. Loss also covered under section 28. So the entire thing is covered under section 28. So what are the things that are covered? Business is covered, profession is covered, vocation is covered. Three things are covered: business, profession, and vocation. Business, profession and vocation. Now the thing is, if I use the word business, I cannot use the word profession. For example, a sports person, is he doing business or is it profession? Profession. Chartered accountant in practice, business or profession? Profession. Chartered accountant who is the CEO of boat company, the music company, business or profession? Business. So either you use business or you use profession, it cannot be used interchangeably. So I can say these two are mutually exclusive. What two are mutually exclusive? Business and profession are mutually exclusive, which means if I use the word business, I cannot use profession. If I use the word profession, I cannot use business. Business and profession are mutually exclusive. So business word has a very wide meaning, guys. So much meaning you can give for the word business, wide meaning. So basically there will be a lot of effort when I do business, and there would be returns as well. Now anything that I do with lot of effort which I expect return is called as business. Anything under the sun is a business. When you are going out, it's hot now, near the signal, one fellow will be selling umbrella. Is it business? Yes. That business he will stop in 1 month. He'll be selling buttermilk. He'll be selling, some cold drink. Is it business? Yes. And next in 2 months, he will start selling something else. When winter comes, he will start selling sweater. He will start selling something hot. Yes. So anything that you do, an effort that you put to get the return will be called as business. And it can be organized sector. Yes, we are also in the business of education, organized, completely organized. There is a setup. Or it can be, as you see on the road, unorganized also. Pani Puri fellow, roadside dosa guy, you would have seen that, no, 99 varieties of dosa. That also is business. Everything we do is business. Pani Puri, in small stall he has put Pani Puri, that is also business. Whether they pay tax or not, you also know they don't. But I'm saying, is it business? Yes. On the other hand, profession, guys, business, do you need any skill? You need to be street smart, that's all. You need to be street smart if you want to do business. But profession, do you need a skill and a qualification? Yes, obviously. For profession, what you need is specialized skill. You would need a specialized skill. It could be an intellectual skill, guys, intellectual skill. Or it would be labor oriented. You need to work. Intellectual skill, of course, your brain, CA, CS, lawyer. Why will a chartered accountant never fail? Why would a chartered accountant who is actually knowledgeable never fail? Because he doesn't have to invest any money. Does he have to invest any money? No. His brains are only the investment. His or her brains are only the investment. No money needs to be invested. Right? Yeah. CA, CS, lawyer. Best. Whereas the other people, they are very skilled, no doubt about it, but the thing is they also need some infrastructure and all properly. For example, surgeon. Surgeon cannot just say, lay on this table, I will operate. No. You can't tell, pulling one blade, one chaku, man, I will operate. No. There are proper surgical instruments. Right? Of course, but labor is also involved. He will put his, labor into that. Surgeon, different labor he will put into it. So that is also there for him, no doubt about it. Surgeon. Then you have the sports person. Sports person also, guys. All these people will put in a lot of work. Yes. Vocation, on the other hand, vocation is your passion. What you call it? A calling. Calling means from deep down inside you feel that you want to do it. No, that's called a calling. For example, singing, correct, comedy, and but then singing, acting, comedy, theater, drama, all these things, can it also turn into a profession? Yes. There is a thin line of difference between vocation and profession. So even though it is your calling and passion like singing, dancing, etc., can that turn into a career? Yes. So in fact, profession includes vocation. So profession actually includes vocation. But I just want to give you the meaning of vocation. Vocation is something what people don't consider it to be mainstream. It is something what you do for your passion. If somebody says, what are you doing? If you say, I'm doing CA, I'm a CA and also a singer, okay, no problem. If you tell I'm a singer, I'm an actor, we're like, what is this fellow doing? That's what they think, no? It's a passion only. That passion, nobody will join acting or singing to make money. They really join because they really want to act, they really want to dance. So that's what, it's a passion. You would have seen in the, on YouTube, you would have seen these Babas who try to convert you from one religion to another religion, you would have seen, no? Maybe, you know, Hindu to other religion, Christian to Hinduism, whatever Babas. I'm not telling it is only Hindu, Muslim, Christian, anybody. These Babas. Now, they are all in a vocation of what? Spreading the religion. That's actually their passion. Their passion is to spread the religion to as many people as possible. So you had one guy called DVD Baba. You can search on YouTube, DVD Baba. That fellow is to put DVD near the kidney. Somebody will come and tell, I have kidney problem. So DVD near kidney. And then suddenly that fellow starts shaking, vibrating. And then what happens? Kidney problem solved. Awesome. Somebody has brain tumor, DVD near brain. You just search, I'm not even joking. On YouTube later today, you search DVD Baba. Then there is one more fellow called Rarara Baba. He is a super funny, yes. Correct? Rarara Baba. Correct? So if somebody will tell I have a kidney problem, so I will just put the hand there and say Rarara, I will tell. I'm not joking. It's very funny, you should see. And guys, shockingly, this Rarara Baba is a chartered accountant. Right? Sebastian Martin, if I'm not wrong. Chartered accountant. CA Sebastian Martin. Kidney transplant specialist by just shouting Rarara, imagine. Right? So what, like that, so many Babas are there, guys, fake Babas. Nityananda, Swami, have you seen? Yes. So all those fellows, right. The thing is, Nityananda is in his own world only, he doesn't care. How awesome he is, he will be in his own world, he will tell whatever he feels like telling. Right? So all these fellows. Now this best part about this Rarara Baba is, he was a kidney transplant, whatever, doctor or evangelist. Now this fellow, chartered accountant, imagine, profession he left and he joined this vocation it was. That's a classic example of vocation. He left his profession and joined off that vocation. Correct? Now this guy, one day was found dead in his house. He died. Then they did post-mortem. Guess the reason of his death? Kidney failure. Really happened, not joking. Right? Awesome. So if you see, all these fellows are there, guys. Nityananda, Rarara Baba, DVD Baba, so many fellows are there. If you see online, so many fellows will be there. Now these people do what? They do their vocation. And that vocation is to do what? Passion or calling, spreading of religion. Evangelist, not these Babas. Yes, there's one more fellow used to be there, Zakir Naik. So that fellow used to speak about, that fellow knew everything about Bhagavad Gita, about Quran, about Bible. So like section number he used to tell. If anybody asked a question, Bible verse number 3, line number 4, line 6, you see red with this and all. So listening to that fellow, some people started planting bombs everywhere, especially in Bangladesh. So he ran away from India, Zakir Naik, and now today he is living in Malaysia. So when Narendra Modi went to Malaysia, first thing he told was, I want to extradite Zakir Naik into India because he has committed many atrocities here. I want to put him to jail. But of course, he's still hiding in Malaysia. So yes, so these fellows will do. Have you watched the movie called Trans, Malayalam movie? Right? Fahad Fazil is an actor. He has made a movie called Trans. Watch all those things. So it will tell you the business. It's a business. So that vocation actually is a profession and it is a business. So yes, business, profession, vocation, all these things. Right. So there are so many Babas and many spiritual gurus are actually honest and genuinely take you towards the path of spirituality. But for the equal amount of Babas that we have, there are equal amount of or more number of fake Babas who actually make money. But it is what it is, guys, nothing can be done. People believe in them, so it's fine, to each his own. If they believe, good. If they don't believe, also good, anything. Right? We are nobody to tell that is wrong, this is wrong. We are just stating the facts. But yeah, you watch these videos, it is very funny. Rara baba, DVD baba, super fun. You'll have a good time pass. If you are getting bored, if you want a laugh, you can watch these videos. Right? Yeah. So if you see, is that, because okay, let's not care about all those things. For us, what is the taxability of these things? Is it business or profession? Yes, PGBP. It's vocation and slowly turned into profession, and then it is business. Right. So these are all the various things that we can think about it. So some more examples we will give. Yes. Now what about first one? What is taxable ultimately? Capital receipt or revenue receipt? Capital receipt or revenue receipt? What is taxable? Always what is taxable is revenue receipt, not capital receipt. Correct? So if I sell something or if I am getting something on a capital nature, it is not taxable, it is only revenue receipt. So capital receipt, not taxable. Revenue receipt is taxable. Right, so you would have seen the news, Yuzvendra Chahal and Dhanashree Verma. Dhanashree Verma has got alimony of 4.75 crores. Now is it taxable for her? No, because it is a capital receipt. It is not a revenue receipt. That's what I was trying to tell. So what is taxable in PGBP is always revenue receipt. Some pointers. So point number 2, even in revenue receipt, if you see, if I receive cash and if I receive kind, are both taxable? Yes guys, cash is also taxable. If I receive in kind also, it is taxable. For example, you are the auditor of Rajnikant. He becomes very happy with your work. He has a Rolex watch worth 2 crore. He is so happy with your work that he'll remove the watch and give it to you. Is it taxable? 100% yes. Because has he given it to you because of your business? Yes. So it will 100% be taxable. Your client will gift you a Singapore trip. Is it taxable? Yes. In kind, he will only send you the tickets. Is it taxable? Yes. What is taxable? Whatever amount you spent, 1 lakh, 2 lakh, 3 lakh, whatever, that will be taxable. Okay. What about this, guys? Your client will call you. You will say okay, but you will say, sir, out of pocket expenses, I have to come all the way to Mumbai. I will spend on the ticket, I will get the reimbursement from you. Is the reimbursement also taxable? For example, I will decide, you will have to pay me 1 lakh for my services, plus I will spend 20,000 for the flight tickets, etc. That also you should refund. What is taxable, 1 lakh or 1 lakh 20,000? 1 lakh 20 or 1 lakh? What do you think, guys? 1 lakh is my fee. 20,000 is reimbursement of expense. I spent money to come there. I am taking the refund. So 1 lakh 20 is taxable or 1 lakh. So in my income statement, should I show 1.2 lakh minus 20,000, or will I show 1 lakh 20,000 minus refund of 20,000 and 1 lakh is taxable, or will I show 1 lakh minus 20,000, 80,000 as taxable? Should I show 1 lakh 20 as the income, or my income only should be 1 lakh? Minus 20, so 1 lakh. Is reimbursement of expense taxable is the question. What do you think? Is it income basically? Is it income? If it is not income, will you take it or not take it? That's all I am asking. If it is not income according to you, will I take it or not take it? You should get, okay? You'll get 1 lakh 20, that's okay. But my question is, when you are showing it as income, no? See, many amounts can come to your account. Your father can transfer some amount. Is that income? No. So everything you cannot take as income. I am asking, what will you take it as income? Will you take it as 1 lakh or will you take it as 1 lakh 20 as income? I am not talking about credit in your cash in your bank account. No. When credit in your bank account only 1 lakh 20 only. 1 lakh will come, 20 again will come, you would have spent 20, ultimately 1 lakh only. But I am asking, as an income, what will you show? 1 lakh or 1 lakh 20? 1 lakh. So reimbursement of expenses is not income, guys. I am not talking about cash book. I am talking about PGBP. Reimbursement of expenses is not income. Reimbursement of expenditure is not income. Guys, and I also told you voluntary payment in cash or kind. I told you, no, Rajnikant example. Voluntarily he has paid. My fees was 2 lakh. He is so happy with my work, he has given me 2 lakh 50,000 voluntarily. I didn't even ask for it. The 50,000 is taxable or not? Yes. Why? Because it is linked to business. It is what? Linked to business. And guys, you should use this word that's called nexus. Nexus means what? Linked. Nexus with business is there. And hence it is taxable. Which means client is giving you 10,000 extra, 20,000 extra, client is giving you one watch, client is giving you one trip, everything is taxable, guys. Right? It is taxable because there is a link to your business. What about this, guys? Isolated venture. Isolated means only once in a way you do it. Is it also PGBP? One time in your life you do that business, that's all. Is it also? For example, do you know this flower called Kurinji flower? Yeah, Neel Kurinji it is called. Kurinji flower blooms in a place called Munnar. Correct? In Kerala there is a place called Munnar. So there it will bloom once in 12 years only. So when that Kurinji flower blooms, no, everybody will go trip. They'll create a trip called what? Kurinji trip. So they'll take you from here. You can go to Munnar, enjoy that flower everywhere, and then bring one flower just as a a token of remembrance. Come back, enjoy. So you are a tour organizer. Now you will organize only trip to Munnar to see the Neel Kurinji flower. And you are doing this once in 12 years. Next time you may not even do it. Only once in your life you do it. Is it also PGBP? Yes. If you sell anything once also, it is PGBP. Business need not have continuity. In your business studies, you would have studied business should be continuous. Nothing here. Nirmala auntie doesn't care. One item you sell, you make huge profit, taxable. You make little profit, taxable. She doesn't care when you started, continuity is there or not, no. Even an isolated venture, for example, that Kurinji example I gave you, taxable. Sixth point, I'm just giving you various examples to make you understand what is PGBP, that's all. So there is an employee. For that employee, no, I'm giving him car, I'm giving him driver, I'm giving him one gas connection in his house, I am giving quarters, house to stay, I'm giving him 2 servants also. All these things. Is it PGBP? No. Employee, guys. This will be called as perquisite. This will be under income from salary. This will be income from salary. But the same thing, instead of employee, if it was a consultant, instead of employee, if it is consultant, then this will be profit and gains of business or profession. right? So car, driver, gas connection, quarters, 2 servants, all that fine. Got it? If you are working as a consultant, not as a employee, then that will be PGBP or not? Yes. You are a consultant in a company, you are getting a car, driver, gas connection, quarters, servants. Is it PGBP? Yes. Simple. So guys, if you are an employee, that is called generally, both are contract. There are two things, contract of service and contract for service. Contract of service and contract for service. Contract of service will be called as employment. Contract for services PGBP. Contract of services employment, contract for services PGBP. For a builder, if he takes some deposit, builder takes deposit, obviously he'll take, he will take, let's say, non-refundable deposit he will take. So guys, he will take, sir, when you are booking a flat, you should give some token amount, 1 lakh rupees, just to block the flat. So that deposit may be refundable, may not be refundable. If it is refundable, then okay. I mean, if that fellow doesn't care, then he will have to give it back. So that's okay. Right. So the refundable deposit eventually gets converted to what? Money. Because you pay the first deposit, then later you will start paying me all the money. Correct? So then it gets eventually converted to what? Income. Why? Because first you give a deposit, then you give other money, so you'll keep on giving money for the house. That will become income eventually. Eventually it is income. But non-refundable deposit, guys, you give a non-refundable deposit, afterwards that fellow doesn't pay anything. So what happens to this? You will forfeit it, which means you will get to keep it. Forfeit. I was very clear, when you are blocking the house, you should pay 1 lakh rupees. That will be a non-refundable deposit. If you continue further and pay, then okay, no problem. But if you don't pay me the remaining amount within this time, I will take that 1 lakh. It's mine. Tell me, according to you, is this taxable or not? Non-refundable deposit. Is it a capital receipt or revenue receipt? Yes, very good. It is a capital receipt, not taxable. I am just giving you so many examples I am giving, that's all. Right? So rather than boringly seeing each and every line, we'll understand this entire PGBP through a lot of examples. Everything that you see around you is either salary or house property or PGBP or capital gains or other sources. Very simple. Right? Next. Any key managerial personnel, KMP. Who is a KMP, key managerial personnel? It could be a managing director, manager, or a whole-time director, could be a chief financial officer, could be a chief executive officer, could be a company secretary, whoever. The company, guys, these are the big people, will actually take insurance in their name. And the company pays premium. What insurance they'll take? What if this fellow dies? Guys, you only tell me. You may think about separate legal entity, all those things, but just think about it. If something were to happen to Mukesh Ambani, he falls sick, what happens to the Reliance company shares? Will go up or come down? Come down. You may say company is different, person is different, ultimately everything is linked to the person. When Dhirubhai Ambani had a stroke, the entire Reliance fell by lakhs of rupees, crores of rupees back then. He had a stroke actually, paralysis. So if you see even his, face is little disfigured. If you see his pictures and all. At age whatever, 55, 60, whatever it is, he had a stroke. So yes, if anything were to happen to Mukesh Ambani, I mean, let's hope nothing happens, but I'm just saying, what happens to Reliance? It will come down drastically. So, to protect the company also from fraud or from any wrong thing happening, they will always take something called as insurance. And they will pay premium every year in crores of rupees. If tomorrow, if any director commits fraud, at least I can take that money. And this is called as Keyman Insurance Policy. It is called Keyman. Keyman means key managerial personnel. Insurance policy. So three things will happen. One is premium is paid by the company. Yes, I'll leave soon, don't worry. Premium paid by the company. Correct? This is a sign that I have to leave the class. We just started. And yes, premium is paid by the company. Premium is paid by the company. That is one part of the story. Second one is what, guys? After a few years, now if nothing, no fraud, nothing happens, they'll pay. There will be like a 5-year policy, let's say. After 5 years, no fraud has happened, the director is not dead, nothing has happened to him, is hale and hearty. So guys, basically, you will get, the person also will get some, the employee, the KMP will get something called as surrender value. Where there is no fraud. The employee KMP will get something called as surrender value. And if there is a fraud, then the company will receive the claim amount. Company will receive claim amount. Right? So premium paid by company, surrender value, no fraud. If fraud, company will receive the claim amount, all these things. Now we need to see what is taxable, what is not taxable. Company receiving the claim amount, definitely taxable, guys. Under 28(6). It's taxable under 28(6). Premium is paid by company. Guys, why is it taxable here? Every time I pay premium, will it be debited to P&L account? Yes. If I debit to P&L account, my profit will reduce or increase? Reduce, which means I'll pay less tax or more tax? Less tax. So every time I am paying less tax because I am debiting the premium account. Suddenly 3-5 years later fraud has happened, whatever, I get the super money, I get return. Don't you think so? It should be taxable? Yes. So here premium paid by company, which is debited to P&L account. debited to P&L account. Section 37(1). It is allowed. So very simple logic. Every year I am allowing the expenditure. When I say allowing the expenditure, I am debiting to P&L account. If I am debiting to P&L account, what happens to the profit? Reduces. If reduces, profit reduces, what happens to the tax? Less tax. Then for 4 or 5 years later, fraud has happened. Suddenly I get super money. Obviously, when all these years I have taken benefit, when I am getting money, is it taxable or not? Taxable. This is for the company. Guys, the employee or the KMP will receive this money. If there is no fraud, suddenly he will receive a lot of money because he has been a good director. Like a benefit, for his benefit, they will give him some extra money. Now tell me guys, is it taxable or not? Yes. In whose hands? Employee or KMP's hands. 100% taxable, definitely yes. If you are an employee, taxed under the head salary. If you are a consultant, taxed under section 28. That is what we are doing, PGBP. Can you be a consultant director? Yes. You need not be an employee. Should director be an employee? No. Third one. If you are a honorary chairman, for example, this guy, Narayan Murthy, is not the chairman, not the CEO, CFO, nothing of Infosys. He is the chairman emeritus, also called as honorary chairman. Is he an employee? No. Is he a consultant? No. He is just there to give us a position of respect because he is there since many years. So if he is also getting the Keyman insurance policy, return amount, is it taxable in his hand also? Yes, but under income from other sources, IFOS. Or if the family receives, that chairman is dead guys, family receives the money, is it taxable in their hand? Yes. Under which thing? Income from other sources. Anything. Got it? So what we are doing now is, I am giving you so many examples. Everything is part of the charging section, section 28. So after reading this example, then if you read the charging, you will be like, I understood everything. Instead of doing that and line by line reading, that is stupid. If you read the examples, everything is basically guys, Nirmala madam will not leave you only. Everything is taxable except capital receipt. So the courts will decide what is capital receipt, what is revenue receipt. You and I cannot decide every time. Courts will decide. There are so many Supreme Court judgment as to what is capital receipt, what is revenue receipt. Depends on the facts of the case. Every single time it changes, right? Yeah, but based on those cases only I am writing all these things. Now, you are a part. Did you understand guys? All of you understanding? Yes? All of you writing with me? Yes, good. Next question, point number 9. 9 only, no? Okay, 9. You are a partner in a partnership firm, right? So you are receiving what? Bonus, remuneration, interest, commission, salary. So many things you are receiving. You are receiving as a partner in a partnership firm. You are receiving. Now the thing is guys, when you are receiving the money, is it PGBP or is it salary? You are receiving salary from partnership firm. Is it salary or PGBP for partner? As a partner, can you be employed in a firm or you are the owner of the firm? Yes. So how can it be salary? Don't go by the name, go by the concept. So it was creating confusion. Just like you told salary, partners also were thinking it is salary. To ensure that there is no confusion, they inserted this line in the charging section saying that any amount received by partner will not be salary, it will be PGBP. Any amount, it can be bonus, remuneration, salary, interest, commission, you name it, whatever you want. It will be PGBP. Yes guys, it will be what? Profit and gains of business or profession, section 28. These are all already inserted in section 28. I am just giving you examples of it, that's all. This is only the charging section. They have told any amount received from a partnership firm, PGBP. Then here, any key man insurance premium paid debited to P&L account when surrender value received by employee, taxable under salary. Surrender value received by consultant, PGBP. An amount received by a company later, PGBP. It's only the charging section. Then here, any non-refundable deposit, capital asset, not taxable. And any consultant receiving any perquisite like driver, gas connection, quarters, etc. Yes. Any person having business receiving anything in cash or kind voluntarily where there is nexus to the business, taxable. We are doing only the charging section in a different way, that's all. Next, 10 point. You are the chef of Taj. Taj has taught you so many dishes. You are leaving Taj, no problem. When you are leaving Taj, they will tell you, sir, you cannot, or sir or ma'am, you cannot work in a similar 5-star hotel for the next 2 years. In the contract only they would have written. And anyway, since you are leaving now, as a compensation and to ensure that you will not go to my competitor, I am paying you this amount. If you are a salaried fellow, then it will come under salary. But if you have joined as a consultant, right, this is paying that money for him to not compete with the person. It's called as non-compete fee. Apart from that, let's say Veena Stores is right opposite, it's very famous, Veena Stores. Let's say Rameshwaram Cafe, which is, one more cafe which is hyped up and famous. So they also want to open right next to Veena Stores. So Veena Store owner will go and tell, boss, if you open here, you will also lose business, I will also lose business because the customers will get divided. So Veena Stores will tell Rameshwaram Cafe, please don't open here, open 2-3 kilometers somewhere else, no problem, you open there. Now as a compensation for you to not compete with me here, I'll pay you 10 lakh rupees. It's an actual contract, it's called non-compete fee. Is this an income for Rameshwaram Cafe or not? Yes. Or is it capital receipt? No, it's revenue receipt only. You are paying me money not to open it here. Why? You are paying me money not to open the shop here. Because tomorrow, because tomorrow if I open, then there will be loss of business for both. Instead, let's agree on that amount now and close. This is a normal, proper business deal. Non-compete fee. Correct? It happens in the teaching thing also. One fellow will be teaching in an academy. Suddenly he will come in an academy and start teaching. Suddenly, some next day he will not come. See, means the competition would have come to him and said, sir, please do not teach here. Take 5 lakhs and go home. That fellow shamelessly will take and go. Is that non-compete fee? Yes. Is it taxable? Yes. What? PGBP. Got it? So yes, 10th one, non-compete fee. is PGBP. Next, so one more thing, guys. So one of my dad's friends, let's name him Mr. R. So Mr. R actually many years ago, 20 years ago, created a additive or a lubricant, petroleum lubricant he actually created, patented, he had patented technology. He was an engineer, automobile engineering he had done, and he created a additive or a lubricant which can be added to the fuel, which will increase the fuel efficiency, mileage. If you are giving 12 kilometers, if you add that additive, it was giving 16 kilometers. Right? So he actually sold it to Shell, Shell, you know, Shell petrol bunk. That's why, you know, if you go to Shell and they say if you put Shell petrol, though it's little extra costly, mileage will be better, they say. Have you heard? It's because of they buy these things from others. Buy means they will buy the right to use that particular additive. Now if Shell company has given to Mr. R 50 crore rupees and told him to not compete, is that 50 crore taxable in Mr. R's hands? Yes. As what? PGBP. But you know, Indians are very smart. They still don't want to pay tax. This is agreement number 1. Agreement number 2, what they did? Another agreement. Very chalu fellows. Shell company. This is point number 2. They only paid 5 crore as non-compete. Now Mr. R owns the know-how. Know-how means patent, intellectual property. First one, very simple, 50 crore you are getting. Is it taxable? 100% yes. Second one, what they did, no, very smart. They only paid 5 crore as non-compete. Then what they did? They paid 45 crore for not sharing the intellectual property. They say, do not share it with others. Share it only with me. They changed the wordings. First, what did they say? 50 crore non-compete. Okay. Second, they know 50 crore is taxable. So R went to Shell and told, bro, I don't want to pay so much tax. You please keep 5 crore as non-compete. Remaining 45 crore, let's change the wordings. Let us say, what will we say? That 45 crore is for not sharing the intellectual property. It is not for non-compete, it is for not sharing the intellectual property. Now this went to court and then they said it is actually not taxable because not sharing was not mentioned in the charging section. Which means 45 crore became non-taxable. Do you think Nirmala madam can take it? No. What happened next time? Immediate amendment. So in the amendment what she told, know-how is for, non-compete is for, obviously sharing the main IP, intellectual property. It is not just non-compete, it is also for not sharing the intellectual property. I'll show you this part, you see. Come to PGBP, I'll show you this line. Yeah, you see, page 7.3 guys, page 7.3 is Mr. R's example. Any sum received or receivable in cash or kind under an agreement for not carrying out any activity, non-compete. So what did he tell? I'll pay you 50 crore, you please don't carry out this activity of giving the lubricant to others. Okay, 50 crore. To avoid this, what did he do? 5 crore he took as non-compete, 45 crore he took it as not sharing the know-how. And he won the case. He didn't have to pay tax. Nirmala madam inserted, and when I say Nirmala madam, it's not Nirmala madam, it's the finance ministry. That time it was something else, somebody else. This came 15 years ago only. What was the change? You see, any sum received or receivable in cash or kind and an agreement for, not sharing any know-how. That 45 crore also was now made taxable. If you enter into any agreement with somebody and tell him not to share the know-how and give him money, it is also almost equal to be non-compete. Taxable or not? Taxable. No mercy, taxable. Simple. So if you see, same thing we discussed, value of benefit or perquisite, right? Then third one we'll discuss, fourth we'll discuss, fifth I just told you now, sixth I just told you, sorry, seventh already discussed. Next one, 12. Guys, any compensation that you receive for either the termination or modification of a business contract, either termination or modification of a business contract. What is this compensation? Termination or modification means what? Let's say I have been appointed for 4 years in the company as a consultant. Suddenly after 2 years they'll say, we no longer require your services. In our contract I was very smart. I told that if you remove me unnecessarily without any logic, without me committing any fraud, if you throw me out within 4 years, I will get compensation of 2 lakhs. I written it in the agreement, they agreed, okay, you are anyway leaving, I'll give you. It's called severance package. I am cutting ties with you, take 2 lakhs and go. Is it taxable? Yes. That is called what? Compensation for termination of a contract. Termination means what? Contract coming to an end. Instead of termination, they'll do modification. Let's say I was handling the entire India operations for you, you are the company. I was getting bonus everywhere across India. You come to me and say, boss, North India, now I will appoint somebody else. For North India, somebody else has been appointed, you only handle South India. I will tell, boss, North India you removed from me, I am losing so much revenue, I am losing so much money, what is this? They'll say, okay, don't cry, I will give you 3 lakh rupees compensation. That 3 lakh rupees compensation, what do you think? Is it taxable or not? Yes. That is for what? Modification of a business contract. Modification of a business contract. Got it? So compensation is available for what? Termination as well as modification of what? Business contract. Got it, guys? Is it taxable? Yes. Understood this? Compensation for what? Termination. Termination means what? Contract coming to an end. Modification. Terms and conditions are changed. But for in both the cases, I am getting some money. Is it taxable? Yes. Nirmala madam will tax absolutely everything. 13th point. There might be benefits given by the government. If you export, export oriented benefits. in the form of, you will learn it in GST, duty drawback, cash compensatory support, then something called DEPB, something called DFRC. All these are what? They are either subsidy or refund. Given for what? For export. You export more, you will get extra, right? So you see here, duty entitlement passbook scheme, duty free replenishment certificate. Don't have to remember all these things, guys, don't worry. Just remember duty drawback, cash compensatory support, DFRC, DEPB. Basically what are these? Subsidies or refund received by the government. Businesses will receive this refund for exporting. Is it credited to P&L account? Yes, it is credited to P&L account. Taxable or what? 100% taxable. I exported goods worth 100 crore. Government gave me refund of 5 crore. I got 100 crore. I got 5 crore extra also. Is that 5 crore extra taxable? Yes. So yes, taxable, guys. It is taxable. Fourteenth. Guys, have you seen something called as a club? Not a party club. Generally, sports club, boring institute. What does a club do? We are all coming together. You will give some money. What money you will give? You will give the membership fee. We will put all that money together and we will work for the betterment of all of us. You will get free services. Not free, actually paid for it, but services are available for you. So club will have basically for entertainment, recreation, sports, etc. You can join that club. So I had been to Mumbai. So one of my cousins had been for, that's why I couldn't come to Chennai. My cousin's wedding was there. Otherwise I would have come. So those fellows are stinking rich. For them 5 lakh, 6 lakh and all is like peanuts. So they are the members of a very famous club there. That club is by invitation only. Only big shots of Mumbai will get invitation to join that club. It is managed by Oberoi, 5-star hotel Oberoi group. It's a club. So they had taken me there for one of the events, just for dinner or something. We had gone. So there I saw. It is in the heart of Mumbai city. Huge club. And you can play games there. For children, there's a separate floor only, play area. Crazy. And of course, a lot of facilities are available. Food is there. You can enjoy. A lot of games, billiards, then shuttle, then squash, so many things are there. Swimming, boxing, everything is there. In the heart of Mumbai city, in one tall building. I was shocked. Generally club means here, the club is separate, complex only will be there. There is no place only, in Mumbai. So in the building only they have converted into a club. Crazy. It was very interesting to see. Now, that is only for exclusively for members. If you and I will go, they'll throw us out. So the members exclusive invitation only. They will only invite the top people and say, sir, please become a member. So they will have to pay membership fee every month or every year, whatever. I don't know the rate. Now the thing is, guys, is it taxable for the club? No. Club, what they do is they just collect money and from that only they provide services. But that particular club also had a board meeting room. It also had a huge party hall. Now today I want to host a party. That's why I am telling you this example also. One of the events there was in that club. So my cousin had hired that club, the entire hall for some event, one of the wedding events. Now tell me, is that available to everybody or should separately hire it? Separately hire it. Now that income that the club is getting, that is hiring charges, is it taxable for the club? Yes. So is it like a common service or specific service? Specific service. Is it taxable for the club? Yes. So for club, income derived by the club. For specific service, guys, not for general service. Specific service, taxable. Will normal money that they are getting for, what do you say, membership fee, is it taxable for them? No, because that they are just collecting and using it for the club purposes. Specific services like this, hiring an entire, for the event. So my cousin had booked the entire club for the day. And he had paid some 15, 20 lakhs. Now, is that taxable for that particular club? Yes. Because he has converted the club which belongs to everybody, had converted that to a private event for his guests. Is it taxable? Yes. Understood, guys? Yes. Next, 15. There is one section called 35 AD. This is expenditure for specified business, which we will see later. But still, we'll have to understand this part now. 35 AD, specified business. So guys, generally if I buy a capital asset, will it be allowed as depreciation or will it be debited to P&L account? Depreciation. You will put the asset in the balance sheet and little by little you are depreciating it. But in 35 AD, no, if you are doing some specified business like warehousing, then manufacturing certain things, infrastructure facility, etc., income tax department gives you a super benefit. What benefit it gives? It says that if you buy a capital asset, instead of making it on the asset side and instead of charging depreciation, I will allow the full amount to be debited to P&L account, deadly. So what happens to the profit? There will be a profit or a loss? Huge amount, 5 crore I am buying an asset, immediately debit to P&L account. What happens to the profit? Reduce or increase? Reduce. Tax will be less or more? Less. That's the benefit given. The benefit we'll see later. But my question to you is, this part is that this is okay, no problem. This is fine. Right? It will be debited. Now tomorrow when you are selling this asset, see generally if I buy an asset worth 5 crore, it will be on my asset side. Every year 5 crore, 50 lakh depreciation will be happening. That's okay. But first year only I will debit it to my P&L account. How much amount? 5 crore. Someday I am going to sell that asset. I'll use it for 10 years. There's no depreciation allowed. Why? Because I have already debited full amount to P&L account. What is depreciation? I will create an asset for 5 crore. Every year 50 lakh will keep on reducing so that 5 crore will eventually become zero after 10 years. But here what I am doing, first year only I am debiting how much? 5 crore. After 5 years, 6 years, assume I am selling that asset. I have already debited 5 crore. Today I am selling the asset for 1 crore, assume. Is that 1 crore income? Actually it's a capital receipt, no? But is it income? Nirmala madam says yes, it is income. If it was a capital receipt, I would have asked you to debit it. If it was a capital asset, ideally you would have taken it as an asset. Every year you would have taken depreciation. But now it's a different treatment of 35 AD. Are you taking as capital expenditure or are you taking it as normal expenditure? You are taking it as normal expenditure. When you are taking it as normal expenditure, actually when you sell it, that full income will be taxable under PGBP. Makes sense, no? Yes. So this amount is, full amount is debited to P&L account, but when 35 AD asset is sold, that, my dear friends, is PGBP. I'll leave. First pathway she dropped, now book she is dropping. Next, thankfully chappal is outside. Otherwise next chappal will come directly. Right? Yes. So when 35 AD asset is sold, then it is PGBP. Logical, no? If it was a capital asset, generally what I will do, put it in the asset side. Every year depreciation will happen. When I sell the asset, it will be treated in the asset account only. Here there is no asset account. Direct debit to P&L account. It's like an expense. And then suddenly I am selling it. So I have debited 5 crore, I am getting back 1 crore. I have already given you the benefit of 5 crore. Will 1 crore be taxable? Yes. Very logical, guys. No mugging up. Correct? No mugging up at all. Pure logic. So Nirmala auntie will tell, I have given you benefit of 5 crore. No? Yes. Now 1 crore money you are getting. No? Yes. So please tax it. Because you have already taken benefit of 5 crore. You have paid less tax on that. 5 crore has been debited to P&L account. Logical. Right? Yes. Next. Last part. Then I'll give you 5 minutes time to read everything. Yeah. Next 16. Last point. Let's say we have construction company. Let's say Naveen Constructions. So I will convert this ground floor 4 homes. This is stock in trade or capital asset for Naveen Constructions? Stock in trade. So these 4 homes, no, they are converting stock in trade to capital asset. They want to make it an office building. They don't want to sell it. They want to make it office building. So they are converting their homes into office premise. So they say in this entire building, all these things I will sell as homes. But the ground floor 4 homes, I will keep it as my office. One will be a demo house. One will be the main sales office. One will be finance office. So in this building only, I'll make the office. And on top, there will be homes. Many people do that. But I'm actually converting what, guys? Converting stock in trade into capital asset. Cost of each flat, cost of construction of each flat is 3 crore. Market value, fair market value is 6 crore, assume, double. So if I would have sold the property, I would have made 6 crore money per flat. There are 4 flats. 24 crore I would have made. And what was my cost? 3 crore. 3 into 4 flats. 12 crore is the cost. 24 crore is the sale price. Am I selling? No, I'm just converting. I am converting from stock in trade to what? Capital asset. Now, I'm just converting. I'm not even selling. I'm just converting to capital asset. I'm not even selling. Yes, yes, yes. Thank you. It started here, then next there. Right? I'm just selling. I'm just converting. I'm not selling only. I'm just converting it from one form to another form. Nirmala madam is very smart. No, guys, you only tell me. I'm converting stock in trade to capital asset. What value will I take in my asset side? Ultimately all homes put together, it's 12 crore. Selling price is 24 crore. Did I sell it actually? No. I'm converting closing stock into capital asset. According to you, on the asset side of my balance sheet, what figure should I take? 12 crore or 24 crore? You're right. Accounting wise, 12 crore I should take. Then on depreciation will be on 12 crore, but Nirmala madam has a different concept. She is telling, anyway the cost, opening stock, let's say opening stock cost is already there, cost is 12 crore. Nirmala madam is telling, assume you have sold to yourself. Weird concept. Assume you have sold to yourself. Means you have sold at what? What is the sale price? 24 crore. Assume you have sold it to yourself. So show 24 crore as income from PGBP. It's weird because you are converting what? Stock to capital asset. The moment it becomes capital asset, it will go to capital gains. So she is telling instead of showing 12 crore as this thing, what do you say, depreciation or asset, show the sale price as 24 crore. Opening stock anyway will be 12 crore. You pay profit, you pay tax on how much? 24 minus 12. You pay the tax on 12 crore now. You have sold it to yourself. Since you have paid tax on that extra 12 crore, in your asset side, I will allow you to show. The building. Now it has become an office building at 24 crore. I'll allow you to show the office building at 24 crore. Ideally, we would have shown 12. I am telling show it as 24, but pay tax on 12. So guys, the rule now is if a stock in trade is converted to capital asset, if stock in trade is converted to capital asset, PGBP will be what? PGBP will be FMV of the property, fair market value. How much? 24 crore. What is my income? 24 crore. But of course I have to give expense also. What is expense? Opening stock. Actual tax I will pay only on 12 crore. But what is the PGBP income? 24 crore. So I repeat, when a stock in trade gets converted to capital asset, the profit and gains from business or profession would be the fair market value of the asset. And to understand the logic, instead of showing 12 crore as asset, what are you showing? 24 crore you are showing as an asset. And 24 crore minus 12 crore, you will take it as what? Taxable amount. But what is PGBP? 24 crore. Do you understand the logic? Because she's like, boss, you are converting from one head to another head. You are converting from PGBP to capital gain. So for that, please take FMB. Did I actually pay from my pocket anything? No, just a conversion. But should I actually pay from my pocket the tax? Yes. So if a stock in trade is getting converted to capital asset, though there is no inflow of money, there is outflow in the form of tax. But what could be a potential inflow? That 12 crore will be shown now as 24 crore in the balance sheet. You will get depreciation on 12 crore or 24 crore? On 24 crore. Depreciation will increase the profit or decrease the profit? Decrease the profit. There will be savings in tax or outflow of tax? Savings. So now you pay tax on 12 crore, but you will eventually get savings over the next few years in the form of depreciation. Did you understand logic? All concept, guys, no mugging up. Instead you could have shown PGBP as 0 and taken depreciation on 12 crore. That is also there, but that's not the correct thing. Nirmala madam inserted in section 28 said, no, take it at 24. 24 minus 12, pay tax on 12. And the benefit of that paying tax on 12 will be benefited in the form of savings in tax over the next 10 years. How savings in tax? Because of higher depreciation. Everybody with me on this? Understood? All of you understood, guys? Yes. So these are all the points of charging section, guys. Last part. There is a concept called Airbnb. Do you know? Airbnb. It is called air, bread and breakfast. You have a house, you have an extra floor. If you give it on rent, you will get 20,000 rupees per month. Instead, can you convert it like a hotel? Yes. That is called Airbnb. So when I used to go to Chennai to take classes at KSA, I used to hire my own Airbnb in an old flat. If you enter that flat, you will vomit. Old 25 or 30-year-old building. But I used to take one flat there. Inside, guys, it was like a 5-star hotel. So that fellow, what he did was very smart fellow. If he had given that old building on normal rent, he would have got 15,000 rupees per month. What he did, he converted that small house into like a 5-star hotel. All amenities are there, beautiful interiors. And then he started selling it for 3,000 rupees per day, like a hotel. So imagine 30 days, he will get 90,000 rupees. Where is 10,000? Where is 90,000? This is provided by a company called Airbnb. If you have an extra house, a room in your house, if you have an extra floor, if you have an extra house also, instead of giving it on rent, you can convert it into business and claim it as Airbnb. What people were doing, all middle class people, higher middle class people, they used to have two homes, one home Airbnb, one home self-occupied. And then Airbnb is like a business. So you are earning 90,000 rupees per month. I want to reduce my tax. So can I create expenses? Yes. I will put maid expenses 20,000 randomly. Cooking help expenses 15,000. Gas maintenance 20,000. I will make the income 90,000, expense 80,000. Because in business you can create bills. So what is the tax you will pay on? 10,000. Nirmala auntie in Finance Act 24 changed it. She will not leave anything. She like you are doing cheating. Many people are converting their extra homes into businesses and claiming income from business. One deadly point she put. From today onwards, from where? Finance Act 24. It will no longer, if you have an Airbnb extra accommodation, it will no longer be income from business. It will be income from house property. In income from house property, what is the standard deduction? 30%. So if you are earning 90,000, I will show you pay whatever expense you want. I don't care. I will allow you only how much? 30%. What is 30%? 27,000. That's it. Remaining is taxable. Nirmala madam changed it in the year Finance Act 24. Conversion of any Airbnb, any business if you are doing from houses, that will be converted to what? Income from house property. So specifically she inserted that point in section 28 saying that any income from letting out of this residential properties etc. as a business will not be PGBP. It will be income from house property. Gone. So in Chennai, that fellow who I used to stay with, I became good friends with the owner. His main source of income only is this. He has 97 homes. He doesn't own any of that. Very smart fellow. He takes it on rent, sublease. I take it on rent from you guys. You have a house. You will give me on rent for 20,000. I will convert to Airbnb and sublet it. And I am making 90,000 per month. 90 minus 20 minus expenses. That they have converted into a business only. Imagine. Crazy. Got it? Nirmala madam said cheating. And she inserted this. Right? So all that we have discussed using examples, what have we discussed? Charging section. So take 10 minutes. You can take 2-3 minutes breather. I will take till 10:30 class. Take, and after 10:30 to 11 is your break. Okay? So, but it's okay. 2-3 minutes if you want to take rest, you take rest. Then read this. Now only you finish off. 10 minutes you take and read this entire thing. So 3-4 minutes break, 10 minutes you read. Okay? 9:40 will start again. Read guys. I want you to read full 7.2, 7.3, 7.4 till here. Okay? Now you will be able to connect everything, don't worry. This is, you just go through this note. It's not very important, but just go through. That's okay. But yeah, this rationale I have given you. This other point is just for your knowledge. That's all. 3 pages, guys. It will take less than 4 pages. It will take less than 10 minutes. Actually, 3 pages only. I don't know, 4 pages. 4 pages so that 10 minutes it will take. Read. Take 3-4 minutes breather. Take 10-12 minutes. 9:45 will start. Don't worry. I'll start the next topic at 9:45. Finish it off. Come on. So that is the charging section. Any doubts? Anything that you did not understand? Okay. So we have given a lot of examples here in our notes, which makes it very, very simple for us to understand this entire thing. So moving on, this also we saw that the amendment, whatever it had, what was there before, what is there now, all those things. So, speculative business part we will see. What is speculative transaction? It is basically what happens in the share market. So, speculative business, that part we'll see, that one part we'll see later. Next, write down guys, heading computation of section 29, one by one section, just like we did in house property, same we'll do section by section. So this section here now in PGBP, it starts from 28 and it is there almost till almost 44 DA, like that. So many sections are there, but it's very easy. One by one, slowly if we study, it will become very easy, nothing to worry. So and there has to be always a nexus to business. So write down section 29. Section 29 is computation of the entire PGBP. Computation of PGBP. So you can write here only. So I'll show you. See, January 24 guys, the business started, or rather the initiation of the business and all started, but the business began only from 1/4/2024 when they got something called as certificate of incorporation. So 1/4/24 they got certificate of incorporation, but January only the idea of the business and all had begun already. Now, during this period also, before the company got incorporated, I have already made an income of 1 crore. Expenses are 40 lakhs. After the incorporation, I have made income of 5 crore. This 5 crore is definitely PGBP, no doubt about it. It is definitely profit and gains of business or profession. But my question is, what happens to this 1 crore and 40 lakh? This is called pre-incorporation contract. Pre-incorporation contract. So write this chart down, then we'll analyze what is about the pre-incorporation contract. January to April 24 was pre-incorporation. In that I made an income of 1 crore, expense of 40 lakhs. Right? So my question is, what happens to that 1 crore? Is it taxable or not? Right? For example, if we are saying that a new company we are floating here and we already have a super brand, one more new company if I am floating, they will believe it only and then start paying. Like Reliance is starting one more, Jio already said, like Jio one more they'll start tomorrow. And they'll say, I'm going to incorporate from April 24. Late pudi, just keep it in the room, I'll take it. Right? So that is what it is. So if you see from January to April 24, this is the part. If I say I'm going to open a new business, obviously you will take it into consideration, no doubt about it. You will buy also. So 1 crore you have already bought worth of income. I mean, you already have my income and expenses around 40 lakhs before the incorporation began only. Now this 5 crore 100% PGBP. What about that 1 crore guys? Preliminary contracts or pre-incorporation contracts, are they valid or void? Valid. You have studied this in foundation. Sir, God only knows how I cleared foundation. In Indian Contract Act, Pre-incorporation Contract were there. BCom to 100% you have studied. Direct entry fellows. Sir, I have not done BCom. Foundation, I have not done foundation. And now you came, simply I came here and sat. What do you think? It is there. In Indian Contract Act, 100% pre-incorporation contracts were there. Sir, we have already cleared. No, past is past. Forget about it. How we cleared, we don't know. Let's think about the future. Anyway, okay, now you only tell me, guys. The company is not born only. Can you take income in the name of the company? No. That at least we know. It is not born. Company is born only on 1st April, but it's already earned money. You cannot take it in the name of the company for sure. Nirmala madam says, I will not. But, so is it a capital receipt, not taxable? No, Nirmala madam will not leave it. So she will do something. What will she do? Company is not born, but who are there? Promoters are there. Can I tax it in the name of the promoters in individual capacity? No, because they are not doing individually, they are doing it as a group. So Nirmala madam came with a deadly solution. She said that 1 crore will be taxable. That 1 crore minus 40 lakhs, expense also allowed. 1 crore minus 40 lakhs, 60 lakhs will be taxable as PGBP only, but in whose hands? In the hands of all the promoters as an AOP, deadly. She said association of person. What is association of person? Anybody coming together to do business. What is a company? Company is also association of person. But it will be legal only after incorporation. Before incorporation, it may be an illegal association, or it may be an association which has not got the legal effect as of now. But Nirmala madam doesn't care. I will bring all your promoters. I will deem you to be a AOP, and I will tax you as an AOP. Deadly. So there is no chance that Nirmala madam will let you go. Guys, is pre-incorporation contract valid? No. Pre-incorporation contracts as per Indian Contract Act is void ab initio. Because when the company is not born only, how can you enter into a contract? You would have studied this now. Agreement with minor is void ab initio. Mohiri Bibi versus Dharmodas Ghosh, case law. Similarly, agreement with a company which is not born only is void ab initio. So write down pre-incorporation contract is void ab initio as per ICA. ICA means Indian Contract Act. As per Indian Contract Act. As per Indian Contract Act, what guys? Pre-incorporation contract is void ab initio. Guys, but I have to make it legal, no, somehow. May not be for income tax purposes, but I need to make it legal for company law purposes, or what do you say, this other things for the Indian Contract Act purposes. So, though Indian Contract Act is void, there is a law called Specific Relief Act in 1963. They say pre-incorporation contracts are valid if 3 conditions are followed. First one, it should be bona fide, means good faith. Second, it should be done for the purposes of incorporation. And third one, after incorporation, shareholders should approve. Guys, for example, company is incorporated on 1/4/24. Should I have a registered office before that only? Yes. Because when I am starting the company, I should tell the registrar of companies where my registered office is. So if I pay rental, if I have a rental agreement with the owner, is it valid? Yes. Is it for the purpose of incorporation? Yes. Is it bona fide? Yes. After incorporation, shareholders should approve the deal. So it is not given in Contract Act or company law. It is given in a separate law called what? Specific Relief Act. If you remember in foundation, agreement with minor is void ab initio. But if you have supplied minor necessaries of life, then you can recover. Where that is given, it's actually given under Specific Relief Act, actually read with the Indian contract, necessaries of life. Anyway, if you have forgotten, leave it, no problem. Yes, so there is a law called Specific Relief Act, which says agreement with, pre-incorporation contract will be valid if it is bona fide, means good faith, for the purpose of incorporation. And after incorporation, shareholders should approve. Shareholders should do what? Approve. Right? Now guys, anyway, for tax purposes, Nirmala madam is very clear. 1 crore minus 30 lakhs in my example. 1 crore minus 40 lakhs. 60 lakhs is taxable under which head? PGBP. But who will be the assessee? Association of persons. Write down taxable in the hands of the promoters but as a AOP. No mercy. Taxable in the hands of the promoters but as a association of persons. All revenue receipts will be always taxable unless exempt. Simple rule. All revenue receipts will be taxable unless exempt. So all revenue receipts are what? 100% taxable unless exempt. That is section 29. Section 29 only talks about computation of income. 28 is charging section, 29 is computation of income. Write down section 30. Admissible deduction. 30 is expenses relating to building. Section 30, expenses relating to building. Expenses relating to building. And there are star points. It is debited to P&L account. It is expenses relating to building. Section 30. Section by section we are going. 28 we did, 29, now 30. Expenses relating to building. First one, debited to tax P&L account. Section 30, debited to tax P&L account. What is debited? Expense relating to building used for business or profession. So only pointers I am writing. One, expenses for building. Second one, used in business or profession. Used where? Business or profession. And guys, what all are covered here? Rent, rate or taxes, insurance, repairs. Rent, rate or taxes, insurance, repairs. Rent, rates or taxes, insurance, repairs. Rent, rates or taxes, insurance, repairs. Guys, repairs. Capital repairs are not allowed, revenue repairs are only allowed. Capital repairs are not allowed, revenue repairs are only allowed. Always remember capital. What is capital repair? Engine is not working.
Motor is not working, I'm changing on a building, no, let's say building lift is not working, I'm changing the entire lift. Revenue repair or capital repair? Capital. Engine, for the entire building, UPS is their main power transformer, that is only not working, I have to change the entire transformer. Revenue or capital? Capital. Plumbing, some work is going on, some leakage is there, I'm fixing the pipe. Capital or revenue? That is revenue. Right? So revenue repairs are allowed. Capital repairs should not be debited. Capital repair should be added to the asset. If building value is 2 crore, I am adding one more transformer worth 20 lakhs. 2.2 crore will be asset. But if I am some plumbing issue, electrician issue, then that 2.2 lakh will be 2.2 crore will remain like as it is. Some electrician expenses will be debited to my P&L account. That's what it means. Right? So repair, capital repair not covered, revenue repair covered. Now guys, if you see the chart here in the notes, page number 7.6. Expenses relating to business here. This section covers rent, rates and taxes, insurance, revenue repair, capital repair. Owner is paying rent to himself, deductible or not? No, it's weird. How can he pay rent to yourself? That even if he pays or does something like that, definitely not debited to P&L account. It is a stupid thing. You cannot pay rent to yourself. On the other hand, tenant is paying rent, allowed or not? Yes, tenant paying rent is allowed. Which means for the tenant, if he is paying rent in his business, can he debit it to P&L account? Yes, he can. He can debit it to P&L account. Rates and taxes, municipal taxes, municipal rates, all those things. Owner also if he pays deductible, tenant also if he pays deductible. Means for the tenant in his books, will he debit it to his P&L account? Yes. If owner is paying in the owner's books, will he debit to his P&L account? Yes. Insurance also same, revenue repair also same. Capital repairs as discussed, it is not deductible. It is not deductible. Now guys, there is one people, you know what they used to do? Just cheating. They used to say rents and rates and taxes debit to rates and taxes payable. And then P&L account to rates and taxes. And they never used to pay the tax. But in the P&L account, what? I should take it or not take it in the debit to my P&L account? Used to take it. Very smart fellows. They all used to put a payable entry. Insurance amount, insurance expenses debit 1 crore to insurance payable. That's all. I never pay it. But in my tax P&L account, take deduction of 1 crore and reduce the tax. Cheating. Revenue repairs you have to pay. Nothing can be done. I'm talking about rents, rates, taxes, insurance, etc. Municipal tax, local tax. They were doing all these things for especially taxes. Municipal tax, local tax, any fees, cess, etc. They were actually doing this where they were not paying only. Nirmala madam inserted one section called 43B, which we'll see later, which says if you show it as payable, I will not allow it as an expense for you. You have to actually pay to the government and pay to the concerned authority. If you put a payable entry, I am not going to allow at all. You need to actually remit it to the government. So she said, I'll give you time though, don't worry. So if my finance, if my time from 1st April 24 to 31st March 25, everywhere you have put municipal tax payable like that. She is saying no problem. You have time to file your return of income. For individuals it is 31st July, for companies it is 31st October. You have time to file what? Your return of income. This return of income filing should happen before as per 139(1). When should you file your return of income? 31st July or 31st October. 31st July for individual, 31st October for companies. Nirmala madam is telling, if you put any payable entry, municipal tax payable, municipal tax expense to payable, and you want to claim this expense without actually paying to the government, cheating, I will give you time till you file the return. Before filing the return, you should actually pay to the government. If you pay, then I'll allow you to claim it. If you don't pay, it will be disallowed. Disallowed means what? You cannot debit it to the P&L account. If you have debited, it will be added back. If you have debited, profit will decrease or increase? Decrease. I'll add back the expense. If I add back the expense, what happens to the profit? Increases. So this she brought about in a section called 43B, which we'll see later. These are certain expenses which are allowed not on payable basis, but on paid basis. So now tell me, in this rates and taxes, for example, this will be allowed on payable or paid basis only? Paid basis. When should you pay? Before the due date of filing the return of income. Before due date of filing the return of income. So write down the next point, guys. Next point. Taxes should be paid. Taxes should be paid. Taxes should be paid before the due date of filing the return. Taxes should be paid before the due date of filing the return. Under section 139(1). Taxes should be paid before the due date of filing the return of income under section 139(1). Within bracket 31st July or 31st October as the case may be. 31st July or 31st October as the case may be. Sorry? Which one? 139(1). I've written there, no? 139(1). 31st July or 31st October as the case may be. If it is not paid within the due date, if it is not paid within the due date, the expense will be disallowed. The expense will be disallowed. The expense will be disallowed. Guys, what do you mean by disallowed? Added back. Within bracket you would say add back. That expense will be added back. This is under which section, guys? As per 43 capital B. As per 43 capital B. So in this, municipal tax has to actually be paid to the government. That's what I wanted to tell. Now, last part in this particular thing, very interesting. Now, this is a rental property or owned property? Rental. This full floor is there. Now, let us say we want to do one more classroom. We'll go to the owner and say, sir, give me one more room. He said, nothing is there, sir. All floors are occupied. But he will give a hint. I have permission to build one more floor, but he will tell. I'll say, okay, sir, can you build for me? He'll say, no, no money. You only build if you want. Imagine, who's the owner? Some other fellow. Who is building? Tenant. Tenant wants to construct one more floor. Tell me, according to you, is it revenue expenditure or capital expenditure? Building one floor? Capital. Tenant will think now, if I pay this capital expenditure, I will not get any benefit because I am not the owner only. That fellow will get the benefit. I am not getting any benefit. I am simply spending money. I'll calculate 30 lakhs I have to spend now to build one more room. So let's say I'll build one room 30 lakhs. Then I'll go to Nirmala madam and say, madam, I am not the owner, but I've actually spent 30 lakhs on a capital expenditure. Can you please give me depreciation? She'll say, how is it possible? You are not the owner. For depreciation, most important condition is what? You should be the owner. You're not the owner, how can I give you depreciation? You say, madam, but see, the owner is not ready to pay, and I really need this business, and everything is in one floor only. I don't want to shift the building. I've already spent 40 lakhs for this floor. I've built 20 lakhs, one more floor, 30 lakhs, one more floor. Please give me some benefit. You are not allowing me to debit the entire amount to P&L account. Why? Because it is it capital expenditure or revenue expenditure? Capital. Why will capital expenditure be allowed to be debited to P&L account? So instead of that, at least give me some depreciation, madam. So if you see, tenant, capital repair, not deductible, 100% correct. It's not deductible under section 30, you have only told. But can you please allow me depreciation? It is something which goes against the very principle of depreciation. In depreciation, you should be the owner. But because multiple requests were made to Nirmala madam, she agreed, imagine. She made an exception to depreciation. What is the exception? You need not be an owner in one case. Which case? If you are a tenant, you have invested in some capital repairs or capital creating a new building, even though you are not the owner, Nirmala madam says, this building is deemed to be the building owned by you. Imagine, deadly. Deemed, assumed. So will you get depreciation? Yes. A brand new concept called deemed building. Right? Deemed building. What is a deemed building? If a tenant has spent money on capital repairs or creating a capital asset, even though he is not the owner, will he get depreciation? Yes. See the last point here, guys, you'll understand. Important. Concept of deemed building. Read please. Capital repairs by tenant. Capital repairs by tenant, read. Yes. Yes. No. Business or profession only. Where the C carries on business or profession in a building not owned by him, any capital expenditure incurred by the C for the purpose of business or profession. Any capital repair. Or it could be like a renovation, extension, whatever. There is one old floor there. Everything is gone. I have to actually demolish it and rebuild it. Yes, that is also allowed. Such capital expenditure will be treated as if the building is owned by the SSC, and the SC can claim depreciation on the expenditure incurred deemed building. So what happens in deemed building? Even though you are not the owner, you will be deemed to be the owner. Interesting concept. This is a big exception to, let it go, no problem. This is a big exception. So last section for that I write down, guys, section 31. This is expense related to what? Machinery, plant. That's fine, Sanjay. It's okay. Almost over. I'll tell in the book only. It's okay. Expense related to what? Machinery. Write down. This is machinery, plant and furniture. Machinery, plant or furniture. Plant and furniture. You can see the chart only in page 7.6. Machinery, plant and furniture. So here you can see, guys. You can check there in the notes. This is, mind you, not building. This is machinery, plant and furniture used for business or profession. Owner, can he pay rent for machinery, plant, furniture? If he pays also, not deductible. Owner is paying insurance. Is it deductible? Yes. Owner is paying revenue repairs. Is it deductible? Yes. Owner is paying capital repairs. That is not deductible. Means what? Owner, the machinery is not working because engine only has gone. Main motor only is gone. I am replacing the entire motor. It's like as good as a new machine coming into force. Is it a revenue repair or capital repair? Capital repair. On the other hand, tenant. Guys, tenant can also take the machinery on rent. I am taking the building also on rent, machinery also on rent. I can take, no problem. So, if I am paying rent, is it deductible? Yes. I am paying insurance, deductible? Yes. Revenue repair? Yes. Capital repair? Not deductible. Unlike deemed building, is there any concept called deemed machinery? No. Correct? No deemed machinery, deemed furniture, deemed plant. No, it's only deemed building. So it will be called as a current repair or revenue repair if it is just going to preserve and maintain an asset. But if it is going to increase the capacity, then it is called capital repair. This in accounts you would have learned little bit, right? Same concept. So if there is a machinery, it is producing 1000 units per hour. If I do something to it whereby it produces 1500 units per hour, then it's capital expenditure. But if oil is not there, oil replacement, then belt replacement, then and all, it's not, it's called revenue repairs. That's called revenue repairs. So that is regarding replacement. So today we have finished 28, 29, 30, 31. Depreciation I cannot start now, minimum 1 hour it will take. Most important concept of depreciation. That's why we'll stop the class here, no problem. I don't want to just do it for the heck of doing. Depreciation, once we start, tomorrow we have to wind up with depreciation. Huge concept. Depreciation will not get over in one day. It is a huge concept. But what I am saying is, whenever we start that concept of depreciation, it will go on forever. So today's your homework is to study everything till this 7.7 till depreciation. Next class will start off with depreciation. Very, very interesting concept. What you studied depreciation in books is different from income tax. So PGBP also is a very easy chapter. Everything is easy because you are breaking it down and learning, right? So no problem. And yes guys, any problem, anything, you can always, message me. We are all here to solve. So next class we'll start off with what? Depreciation. Yes guys, happy morning. What is that? Happy morning. Already dead. We haven't even started inter. Happy morning. Yes, how are you doing? Still voice is dead only. Before doing CA only, if you are dead, what you will do in CA final? Yes, CA final is the real deal. Anyway, so guys, in the previous session, we were discussing, let's revise quickly. Yesterday, whatever we did PGBP basics, and in that we were discussing so many things. Charging section 28, we saw what is income. Income is profit, gains or losses. And we saw that in section number 28. Where were you yesterday? Yesterday you were not there, no? You were there. Not feeling well. Now you are fine. Please don't miss classes. Try to come every day. So, yeah, in that three things: business, profession and vocation. And business and profession both are mutually exclusive, which means if one applies, the other one will not apply. And vocation is something which is like a calling or a passion. Business has a wide meaning, whereas profession will include your skill, intellectual skill, labor, etc. Now what is taxable, what is not taxable, we have to see. Taxable, capital receipt, not taxable. Revenue receipt is taxable. So revenue receipt can be in cash or in kind, both. Reimbursement of expenses will not taxable, very good. And then voluntary payment, cash or kind, definitely taxable, because there should be something called as a nexus. Nexus means what? Connection, business connection. Even if it's an isolated venture, once in a way if you do also, that also is taxable. Then employee, car, driver, gas connection, quarters, 2 servants, whatever you do, PGBP will not come, perquisite will come.
income from salary. But if you are taking money as a consultant, then it will be PGBP. Then there are two things: contract of service, contract for service. Contract of service is employment, contract for service is PGBP. Builder takes deposit which is refundable, eventually it becomes the income, but if it's non-refundable and it's forfeited, it is a capital receipt, not taxable. Key managerial personnel: MD, whole-time director, manager, CFO, CEO, CS. Company takes insurance, that's called as key man insurance, they pay premium, and the premium paid will be debited to P&L account, allowed, whereas the surrender value, whatever they receive in the end when there is no fraud, etc., that if you are getting as an employee, it's salary, consultant, PGBP, honorary chairman or family and all, if they receive, it will be taxable still under IFOS. Simple. If there is a fraud, company receives the claim amount, then also it is taxable under 28(6). Then bonus, remuneration, interest, commission, salary, all this received by the partner, the partnership firm, PGBP under section 28. Non-compete fee means what? I am asking you not to carry on similar business here. Let's not compete. For that I'll pay you money. For that also it is legal. It's a proper legal agreement. Yes, PGBP. It comes under PGBP. On the other hand, if there is any, even if I tell you not to share the know-how, and first thing is not to compete. Second one is they were cheating by doing, do not compete with me. That is one. Second one is do not share the know-how. For not sharing know-how also, there was an amendment. So now not sharing know-how also will come under this. Compensation, whether it is termination or modification of business contract, there also it is, what do you say, PGBP, definitely. Then any sort of refund by the government called duty drawback, cash compensatory support, DPB, DFRC, subsidy or refund, etc., which is credited to P&L account, that is also taxable. Income derived by the club for specific service also is taxable. All 35 AD, I told you in 35 AD, you will debit it to the P&L account. What? The entire capital expense will be debited. Ideally speaking, any asset if you buy, it will become an asset and depreciation, but under 35 AD specified business, full amount will be allowed to be debited. Once you debit the full amount, in the future if you get to sell that asset, that entire amount will be credited to P&L account and that will be taxable. Since you have taken the entire loss, entire expense, you have to claim the income also. You have to claim it as an income, right? Yes. Then, if I convert stock in trade to capital asset, then actually ideally I could have taken the cost only as the asset, but they say the FMV should be taken as the income. So here FMV was 24 crore, cost was 12 crore. So what is the actual income? 24 minus 12. I will to pay tax on 12. But in my asset side, rather than taking 12 crore, now I will take 24 crore in the asset side and take depreciation on 24 crore. The logic is simple. I will pay tax on 12 crore, and that extra 12 crore for which I have paid tax, it will be allowed as depreciation in the next few years. 12 is the cost, 12 is again profit. So 12 I have already paid tax on 12. Remaining overall 24 I will claim depreciation. So slowly it will be reducing. So I will pay tax now, but the benefit I will be getting over the next years. Everything has a logic, nothing to mug up, right? And then we saw the concept of Airbnb. So it used to be business, but now converted to house property. So if you have any extra house, any room for which you have let out like that, instead of income from house property, you are claiming a lot of business expenses. Now they say nothing doing, it will be deemed to be what? Income from house property. That's all. And then we saw section 29, which is computation of income. Pre-incorporation contracts are not recognized in Indian Contract Act, but they are recognized in the Specific Relief Act as such. But for income tax purposes, you will become an SSC only after incorporation. So any money that you have received before incorporation will still be taxable, not as a company, but as a AOP. Promoters will come together and I will tax them specifically as an AOP that year and close it. That's what it is. Then section 30 we spoke about building. Building, what about the building? Rent, rate, taxes, insurance, repairs of the building. Anything debited to P&L account, revenue repairs, it is debited, capital repairs not to be taken. So taxes paid before the due date of return of income, that taxes should be paid before the due date of return of income, that is my 43B. Under 43B, I should make the payment before the return of income. And what is the return of income? 31st July or 31st October as the case may be. Because people were only putting some payable entries and claiming expense. The government said no payable entries, you actually should pay. Right? And then we saw 31. 31 spoke about machinery, plant and furniture. So it was rent, insurance, everything. Rates and taxes are not covered, revenue repair. Apart from that, we also saw a concept called deemed building. So if you are a tenant but you construct a building, then even though you are not the owner, you can claim depreciation. A separate section has been made under section 32, concept of deemed building. Is there something called deemed machinery? No, it's only deemed building. So all this we had studied in the previous session. So today, very important concept, write down guys, section 32, depreciation. Section 32, depreciation. Section 32, depreciation. So guys, section 32. Depreciation. Very important because we need to understand. Yeah, you can actually write along with me, and then when I ask you to stop in one place, then you can stop, listen to me, and then you can copy down. Depreciation guys. As per the Companies Act 1956, old Companies Act, they had given a rate of depreciation. Means you should have charged 5%, 6%, 10%, 15%, like that. Rate used to be there in the 1956 Companies Act. But in the 2013 Companies Act, until now, whatever we are doing, tell me, is it the rate or useful life? Normal Companies Act now, is it the rate or useful life? Useful life, yes. It is based on the useful life. Correct? Now it is based on what? It is based on something called useful life. So I repeat, 1956 it was based on a rate, whereas in 2013 it is based on useful life. It is based on useful life. Means they will give you 10 years, 5 years, 7 years, 15 years, like that. So if an asset will be divided by the useful life, and then depreciation will be calculated, very simple. But in Income Tax Act guys, till assessment year 87, 88, none of us were born. Assessment year 87, 88, your parents probably wouldn't have been married also. Right? So assessment year 87, 88, it was called single asset method. It was single asset method. What is the single asset method? We will see now. What do you mean by single asset method? We will see. So I am trying to show you that Companies Act depreciation is different, income tax depreciation is different. So if they show you normal books of accounts as per Companies Act, will it match with Income Tax Act? No. They would have already debited depreciation from Companies Act. But I need to debit depreciation as per Income Tax Act. So what should I actually do? I should add back the depreciation from Companies Act because it's not relevant to me. If I add back depreciation, the profit will increase. Now I should reduce it by income tax depreciation. So every problem, what we should do, take the profit as per books of accounts, Add back Companies Act depreciation, subtract income tax depreciation. That only you have to do every single problem. That's why I am showing you it's different, because in depreciation as per Companies Act is useful life. Whereas in income tax till 87, 88 it's single asset method. Now it is completely different. Sir, why are you teaching old stuff? You will know why I am teaching the old one. Right? There's a relevance to the new one. That's why. Otherwise no point doing the old one. Right? Yes. Now. Single asset method. Let's say year number 1. What is a single asset method? You have building A, you have building B, cost of building is 2 lakh, cost of building B is 2 lakh. Let's say you have building C also. Let's take easy example. Building C also how much? 2 lakh, 2 lakh, 2 lakh, 2 lakh, 3 2 lakhs are there. Now, depreciation year number 1 at what rate? 10%. Depreciation at 10% year number 1. 20,000 rupees, simple, 20,000 rupees and 20,000 rupees. Tell me one thing, what will be the written down value at end of year 1? How much, guys? 1 lakh 80, 1 lakh 80, 1 lakh 80, simple, 1 lakh 80, 1 lakh 80. In all 3 cases it will be 1 lakh 80. Everybody clear with this? Simple. All the 3 cases it will be 1 lakh 80,000 rupees. 1 lakh 80 in all the 3 cases I should take. Now, year number 2. Year number 2. Let us say building A is actually sold. I am selling building A. But I am going to take 2 scenarios, guys. Scenario number 1. It is sold at 1,44,000 rupees. Scenario 2. Sold at 1,96,000 rupees. Scenario 1 sold at 1,44,000. Scenario 2 sold at 1,96,000. 2 different scenarios. Right? Now, tell me, what will it be, guys? Very simple. Second year, asset A, asset B, asset C. Asset B, asset C, no tension. 1,80,000 will be the WDV, which you have already seen. And how much will be the depreciation? 18,000. 10%, no? 18,000. So how much will it be? 1,62,000. C also same, no change. 1,80,000. 18,000 will be the depreciation. 1,62,000 will be the WDV. Same here also. A only will change, we'll see that. B and C will be 1,80,000. 18,000 is depreciation. 1,62,000. Here also 1,80,000. 18,000 will be depreciation. 1,62,000. This and all is okay, but I need to now see A. 1,80,000 worth asset is sold for 1,44,000. Loss or profit? Loss. How much loss? How much is the loss? 36,000. Loss is 36,000. 1,80,000 worth asset is sold for 1,44,000. There is a loss of 36,000. Scenario 2.
1,80,000 asset is sold for 1,96,000. Profit or loss? Profit. How much? Yeah, 16,000 profit. This was the treatment till 1987-1988 assessment year. So every asset was treated separately, and each asset's profit or loss or depreciation was calculated separately. And in this scenario number A, scenario number 1, scenario number 2, in scenario number 1, what is the loss? 36,000. In scenario number 2, what is the profit? 16,000. Scenario number 1, loss of 36,000. This will be debited to P&L account. And this was called as terminal depreciation. This is called as terminal depreciation. This we will use in some other concept even now. As of now, this concept is not there for other assets. It's only there for few assets. We'll see that later. So that year only what they would do, guys. Now asset only is not there. So what should I do? Debit it to P&L account. Call it as terminal depreciation. This profit of 16,000, it is something which is out of the ordinary. Generally, you will not make any profit from asset, but here you are making profit by selling the asset. This 16,000 will be credited to P&L account, obviously. This 16,000 will be credited to P&L account, and this is called as balancing charge. Simply called as balancing charge. So this was what the concept was, guys. Very, very simple. This was the concept. Okay. So loss 36,000 debited to P&L account, profit 16,000 credited to P&L account. Two different scenarios I am giving. Scenario A, scenario B. Right? Scenario A, loss 36,000, profit 16,000. Debited to P&L account, credited to P&L account. Right? Debited to P&L account, credited to P&L account. Got it, guys? This one is called terminal depreciation. The other one is called balancing charge. Is this clear? Now, new method, what is it, guys? Very simple. The new method is very simple. I mean, it's different. In 1987-1988, that is from assessment year 88-89, they said, let's not do all these things. Here only, the beginning of the year, I bought these assets. No, obviously it was not there, year one. So they said, let us now merge everything. A wonderful concept called block of asset was born. Block of assets. What is block of assets? I am not going to take it separately. If building is there, all buildings I will merge. If plant and machinery is there, all plant and machinery I will merge. Completely different concept. If motor vehicle is there, all motor vehicle I will merge. I will create something called as a block. I'll merge everything. So it will be what? 2 lakh plus 2 lakh plus 2 lakh, 6 lakh, one combination, that's all. The moment I merge everything, individual asset will lose its value deadly. The moment I merge everything, individual asset will lose its value. It's just like a group. In the group, something I may add, something I may subtract, something I may delete, I can keep adding. When will you charge depreciation? In the end, the block value must be positive. 6 lakh is there. I will remove some asset for 2 lakh, it will become 4 lakh. I'll add some more asset for 3 lakh, it will become 8 lakh, 7 lakh, whatever. In the end of the year, if the block value is positive, depreciation is calculated on the full block, not on individual asset. They said, let's leave all this individual asset concept, merge everything. When you merge everything, will there be separate building A, building B, building C? No. I will call it as a block of building. In the block of building, some buildings may be sold, some buildings may be added, whatever. Got it? So this is a block. So how does the block work? Now I will, write down. You can also write, no problem. How will the block work, guys? This is the very, very important one. From 88, 89 till now. New concept, guys. What is the new concept called? Block of assets. So this is the main difference between Companies Act depreciation and Income Tax Act depreciation. Companies Act depreciation even today follows what? Individual method. Building A, when was it bought? From then depreciation. Building B, when was it bought? In income tax, I don't care when it was bought. It was bought in this year, add. Was it something deleted this year? Subtract. Are you understanding? It's a different concept. So here what they do, guys, first of all, opening WDV. And in our example, we have to see. In our example, what is the opening WDV in year number 1? Nothing was bought. No, that year only I bought 2 lakh, 2 lakh, 2 lakh. So what is the opening WDV? It will be nil. In our example, I will write here nil. And guys, they will now add something called actual cost of asset. Actual cost of asset acquired during the year. Actual cost of asset acquired during the year. Actual cost of asset acquired during the year. Tell me, guys, everything is merged. 2 lakh plus 2 lakh plus 2 lakh. How much? 6 lakh. Everybody with me understanding? Beautiful concept, 6 lakh. So it is 2 lakh plus 2 lakh plus 2 lakh. 6 lakh is added during the year. Less. Very simple. Sale. Asset destroyed. Some asset may be destroyed and I may getting nil rupees from that. Scrap value. Insurance compensation. Insurance compensation, all these things. Subtract. Subtract. Tell me, in year number 1, did I sell anything? No, that happened only in year number 2. In year number 1, did I sell anything? No. Sale value I should write. Asset destroyed. If asset is destroyed and I don't get any money, what will be the sale money that I have received after destruction? 0. If I have sold some scrap and I have got some 1000 rupees, I have to subtract that 1000 rupees from the block. If I receive some insurance compensation, that should be subtracted from the total asset. So the beauty is, the moment everything merges, no, the individual asset will lose its value. Everything will become a block concept. So tell me, what is the sale or asset destroyed? Nil. First year nothing happened, no? So that will give me my WDV before depreciation, because I have to charge depreciation again. WDV before depreciation, so that will remain to be 6 lakh rupees. Less depreciation as per Income Tax Act. Now tell me, 10%. So for the entire block, depreciation will be charged 60,000. So this will be WDV at end of the year, or I would say opening WDV for next year. Opening WDV for next year. 5,40,000 will be the opening WDV for next year. This is the concept, guys. This is year number 1, but in year number 2 something else happened. What happened? I sold. In my first example, I sold one asset for how much? 1,44,000. In the other one, I sold it for 1,96,000. So how does it work? Let's see. Till here, everybody clear? 5,40,000 is what, guys? WDV. This is a block concept. If I compare this with this, it is the same only, because there is no addition deletion. 1,80,000 plus 1,80,000 plus 1,80,000 will give me 5,40,000 anyway. It's the same, actually no change. Where will it change is the second year, because in second year, in normal asset method, single asset method, I will subtract each asset twice. Whereas here, it's different. Year number 2. Year number 2, what happens, guys? Scenario 1, scenario 2. One asset building A is sold for 1,44,000. So here building A sold for 1,44,000. Second scenario, building A sold for 1,96,000. The beauty here is no single asset. From where is it reduced? From the block itself. From the block it is reduced. What is the opening WDV, guys? Opening WDV 5,40,000. Add. Is there any actual cost? Have I added any new asset during the year? No. Less. Sale of asset. How much money I got by selling that asset? 1,44,000. Tell me, what will be my closing WDV? How much? 3,96,000. Guys, everybody with me on this? Yes or no? Last bench. Yeah, there. You are understanding? Yeah, this is different concept. Yesterday was all basics, but this is completely different, so you can easily understand. So 5,40,000 minus 1,44,000 is how much? 3,96,000 WDV at the end of the year. Okay, here you see opening WDV how much? Opening WDV 5,40,000. Add actual cost nil less sale 1,96,000. So WDV will be 3,44,000. Now you should do the analysis, guys. In the single asset method, at the end of the year, if you add all the WDVs, correct, how much will it be? In the single asset method, if you add the WDVs, how much will it be? In asset A, there is no WDV only, it's gone. So asset B and asset C, if I add, how much will it be? 3,60,000 in the single asset method. Yes or no? Here you see, here around, yeah, roughly around 3 lakh. Yeah, this you leave. Depreciation, before depreciation, I have not charged depreciation yet. No. 1,80,000 plus 1,80,000. How much will it be? 3,60,000. I have not charged depreciation yet. Here also, where have I charged depreciation? Have I charged? No. I have just made the closing WDV, and now I have to make the depreciation after this. That you leave. So ultimately, in the old method, WDV was 3,60,000. Old method. But in the new method, it is 3,96,000 in first scenario, 3,44,000 in the second scenario. You see, interestingly, the difference here, 36,000, which was the loss there. Here the difference you see, 16,000, which was the profit there. Because I am merging everything, no, adjustment is happening within the WDV itself. Correct? Because in the old method, there was a profit of 36,000 in scenario A. Sorry, loss of 36,000 in scenario A. In scenario B, what was there? Profit of 16,000. If I compare the WDV also now, obviously the difference will be the same only, no? 16,000 and 36,000. But see the analysis, guys. Because there is a very simple. I am subtracting 1,44,000. I am subtracting 1,44,000. But in this WDV, how much asset value is there? 1,80,000 is there, yes or no? 1,80,000. But from 1,80,000, that is the asset which is already present in this. From that 1,80,000, how much I am subtracting? 1,44,000. So I am subtracting less or I am subtracting more? I am subtracting less. The loss of that 36,000 is actually increasing the WDV by 36,000. Yes or no? 3,60,000 would have been the old method. New method, what is that? What is the WDV? 36,000. Because I am subtracting less here, closing WDV is more. Do you agree? Yes or no? Guys, come on, respond. Yes or no? Yes. So because I am reducing 36,000 less here, because actually in this 1,80,000 is actually added. But I am subtracting less, 1,44,000. How much less I am subtracting? 36,000. That 36,000 is actually sitting here. So will you agree that a loss of 36,000 has increased my closing WDV by 36,000? Agreed or not? In the old method, asset A is not there only. Asset B, asset C, if I add, it will become 1,80,000, 3,60,000. My question to you is, if I subtract less in the sale of asset, what will be the WDV? More. By how much? 36,000. So will you agree if I tell loss of 36,000 has increased the WDV by 36,000 and compared to the old method? Correct? And here, same thing. 1,80,000 worth of asset is here, but I am subtracting how much? 1,96,000. Profit of 16,000 I am subtracting extra. Do you agree if I subtract more here, WDV will be less or more? Less. So do you agree that the profit of 16,000 has reduced the WDV also by 16,000. Profit of 16,000 has reduced the WDV by 16,000. Everybody with me on this? Yes or no, guys? Loss of 36,000 has increased the WDV. Profit of 16,000 has decreased the WDV. Guys, what's the difference between the two methods? In the old method, 36,000 loss was charged in that year only. What did you do? Debit to P&L account. Yes or no? In the old method, 36,000 loss was charged that year only. Yes or no? Yes. In the new method, what is happening? The loss of 36,000 has increased the WDV by 36,000. And you are claiming that depreciation over many years. That's all. Are you understanding? Loss of 36,000 in the old method, immediate effect was debit to P&L account. Immediate effect was what? Debit to P&L account. Here, loss of 36,000 has increased the WDV by 36,000. And is it spread across the next few years? Yes. Higher WDV means higher depreciation or lower depreciation? Higher depreciation. That higher depreciation amount by how much? 36,000. That 36,000 will keep on getting depreciated over the next few years. So what's the difference between old method and new method? If there is a loss in the old method, immediately that 36,000 is debited to P&L account. But under the block concept, because I am subtracting less, WDV will become more, and that extra WDV will keep on getting depreciated over the next few years. It is not a single attack like that. 36,000 debit to P&L account. No, it is spread across many years. Did you understand? That's the beauty. So that's the main difference between the block concept and single asset method. Other case you analyze. 16,000 profit in the old method will be directly credited to P&L account. In which year? The year in which you make a profit. Here, since I am subtracting more, the WDV will be less. So instead of crediting the income by 16,000 in 1 year, I am claiming less depreciation over the next few years. Why? Because my WDV has reduced. Since my WDV has reduced by 16,000, I am claiming less depreciation over the next few years. Did you understand this? Yes or no, all of you? So what is the beauty of this single asset method and block method? In block method, what will happen? Everything will be played around in the WDV, and everything will be played around in the depreciation over the next few years. But in single asset method, that asset sold, the profit or loss will be charged that year only. The profit or loss will be charged that year. So in income tax law, if there is a loss, I am subtracting less. If I am subtracting less, WDV will be more. If the WDV is more, higher depreciation will be claimed over the next few years. So that 36,000 will be spread across 3-4 years. Reverse case, if I make a profit, how will I make a profit? 1,80,000 asset is now sold at 1,96,000. Higher amount is subtracted. When higher amount is subtracted, WDV will become less, which means rather than crediting 16,000 to my P&L account, I will debit 16,000 less in my P&L account over the next few years in the form of depreciation. Everyone understood the logic, guys? Yes or no? Coolly take 2 minutes and read that full example now. Now we will again go through. Please go through. Everyone with me understood? Last bench, girls, yes, here. Next, first, second bench, first bench, here. Everybody, you understood? Yes. So, please go through again, guys. See the effect, most important. Understand the effect of depreciation. It is called as block method. Now, in block, no, you will forget about everything in life. Everything you add. In the block, if one asset is sold, I don't care which asset is sold. Something is sold. For a profit or loss, I don't care. Full amount will be subtracted. Now in this example, I'll just change this. See, one asset was sold for 6 lakh, assume. One asset was sold for 6 lakh. What is the opening WDV? 5 lakh 40. What is the sale of asset? 6 lakh. Is the WDV there? Is there a closing WDV? No. So block will not exist. I told you, block will exist only, depreciation will happen only if the block should exist. There should be some value. Right? That's the beautiful concept of block. So please take 2 minutes, go through the example once more and let me know if you understood or not. Go through, guys. So this is the concept of block. Everything gets merged, guys. It's very interesting. Like everything will get merged into one, and then you will have to see what will be done, what will not be done, all those things. So guys, basically it is the block concept which is very interesting. Depreciation has been Income Tax Act and all those things. Yes. So now write down conditions for depreciation. I'll dictate conditions for depreciation. So what is it? Let's see one by one. Conditions. This is conditions for depreciation. First one. Guys, asset must be used for personal use or for business or profession? Business or profession or personal use? Business or profession, obviously. If you are using some car for personal use, that is not coming under block. Block is only for PGBP, business or profession. First one, asset must be used for business or profession. Asset must be used for business or profession. Second one, SSE must be the owner. SSE must be the owner. Obviously, guys, if you are not the owner, how can you take claim depreciation? When I say owner, should you be the registered owner or the beneficial owner? What I'm asking is, the benefit should come to you, or it should just be like, for example, if you buy an asset and then you give it to me for using, who has the benefits of the ownership? Me. But am I actually the real, who has the, let's say it's registered in my name. Who is the registered owner? Me. But ultimate benefits of that asset belong to you because you have paid the money. Let's say you have bought a house and you have given it to me for using. That's all. So who is the owner on paper? Maybe me. But all the benefits of the house eventually will go to whom? You. I may be using temporarily, but ultimate benefits, if you sell it, you will only take the money, no? So who is the beneficial owner? You. A person who actually buys the asset will always be called as a beneficial owner. So you can write down, when I say SSE must be owner, within bracket, beneficial owner. Beneficial owner. Exception. Most important, actually, you already know. Even though you are not an owner, you can claim depreciation. Where? Deemed building. Perfect. Exception, deemed building. That is the only exception, yes or no? Are you the owner in deemed building? No, but you can still claim depreciation. Exception, deemed building. Guys, one more question. Let's say I have owned the car. I have bought 5 cars, right? And I have now given it to, what's your name? You only. Rohan. Rohan only, no? Yeah. So now I have given my car to Rohan. Rohan is operating it like a taxi service. All 5 cars, I am the owner, but I have given it to Rohan. Rohan says, sir, I will only register as per Motor Vehicles Act. I said, okay, you go ahead and register as per the Motor Vehicle. Who has given the money? Me. Who has registered the vehicles? Rohan. So all the 5 cars are registered in Rohan's name. The question here is, Rohan can claim depreciation or me? This went to court in so many cases. Interesting question. Now 5 cars I have. Let's say each car is 10 lakhs, it's 50 lakhs I have only paid, and all the cars I have given it to Rohan. He is using it. But as per the Motor Vehicles Act in the RC book, he said, sir, it's better if I am only using it. Now tomorrow if any kirik happens, if one accident happens, if you are the owner, you have to go to court. Instead of that, sir, I'll do one thing, I'll only register it in my name. I said, okay, no problem. We have an agreement anyway. Now, the question here is, he is the registered owner as per the Motor Vehicles Act. Because since he is operating as a taxi, I did not want to take the risk, because as you know, in Motor Vehicles Act, if you are just using the car but you don't own the car, if you go and hit somewhere, who will be going to court? Main owner. It will not, nothing will happen to you. So he'll tell, sir, I'll only take the responsibility. I don't want you to come to this thing and all, but you please pay that money for me. I don't have money. Okay, no problem. Now the question is, depreciation. I am also doing some business. He is also doing this business. Depreciation, who will claim? This issue went to court. Again, registration as per Motor Vehicles Act, does it determine ownership? That was the question before the court. Just because you are registered under the Motor Vehicles Act, will it make you an owner? What do you think? That's why the concept of beneficial owner came into force. Ultimate benefits of that vehicle means basically whoever has paid money. Ultimate benefit. If I want to sell the car, where will the money go to? Who will it come to? Me or Rohan? Me. So who can claim, guys? Depreciation, Rohan or me? Me. Understood? This is not my decision, or it is not there in Income Tax Act. It is a court decision. So many courts have given the same decision, which means that is the correct decision. Understood? So write down the next part here. Give you example. See, registered. Is it a registered owner or beneficial owner? What should I take? There are 4 cars, A, B, C, D. Mr. Nitya is the owner, which means he has given the money. Mr. Ananda is registered owner as per Motor Vehicles Act. Who is the beneficial owner? Mr. Nitya, because he has paid the money. Right? So, who will claim depreciation, guys? Mr. Nitya will claim the depreciation. Beneficial owner will always claim depreciation. Lot of decided case laws. Lot of decided case laws. Right? Yes. Understood, guys? One more doubt I will ask you. I am the owner of the vehicle. Different concept here. I paid for the money, no, I paid for the car, no problem. Now I've leased it to Rohan. Different concept. Lease. I am the owner.
but I've leased it to, let's not take this thing, what do you say, car. Let us say building. I have some 3-4 buildings. I've leased it to Rohan. Correct? 10 years, 15 years lease. I've leased it to him. He is using it. Who will claim depreciation? I am the lessor. He is the lessee. Deemed owner. Deemed owner is where the tenant has built the house. Rohan is the tenant. Rohan is not the tenant, is a lessee. Tenant means what? Every year he'll pay, every month he'll pay rent. In lease, what happens, guys? What is the difference between lease and rent? In lease, I am giving Rohan the house, all 5 homes for 10 years. He will pay me one bulk amount. And that bulk amount I have to return after 10 years. What is my income then? Interest. So he'll, for that 10 homes, for that 5 homes, he'll give me some bulk amount of 1 crore. I have to return that 1 crore in 10 years. So in that 10 years, if I neatly invest that 1 crore, I will get good interest every year. Maybe 10 lakh, 12 lakh, that only will be my income. So in this question, I have leased my 5 buildings to Rohan for 1 crore rupees. Deemed owner was a scenario where Rohan only was the tenant. He built an extra house. This is not deemed owner. Which one? Correct. But that is house property. That is a residential accommodation. Here he is doing business. Lessor or lessee? This also went to court actually. It's a valid question. Will create confusion. Who will claim? He is using it for business and he's taken it for 10-15 years. He should be the owner, you will tell. But I will say, boss, I am the actual owner. I have paid money for the building. It's in my name. I should claim. Went to court. So court gave one final thing in Income Tax Act. Always and always, whatever it may appear to you, income tax, the court said, I don't care. It may appear to be one other person should get. No. Who should get always? Always and always, lessor only will get the depreciation. I am the lessor. Lessor will be the owner actually. Owner or lessor will get the depreciation, not the lessee. Even if you are a normal tenant-owner relationship also, tenant will not get depreciation unless it is deemed building. Correct? But here also, lessor and lessee, unless he constructs one more building, then he can claim deemed building. But if I have given my 5 buildings to him, who should get depreciation? Me. So write down the next point, guys. In Income Tax Act, the lessor will always get the benefit of depreciation and not the lessee. Lessee and all don't write. Lessee. Lessee is, have you had lessee? Yes, Punjabi lessee. Right, don't write lessee and all. It's lessee. L-E-S-S-E-E. Lessor, L-E-S-S-O-O-R. In Income Tax Act, the lessor will always get the benefit of depreciation and not the lessee. One second, we'll finish it off. Why? Because lessor is the owner. Lessor is the owner. Lessor is the owner. Yeah, now tell me. In the deemed building case? Only one floor. Because no, not the entire building. If he is constructing only one floor, that one floor will be deemed to be the building. What is a building? Building is anything with 4 walls and a roof. That's it. So in Income Tax Act, you would have seen in this when buildings is getting constructed, no, they will have some temporary buildings, no, with asbestos sheet for the workers to sleep. Is that also building as per Income Tax Act? Yes. Can you claim depreciation on that also? Yes. That's the beauty. So building is not defined as such, but if you go to Real Estate Regulation Act, anything with 4 walls and a roof on top, they are not even telling brick walls.
Asbestos sheet also is called building. That's why I told you in income from house property, normal land if I rent, is it income from house property or not? No. But if I, construct one asbestos small building on 4 walls, this much size, and then put one watchman there, will it become income from house property? Yes, that will become land upper tenant there too. That's the beauty. All this tax planning you can do, right? So yes. For these things only people will come to you guys. They'll not come to you for tell me journal entry for this, that and all. Everything is accounted, everything is computerized now. Everything is, you don't have to do anything. But your knowledge is your accounting standards. How to apply, how to measure, that is important. Then tax planning. Then litigation. Fighting, litigation. Because the court will send you, the income tax office or the GST office will send some notice. That client will not know what to do, they will come to you. So traditional practice of this stupid filing and all that is started now from middle today, right? Yes. So traditional practice of what? This filing return, all that is gone. Filing return in cleartax.com, you can easily file taxes. And filing taxes has become very simplified now. What is the real value of a chartered accountant? The knowledge part. Knowledge of accounting standards, knowledge of income tax law. So what we are doing now is building the foundation. So actually your CA foundation is not CA foundation. CA Inter is the foundation actually. Because this will lay the CA foundation on time pass course it is. What is there in CA foundation? I'm not degrading, I'm sorry, but what is there? You think about it now. CA foundation. Time pass you did and you came here. This is the real deal. This is the real deal actually. What is there? Some stupid economics, that law, Indian Contract Act. But all those are important just to know the basics. But the real foundation for your future is this, whatever we are doing now. Right? That's why I keep telling, please do not miss classes. Please attend sincerely. And 100%, and no spoon feeding. I already told you. For everything we will not make you right. I will dictate many times. I will show you the screen like this many times. You have to adapt. In BCom you would have done it a different way. It slowly will adapt. Don't. I think now you are already adjusted to my teaching. Everybody will be like this only, guys, because it's a different ball game. CA is completely different. But I'm sure you will be able to manage. So that, and actually in my opinion, CA Inter only is little tricky for you. Why? Because in foundation you would be playing around and you would have come here. In BCom, if you have done direct entry scheme, though, in BCom you also know, I also know you cleared BCom. Correct? So here it is different. So for that you need to adjust little. And now institute has made 3 attempts for everything. CA Inter also 3 attempts, CA Final also 3 attempts, means more opportunity for you to clear. So all these things are there. So you need to, it's easy. You just need to work hard. And once you become a CA, all this filing and all this traditional practice is gone. It's all about excellent areas like litigation, then, auditing with respect to this, accounting standards, Ind AS basically. And of course, very, very different areas called Real Estate Regulation Act, Information Technology Controls, and insolvency and bankruptcy. All these are the areas, not traditional practice. So don't even think of traditional practice. The future will be only consulting. All these small firms and all will close down and sleep now, you see, in the next few years. Already it's shutting down. So the real deal is you should always upgrade yourself. We are also constantly upgrading. We are studying so many new things now. We cannot just be idle. CA over, done, gone. CAs are outdated now. You need to constantly keep upgrading. So that's why you are at an advantage, because you know the real thing what's happening. So don't worry. But foundation is most important. Foundation you build, other things will follow, guys. Very simple. Next. Next, write down, guys, what about hire purchase? In hire purchase, depreciation will be for the owner or will be for the hire purchaser. In hire purchase, what happens is I will give you an asset, you will use it,
at the end of the period you may own the asset, you may buy the asset. Last installment, correct? You would have mucked it up, no, in law, correct? 100%. In law, or where was it? Sale of goods, correct. Fine, no problem. So that one, correct, you're 100% right. Last installment, you will purchase it, 100% you're correct. My question is, you may purchase, that's your choice, you may purchase. Now, if I am a hire vendor, person who is the owner is called as hire vendor, you are called hire purchaser. Who will get depreciation? Ideally, hire vendor should get, but here there is an exception. This is the only exception where, apart from deemed building, here also hire purchaser will get depreciation. So write down, in hire purchase there is an exception. In hire purchase there is an exception. In hire purchase there is an exception. So first exception is what? Deemed building. Second exception is this. So the hire purchaser, a hire purchaser, who's the hire purchaser? Within bracket, the person who takes the asset on hire. The person who takes the asset on hire. The person who takes the asset on hire. What? Will be getting the benefit of depreciation. Will be getting the benefit of depreciation. Will be getting the benefit of depreciation. Will be getting the benefit of depreciation as he is deemed to be. As he is deemed to be the beneficial owner. Imagine. He is deemed to be the beneficial. He is actually not the beneficial owner, but the law says deemed to be beneficial owner. Deemed to be beneficial owner. So guys, depreciation will be given to you from the beginning or payment of last installment? Yes, deemed, no. So it is from the beginning. Write down, depreciation is available from the beginning itself. Depreciation is available from the beginning itself. This is an exception actually. Depreciation is available from the beginning itself. Depreciation is available from the beginning itself, even though the ownership is transferred on payment of the last installment. Even though ownership is transferred on the payment of the last installment. Even though ownership is transferred on the payment of the last installment. Now guys, next point. Tell me, in Companies Act, the asset will be depreciated on ready to use or put to use? Companies Act. For example, I have bought an AC, I have not installed it. Depreciation will be claimed or not? Used in the business, or you won't claim depreciation for effluxion of time. Efflux of time means I bought the asset already. So what do you think? Guys, in Companies Act, it is always based on ready to use. It is not put to use. Means what? If I buy an asset and it's still lying there, now for this camera I will buy. I'm not using it. Have I bought it? Yes. There is something called effluxion of time. Time is going on. Depreciation should be from the day you actually bought it. The day it comes into the factory or to your business, from that day you can claim depreciation. But in Income Tax Act, it is different. In Income Tax Act, it is put to use basis. Income Tax Act, it is put to use. So write down the next point. In Income Tax Act, depreciation is claimed when the asset is put to use. And the asset is put to use. Unlike in accounts where depreciation is based on what? Ready to use. Depreciation is based on ready to use, or basically available for use. Unlike in accounts where it is based on ready to use / available for use. So ready to use, available for use, that is different, whereas here it is put to use. Very clearly given, put to use. Now my next question is, when I say put to use, is it active use or passive use? Active use means what? The camera is there, I am now using it for the classes. Active use. So obviously guys, when I say put to use, it will be active use. But then many questions they started to ask. Example number 1, they said, sir, we are in this industry, classes only for example, you have a UPS. Classes are most important. Forget about class, think about film making. Film making, you cannot miss out on half a day's work also. Everyone would have come from different places. So you would have seen this, to ensure that the power is there and extra power is given, you would have seen these huge lorries which give power supply. Have you seen those big lorries? They are in the business of giving power supply. These film sets will have one lorry and they'll also have an extra lorry as a backup. What if this lorry, the current goes? I need one more current backup. And it's large factories, I cannot stop the production. So if the power goes, there will be a UPS and there will also be a standby UPS. What will be the standby UPS doing? To ensure that if this main UPS fails, there will be a standby UPS. For example, for our classes, though we have not installed it, if the internet goes, it is better to have one more connection. One from Jio or one from that ACT and one more from Airtel. Better to have two connections. If one goes, other will come. So backup. Now that backup second one, am I using or not? No. So I went to court. Will I claim depreciation? One more better example. If we install fire extinguishers everywhere, is it used? No, it is never used. So fire extinguishers I buy for my entire factory worth 40 lakh rupees. The accountant wants to claim depreciation. Nirmala madam says it is not put to use. Correct? It is just ready to use. It is not put to use. So before claiming depreciation, should I spray everything? One spray. Open it, spray. I have used it now. No. In fire extinguisher, if you open the seal, gone. You cannot use it again. What do you think? These questions and all went to court. Sir, what do you mean by put to use then? What if that asset should be put to use only in emergency? Like fire extinguisher, standby equipment, standby generator. Say all these things, they are already put to use because it is ready to use. I understand camera kept aside in the AC kept aside is called ready to use. It cannot be called as put to use. But sir, certain assets are there which should not be used only. For example, fire extinguisher. And now you are selling, it should be put to use. So kindly clarify. So based on all court decisions, they made two things. One is called active use, one more is called passive use. Active use are examples for AC, camera, they have to be used. Passive use means what? It is deemed to be put to use the moment you buy it. Example, fire extinguisher, then standby generator. All these are examples of the moment you buy it only, even though you don't use it, it is deemed to be put to use. So they brought about two things, guys. Active usage, passive usage. So write this down. Active usage means what? Example, camera, AC, you have to actually use it. Passive usage means what? Fire extinguisher, generator, UPS, all those things, spare part. Active usage, passive usage, got it? Active use, passive use. Next question, guys. Should it be used in India? What do you think? Bought in India, used outside. Reliance has many companies outside, they are buying in India but using it outside. Let's say we open a branch in Dubai, we buy everything here and send it there. What do you think? For KSA Advait, the asset block will be per branch or all assets put together. Think about that. They have branches, we have branches in Chennai, Hyderabad, Kerala is there, Mumbai is there, Bangalore is there. Should it be per region wise or should it be SSE wise? SSE is KSA. SSE wise or region wise? SSE wise, guys. So they will merge the bench in Bangalore with the bench in Chennai. This will be my plant and machinery. Basically furniture, not plant and furniture. So the beauty is everything will be merged. It's always SSE wise. Now I am telling now one thing. I'll create more benches and it's in Dubai now. What do you think? Nowhere it says in India, both are covered, guys. Usage in India, outside India, write down. These are all simple points. In India, outside India. In India, outside India. Everything is covered, guys. Very simple. Now, these blocks, how many blocks should I make? So they have made some concept called class of asset. I can't keep sitting and having different types. There should be 4 overall types of asset. You only tell me, guys, which would be the types. One would be building, one would be furniture, one would be plant and machinery, one more would be intangible. Apart from that, what else can it be? There nothing. In plant and machinery, you can have various things. Motor vehicle can be separate. In building, you can have a motor vehicle is separate, then you can have windmill separately, you can have, normal plant and machinery separately. Furniture will be one only. Intangible assets, there are so many, goodwill we'll see. Apart from that, you have patent, copyright, trademark, all those things. Building can only be 2 buildings. 3 types of buildings actually. One is commercial building. Residential building means what? For office only, for
people, I'll give staff quarters. I'll build staff quarters. Third one I told you, if I'm into building and construction, I will, that is stock in trade. No, that is fine. I'm talking about if I'm into construction, whatever I consider will be stock in trade. But in the course of construction, can I build some offices? Yes. Can I build those small temporary houses for the workers? Yes. Can I claim depreciation on that? Yes. So building can actually be three types. One is commercial building, one is residential building, one more is temporary building. So basically these are all subtypes. What are the main four types of assets? Write down, these are the only four types, guys. Building, furniture, plant and machinery, intangible asset. That's all. Building, furniture. Now furniture will include electrical fittings also. Building, furniture includes electrical fittings. Building, furniture including electrical fittings, plant and machinery. Then intangible asset. Yes, electrical fitting is not TV, that wire. TV will still be what, guys? Yeah, it will go to the plant and machinery, we will discuss. This wiring, and here switches behind it, all wiring will go. No, see, this is actually a plaster of Paris, POP it's called. Behind that light there will be wiring. All that will come under furniture. It is not plant and machinery. Isn't it part of furniture? Yes. These wires that you are seeing, all this is electrical fittings. Even your switchboard, all that. Right? Yes. The thing is, and basically not the, for AC will have their own wiring, not that. All electrical fittings, switchboard, everything will come under furniture. Now, intangible assets means what, guys? What do you mean by intangible is the next part. According to you, what do you mean by intangible asset? Is goodwill intangible asset? Yes. Income tax department says no. Correct? Because intangible, good, actually it is yes only. For so many years it was a yes. Only in 2020 it became a no. So what you have studied in accounts will not be the same in tax. That is what I wanted to tell you. Is goodwill intangible asset as per accounts? 100% yes, even till today. But is goodwill intangible asset for depreciation in Income Tax Act? No. Why? That also I'll tell you. You have a patent technology. You have created something. I have bought from you for 1 crore. Is it measurable? Yes. You have a trademark. I purchased the trademark. Is it measurable? Yes. Can you measure goodwill? Rishabh Pant was bought for 27 crore. That is his goodwill. If you go and ask 100 people, each person will give a different figure for him. Goodwill actually cannot be measured accurately, especially self-generated goodwill. What is your value today? If you think about it, if you have to put money for your value, can you put? Not possible. We'll tell whatever we want. Correct? So if I tell what is my value, I don't know what is my value. God only knows. How can I put a money to my value? How can you put a money to your own value? We don't know. So it was creating, imagine in courts how many cases like this are there. SSCs were simply saying self-generated goodwill 100 crore. My company is worth 100 crores, simply randomly, and then claiming depreciation on that, best part. Correct? Think of this it had become a, what do you say, a thing to cheat, only to reduce the tax by claiming depreciation. So people were creating their own values for goodwill, inflated amounts. It went to so many courts, and one Supreme Court said this enough is enough. This is wrong. Self-generated goodwill should never be part of intangible asset. Nirmala aunty agreed. In Finance Act 2020, she passed one saying that from today, goodwill will not be part of intangible asset. Whether you purchase the goodwill, whether you self-generate, I don't want goodwill to be anywhere near intangible asset. Because of which many companies stopped inflating their thing. Because goodwill is a name that is self-generated is what is the value of the company. Simply put one value 100 crore, claim depreciation on that also. Imagine the on 100 crore depreciation is 30%. Or okay, good, for intangible 25%. 25 crore is your depreciation, you are debiting to P&L account. And what is the tax saving on the 25 crore? 30%. 7.5 crore you are saving every year in tax. Crazy. Nirmala madam, that's why she said, for accounting purposes, goodwill is still an asset, no problem. But for tax purposes, is it an asset or not? No. So you are right on, guys. Intangible asset means what? Patent, copyright, trademark, intellectual property, yes, but goodwill, whether it is self-generated or purchased, will not be forming part of any block. From which year? 2020. Why? I already told you. Guys, are you understanding the logic? Please don't mug up. Everything is logical. No mugging up at all. Patent, definitely yes. Copyright, yes. In all this I can buy. No, patent is not self-generated. You have actually created a patent. I am purchasing it. Patent, copyright, trademark, any other intellectual property can be purchased and there can be a value fixed to it. Whereas for goodwill, self-generated, purchase, not be forming part of any block. It cannot be forming part of any block. It will not be forming part of any block. Understood, guys? Very simple. Two, 3 points. So it's not forming part of any block, guys. That is not a block of asset at all. Now, guys, what about this? You would have seen one building complex. One building is there, one building is there, one building, one building. Main complex. For water, people dug a well. Borewell. Borewell, you need water. Then they made roads. Connecting everything, they made roads. They made footpath for walking. I am talking about a huge company which has a lot of buildings, and inside obviously you need roads. Obviously you need borewell for water. Obviously you need pipelines. Obviously you need footpath. They went to Nirmala madam and said, in your class of assets, where will I claim it? I have spent 1 crore on all this, building roads, borewell, footpath. Can I claim or can I not claim? Is it building? Is it furniture? No. Is it plant and machinery? No. Is it intangible asset? No, it's tangible. Can I claim it under goodwill, under building? Is road a building? Weird, no? Let's say there is a swimming pool also. Residential, staff quarters with a swimming pool. Is swimming pool a building? Nirmala aunty said, yes, it is building. Because I have to claim somewhere, no? I have spent money. I cannot not give you that benefit. So guys, beauty. Building includes what? Road, footpath, culvert, borewell, swimming pool, etc. So you can write down here only everything it includes, guys. You can within bracket only you can write down. Building includes what? Road, footpath, borewell, swimming pool, etc. Anything. Everything, guys, everything. Borewell also costs a lot of money. Simply you will not get for 10 rupees, 20 rupees, lakhs of rupees. Can you claim depreciation? Yes. Under which section? Under which head? Which class of asset? Building. There are only 4 classes of asset. In each class there are different subheads. I told you, temporary building, permanent building, commercial building, residential building, like that. Which one? Landscaping. A landscaping also can be claimed as building only. Basically everything. The entire landscaping, roads can be claimed as a building. It's part of the entire deal. Land is not depreciable, correct? Land will never be depreciated. Land portion, no. Other things, yes. Any beautification you do, yes. Then one more doubt. Basically guys, all these assets should be useful for business or profession. It should be used in business or profession. Correct? Be used as what? Business or profession. My question to you is, there is a temple inside the premises. There is a mosque, there is a church. There is also an area where employees can play. TT is there, billiards is there. Whenever they feel bored, they can go play. I have spent 1 crore to construct the temple, church, mosque for them to go pray whenever they want. And also I have spent around 1 crore extra for the entire indoor sports complex when the employees are getting bored. 2 crores I have spent. Is depreciation allowed or not? What do you think? But it is not used in the business. Is it used for generating any income as such? No, actually no. It is only there for recreational purposes. What do you think? This issue also went to court. So all that whatever I am saying here, show you one point. One second. Anyway, so write down, I'll write. Tell me guys, what do you think? Temple, building. It's used for business. It is used for business. Correct? Recreation rooms. What do you think? So write down. Temple, mosque, church, temple, mosque, church, or recreation rooms. Recreation rooms. 7.8. Yeah, correct. Temple, mosque, church, recreation rooms. Correct. If it is deemed to be used for business. It is deemed to be used for business. And depreciation can be claimed. And depreciation can be claimed. Temple, mosque can only be part of the building only. Depreciation can be claimed. Depreciation can be claimed. Now, one more example and then we can take a break. Now guys, you go, it's okay, go. No problem. So, one more is, if there's a pond is a small lake. Lake, pond, whatever, is it building or is it machinery? Let's say I am into manufacture of prawns, fish products. In that, or oyster, have you seen oyster pearl? Have you seen oyster? Let me show you. Oyster looks like this, guys. Oyster, have you seen this oyster? Oyster will release something called as a pearl. Inside pearl will be there, like this. This is the oyster. Inside, no, this is a delicacy. People eat this. Inside that oyster, there will be a pearl. So if you just say oyster pearl, this see pearl, it will come like this, guys, in the oyster. So you need to, in order for this pearl to come, you need to ensure that the oysters are properly taken care of. So I had visited, when I had gone to Thailand, I had visited an oyster farm. I spent half a day there to understand how they do the oyster farming. There are 4 different ponds. Until the oyster is some 3 months old, in one point different kind of soil is needed. Then they'll shift to the next soil. Then they shift to the next soil. Ultimately, when the oyster is fully grown, the pearl will be of the purest quality. Then humans being humans, they will kill the oyster. They will eat the oyster also, oyster masala. And pearl, they will use it for necklace. Now the question is that ponds, 4 different ponds are there. Is it building or is it machinery? Building or machinery? Depreciation pakka you will get, but will you get under building or is it machinery? No, here I have to see the functional test. Am I using it just for the employees to sit there, or am I creating the product there? Creating the product. So what is it, building or machinery? Machinery. 100% machinery. So what I am trying to tell is, ultimately what is needed is the functional test. Functional test is what is needed to understand what is a building, what is a machinery, and all those things. So see this point number 7.12, page number, point number 8. Anyway, when you start reading, everything you will understand, but I'm just giving you. Guys, in theater, in PVR, if you go, there will be luxurious seats and all those things. That is plant and machinery, or that is building? PVR fellows went and told it is machinery. Because in machinery, higher rate of depreciation you can claim. 15% you can claim. In building, it's only 10%. So they went and said it is machinery. They said no. Theater, building, whatever you say, it is ultimately building. It's furniture actually. You can't call it machinery. See point number 7. Few examples and then we can take a break. Then one more interesting point. Yeah, guys, you would have seen in a temple they would have bought an elephant many years ago. They would have bought an elephant from the, basically you can, earlier what used to happen is you could trade in these elephants and all. Now everything is banned. Circus and all used to have elephants and other animals before. Now everything is banned. If you have paid 10 lakh rupees for an elephant, or a temple has paid 5 lakh rupees for a bull, is that plant and machinery? Or 10 lakhs is debited to P&L account, or it's shown as an asset? What do you think? What do you think? In accounting standards do not recognize human capital, which means if RCB buys their players, are they asset or are they expense? Expense. Because accounting standard does not recognize human capital. I am not talking about human capital, I am talking about animals. Livestock they are called. I have bought 100 cows and I have a dairy farm. I have 100 sheep, I have dairy farm. I am using it as a, what do you say? If I am selling and buying the cows and animals, that will be stock in trade. I am not talking about that. What about livestock, which I am using it for my business? I have sheep. I am using the sheep for meat as well as wool. Forget about meat, I am using it for wool. Machinery, or is it expensed off? This also went to court with the case law of a temple elephant. Temple elephant, should it be asset or should it be expensed off? So guys, it went to so many cases and eventually they had to change the law. In the definition of plant and machinery, they removed livestock. So is it an asset? No. You see, point number 5 in page number 7.12, plant does not include tea bushes or livestock, which means the confusion ended few years ago. Can you ever take animal as asset? No. Can you anyway take humans as an asset? No. Guys, when I pay salary, will I debit to my P&L account? Yes, as a company. Imagine if it was human capital, I will take all the employees as asset. I will claim depreciation on that. That is a future concept. I am not even joking. It's a concept in the future. Correct? If you buy RCB team, asset or liability, depends on how they perform. Correct? You will claim it as an asset and claim depreciation, impairment, etc. Till today, football clubs, when they buy a player, they will treat him as an intangible asset, believe it or not. Football clubs, when they buy a player, no, Cristiano Ronaldo, when they buy, they will treat it as a intangible asset, because in intangible asset, they will purchase the right of the player to play. The rights only are purchased. In cricket, they are only entering into a contract with the person, that's all. They don't buy the right of the player to play only. So all these concepts will be the future concepts. Tomorrow they will bring human capital into accounting, 100%. It's going to happen. So the salary will no longer be salary, it will be what? Human beings will be now assets. If you don't perform, depreciation will be charged on you. That's called impairment. So these are brand new concepts that are going to come very soon, mark my words. Anyway, now tell me, for income tax purposes, Nirmala madam doesn't want any confusion. Plant does not include livestock. So if you buy an elephant, just an example, will you debit to P&L account? Or you will debit it when the animal dies? You buy today 10 lakhs, it dies 10 years later. So in the time it dies, you'll debit it or you'll debit it now. That also is one more question. That we will see later. Okay, will you debit it now or will you debit it later? We'll see later. Correct? So very simple. But one thing is very clear. Is livestock, is it an asset or not? No. Are you understanding, guys? Different concepts. Okay, you want breakfast break now? Cool. Half an hour.
Okay guys, so before the break we were discussing class of assets and all those things. Right. So write down certain points. Next point, I don't know whether you wrote about theater and other things. We'll write the pointers, we'll write down. Land is not depreciable, not forming part of any block. Land. I gave you examples, but maybe you did not write. We'll write down now. Land, all pointers, easy, important pointers. Land, non-depreciable. So not forming part of any block. Land is non-depreciable, not forming part of any block. Plant excludes livestock and tea bushes. Plant excludes livestock. Livestock means what? Animal. Tea bush also. Tea, when I am making tea, no, I will go and pluck the leaves. Those leaves are also not plant. Plant is not the flower plant, not that plant. Plant and machinery. Correct? Yes. Plant excludes livestock and tea bushes. Theater and hotel. Hotel and theater, that is not a plant, it is still building. Pointers you write down, that's all. Theater or hotel, building, it is not plant. Oyster farm, next one, oyster farm. Oyster farm. So guys, as I told you, oyster farm is what? It is a functional test. Oyster farm will be what? Plant. Is it plant or building? Plant. Swimming pool in your office? Building. Correct? Or some lake if it is there? Building. So it depends. Functional test. Why is the lake used for? Why is the pond used for? All that matters. So it's an oyster farm means it is a plant. Functional test is the most important test. Functional test. Right, so plant excludes livestock and tea bushes. Theater, hotel, building, plant, oyster farm, plant, functional test is what I need to see. So all these are there, guys. Next, write down. Now tell me, guys. We understood what is depreciation. My next question to you is, method will be SLM or WDV? Obviously WDV. It is a WDV method, but one exception is there. Power generation companies, which is involved in the generation of power, they can either choose WDV or they can choose SLM. We wrote the single asset method, no? Single asset method. That single asset method is applicable for power generation companies using SLM. That's why I did that. So SLM using, that is power generation companies using SLM, that is your straight line method, they will still use which method? Single asset method. There is no block concept. Wherever WDV is there, it is only the block concept. So again I repeat, method of depreciation is either single asset method or block method. Block method WDV is applicable for everybody. But for power generation companies, they can opt to use single asset method or they can opt to use block method. Did you get it? If it is a single asset method, what method? SLM or WDV? SLM. Straight line method. It is a straight line method. So write down two things. Yes. SSE, method of next heading, method of depreciation. Method of depreciation. Method of depreciation. Generation or distribution of power, SLM or WDV, at the option of the SSE. Generation or distribution of power, SLM or WDV, at the option of the SSE. Other business, always WDV. Right? Generation or distribution of power, SLM or WDV, at the option of the SSE. Other business, always WDV. Now what will be the rates of depreciation? What will be the rates of depreciation? For building, how much, guys? I told you. So the rates in our material, no, it's given here, you see. It's in page number 7.9, but it's okay. We'll write down in a better way. Write down rate of depreciation. It's there in 7.9, the full list. Rates of depreciation you can write. I can say refer page 7.9, that we'll see, but we'll write down the gist of the story. Because we are writing the running notes, right? Well, in the exam it will help you one day before the exam too. That's why I'm making you write all the points. So what I do is 1 or 2 days before the class I will write, because I don't want to, what do you say, I'll write some in class, some separately. I'll show you like this, so that only all the important points I'll keep adding, and then you can do the needful. So I have various sheets like this where I keep writing, and so that you can copy, I'll dictate, whatever it is, whatever the mode it is, ultimately everything will be in your book. So what are the rates, guys? See, one by one. First you can say building. Building, there are 3 types of building. You can say building and rate. What are the 3 types of building? Residential building, staff quarters, guest house. Second one, general building. Third one, temporary building. Residential building 5%, general building 10%, temporary building 40%. What is temporary building, guys? If you are constructing something, they will have some temporary stuff for the workers, no? That is 40%. Because why? It will be there for 1 year or 2 years. That's why 40%, higher rate. Everything has a logic. General building is normal building, guys. Office building 10%, temporary building 40%. Only staff quarters, guest house, those things will be 5%. Residential building, general building, temporary building. Next, guys, furniture. Furniture would be 10%. Easy. All furniture, how much? 10%. Third one, intangible asset. How much is intangible asset? 25%. Intangible asset will include goodwill, exclude goodwill. Exclude goodwill. In the bracket you can clearly write down goodwill should be deleted. Guys, when did it come? I told you 2020. Now my question to you is, logical question I'll ask you. In 2020, goodwill would have been included already, no? How will you remove it? Anyway, now though it's not there. I'm telling in 2020, goodwill would have been included in intangible asset. And that too in the block, all mixed. How would you remove it? Logically you think. I don't want any mugging up answer. Think you are the finance minister. You are telling from today goodwill should not be there only. Everything is mixed there. Some goodwill, entire this thing, patent, everything is mixed. And she is telling you should remove. What will you remove? Will you remove WDV or will you remove depreciation? No, I am saying anything respect to goodwill should not be there. Do you agree WDV will include everything? It will include goodwill, patent, trademark. So she is telling I don't want goodwill to be there only. So what will you remove? WDV only you should remove. But the question is it's all mixed, no, in the block. How will you remove? You can calculate separately or how? Because see, some goodwill I would have bought last year, some would have bought some other year, some I would have subtracted today. How will I know what part of goodwill is remaining? Because it's all mixed in the block. That's what I'm trying to tell. So what she told was, assume goodwill was the only asset in the block whenever you bought it. Let's say you bought the goodwill in 2000 or 2010. 2010, assume that when you bought it only, you did not add it to any block. How would you compute depreciation in 2010? You will buy a goodwill, you will add more goodwill, you will subtract goodwill, you will keep on giving depreciation every year. She is trying to tell, when the year you purchased only, assume that was the only asset in the block and keep on reducing depreciation. Bring it till 2020. The WDV of that goodwill independently calculated, bring it till 2020, and that figure you subtract from the total intangible asset. That's what she said. Doesn't that make sense? Yes. Because in this intangible asset, everything is mixed, no? There is goodwill, trademark, patent. I don't know how much to remove. So what did she say? Whenever you bought it, no, calculate that separately as if it was the only asset in that block. Assume intangible asset only was not there, only goodwill was there. Keep on subtracting depreciation every year. So let's say it comes up to 20 lakhs. You see this block has some 80 lakh rupees pending, 80 lakh in the block now. It has all mixed. If goodwill alone was there, how much would it have been? 20 lakh. So she is telling from that 80 lakh, remove 20 lakh. That is the easiest way to calculate, otherwise it will create problem. That was only once a year, every year we should do, only in 2020, that's it. After that, gone, very simple. So in now they will not ask those questions. We are standing in 2025, why will they ask question about 2020? Correct. So I am just telling you, imagine her, basically I have to remove. What I will remove? I don't know. So what did she say? No problem. Go as if goodwill was the only asset you calculate from whenever you bought. Keep on subtracting depreciation. Today's asset is 80 lakh. All that after subtraction it has become 20 lakh now, goodwill alone. So I can safely say 20 lakh worth of assets is actually present in this 80 lakh. So in 2020 she told, kindly remove 20 lakh once and for all and make the block 60 lakh. So today is it relevant? No. We are standing in 2025. Should I sit and do 2020 ka problem? No. But I am just telling you that was what was there. Because I want you to keep in mind, tomorrow if she says something is not part of the block, how will you calculate? Same, as if that asset was the only asset in the block from the day I purchased it, calculate depreciation and remove it from the block. Anything for that matter, if you want to remove, you should calculate it separately and then remove. That is the logic. I am not telling we will do the sum of 2020. I am just saying that is the logic. Anything for that matter, if she wants to remove, you should calculate it separately and then remove. Very, very simple. So if there is, for example, a bunch of chocolates. Some is 5 rupees, some is 2 rupees, some is like 1 rupee, all mixed. I am going to tell you, please remove the 1 rupee chocolates. How will you calculate? Very simple, as if the 1 rupee one was bought separately. So if that all mixed is 500 rupees is mixed, I will calculate, 1 rupee one I had bought some 100 chocolates. I will remove 100 because I have calculated it separately. In that 120 I have already eaten, assume. So I know that 80 is pending, I know already, 80 is already there. 80 is available in this 500. So what will I remove? 80. So from tomorrow, that's a general rule. If tomorrow also she tells this is not included, that is not included, what will you do? Calculate from the beginning and remove from the mixture, that's all. Understood? So furniture 10%, intangible asset except goodwill, because goodwill cannot be counted, 25%. Is there depreciation on goodwill? No. Is there depreciation on goodwill as per Companies Act? Yes. That's why there's a difference between Companies Act depreciation and IT Act depreciation, right? Next, right guys, plant and machinery. See, in plant and machinery I can have many things: motor vehicle, ship, aircraft, computer, books and periodicals, pollution control, windmill. One by one coolly will write, don't worry. I'm just telling you, so many are there. One by one, coolly, no problem. You need not mug up any of these things. You should just know the rate. But tell me the rate of residential building. 5%. Normal building 10. Temporary building 40. Tell me intangible asset 25. Furniture 10. That's all you need to remember. Machinery, most of it is 15 actually. There are exceptions, but most of it is 15. So write down one by one. First one, motor vehicles. Motor vehicles. Motor vehicles used in hiring business 30%. Used in hiring business. Guys, hiring business more and more usage. Hence, depreciation is also more, 30%. Other cases means what? Infosys has some 5 cars. Are they using it for hiring business? Are they hiring the car? No. Taxi business 30%. Hiring business means taxi. Taxi business 30%. Other business having cars 15%. If you are into shipping business, second one, ships, how much guys? 20% for ship. If you are Indigo, you own aircrafts, how much? 40%. Aircraft 40%. Guys, aircraft, ship and all, 99.99% they'll not give in the exam. What they'll give? Car they'll give. Car, in that also hiring business they'll not give. What they'll give? Normal business. What will you remember the rate? 15%. Fourth one also they'll ask, computer and computer software. Computer and computer software 40%. In that you delete computer software. I'll tell you the reason. Computer and computer software, how much guys? 40%. So if you own a computer, KSA has bought this laptop, how much will they depreciate? 40% every year. For tax books or company law books? Tax books. Now, computer software was the question. Computer software, I buy it separately. Is it an asset or should it be expensed off was the question. If I buy a laptop which comes with Windows already and they are charging 60,000 including Windows, original Windows. Do I know how much will be the cost of Windows? No, it's everything is bundled into a product. That 60,000 rupees will be asset, or in that I will say 50,000 asset, 10,000 expense. 60,000 will be asset, that I know. But if I buy it separately, then that was the question. If I buy a laptop for 40, buy a separate license for Microsoft license for 20,000 rupees, that will be what? Expense. So this went to lot of court cases, and today they have changed the definition of computer software. They have told computer software which is purchased separately is called as royalty, and royalty is an expense. I am paying royalty to the owner. I am paying royalty to Microsoft while I purchase the software. That is the expense or asset? Expense. This is a recent addition. So write down computer and computer software, and within the bracket outside you write down computer software is excluded from depreciable asset definition because computer software is now royalty. Understood, guys? Computer software is excluded from the depreciable asset definition. Computer software is equal to royalty. Are you understanding this? Yes. So computer software is what? It is royalty. Next, guys, books and periodicals. Books and periodicals. 40% again. All this they'll never ask. They'll definitely ask motor vehicle. They'll definitely ask computer. Other things very, very rare. Books and periodicals 40%. I buy books. How much can I depreciate? 40%. Pollution control equipment. Pollution control equipment. How much? 40% again. Pollution control equipment 40% again. These factories will buy, guys, pollution control equipment. They need, factories will need pollution control equipment. It's mandated as per the Industries Act. Mandated as per the Prevention of Air Pollution Act, Prevention of Water Pollution Act. You have to have pollution control equipment. And if you buy them, what is the percentage? 40%. Windmill. Have you seen windmill? When you are going near Chitradurga area, everywhere windmills, windmills everywhere. How does windmill look? Have you seen? Yes, windmill. In Chitradurga area, so many windmills are there. This is how it is, windmill you would have seen. Idle energy, wind. So windmill, if it is installed before 1/4/2014, 15%. It is installed after 1/4/2014, 40%. Mostly they will ask after 14 only. How much? 40%. Understood? Before 1/4/14 how much? 15%. After 1/4/14 how much? 40%, guys, 40%. Next, oil well. Oil well, 15%.
Now anything other than this means what? Factory machinery. One machine is there in the factory to produce, let's say I'm in the tea business, coffee business, to grind into powder. I have a machine. That machine and all, 15%. All machines other than the above, 15%. So in the exam, whatever I have seen, I'll tell you, other plant and machinery, always they'll give 15%. They will give computer and computer software 40%, and they have given motor vehicle. That's it. Beyond that, they'll not give. Even if they ask, we know ship is 20, aircraft 40, computer 40, books 40, pollution control 40, windmill also 40 only actually. Oil well only is 15. Other plant and machinery 15. You have to remember the rate. This much you remember, more than sufficient. In the 7.9 book, something else 45% and all is there. You can ignore that. Just study this and go. Enough. For our exam, this much only is enough. Okay. 7.9 is just for your knowledge. For the exam, this chart will help. Tell me, residential building how much? 5%. Temporary building? Temporary building 40%. Why? Because it's only there for 1 year, 2 years maximum. Then ship 20%. Aircraft 40%. And then computer 40. Pollution control. Windmill after 1/4/2014. Everything is 40. Other plant and machinery 15. Motor vehicle 15. Motor vehicle for hiring 30. That's all, very simple. Books and periodicals 40. Pollution control 40. Easy, no? Very simple, guys. So in the exam, no, they'll just give you some figures that, like for example, they'll say machinery and all that. Now you need to apply and write 15%. They will not give you the rate 15%. You only need to remember. This is the rate. So block of assets are different blocks. See, plant and machinery is a block. In this, motor vehicle will be a sub block. Ship will be a sub block. Aircraft will be a sub block, like that. Pollution control is a sub block. Windmill, oil well, all these will be sub blocks. Few more points. I have different folders so that whenever there is any change, I keep writing it. This computer software came very recently. In my old notes, it will not be there. It was a very recent change. They changed the definition of royalty. That time computer software will come. Now guys, one more interesting point. It is on ready to use or put to use? Guys, depreciation, ready to use or put to use? Put to use. It is on put to use. I bought it in April, but I put to use it only in March. I bought it in April 2024, one asset. Let's say AC. AC is also machinery, plant. How much will it, plant and machinery, how much will it come? 15%. Others, it will come under others. I bought one AC in April 2024. But I put it to use only in March 2025. Next year. But it comes in the financial year only actually. But I bought it in April 24. Put to use when? March 25. 1st March 25 I put to use. The question is, what is the rate of depreciation? 15. Just by using for 1 month alone, I only use for 1 month, no, in that financial year, will I get 15% rate? Then Will you take for 1 month? No, that is the best part here. That is one more doubt. In company law, what will you do? As per usage. You are 100% correct. In company law, what will you do? As per usage. I use for 1 month, 1 by 12 you will do. You will do what? Into 15% into 1 by 12. Correct? No, in company law you are correct. I know you know company law. Income tax is different. Right? You use it for 10 months, you will do into 15% into 10 by 12. In income tax, it's not like that. Income tax, Nirmala madam only says two things. If it is used for less than 180 days, if it is used for more than 180 days. If it is used for more than 180 days, full rate of depreciation you can claim. If it is used for less than 180 days, half rate of depreciation. Half rate means what? 7.5%. Which means if you use for how much? March, if you are using for less than 180 or more than 180? Still you use for less than 180, you will get 7.5% depreciation. Crazy. Guys, let's say you put to use it on 31st March. Just one day I used. What rate I will get? 7.5%. It's not like Companies Act. In Companies Act, you are 100% correct. You will do based on the number of days. Here it's not like that. It's based on more than 180, let's 6 months basically. So write down the next important point. If it is put to use for greater than or equal to 180 days, then full rate. If it is put to use for less than 180 days, half rate. Means even if it is used on 31st March, half rate. So simple words guys, write down next point. If it is used on or after October 4th. If it is used on or after October 4th. If it is used for on or after October 4th, then full, then what? Half rate. Then it's what? Half rate, sorry. On or after October 4th, half rate. Before October 4th, full rate. Why? The moment it is before October 4th, no, 3rd October, it will become 181 days. Or basically 180 days exactly. What does the law say? If it is put to use for greater than or equal to 180 days, then full rate. Correct? I said what? On or after. And if it is less than 180, less than 180 means what? 179 days. Use it for 179 days, half rate. If I say 4th October, balance days left in 4th October is 28 days. Correct? Let's say it is used on 4th October, that you leave 4th October also put together, 28 days is left. November 30, December 31, January 31, February 28, March 31. It will come up to exactly 179 days. So if you use on or after 4th October, it will be 179 days, hence it is half rate. If you use it before 4th October, full rate. That's all. So you just remember the date, guys. Leap year, then next 5th October it will become. Leap year will not be this year. For our Finance Act, leap year will not come. Because our leap year Finance Act is 1st April 24 to 31st March 25. But if they have given last year it is put to use and all, then 100% leap year will come. If it's a leap year, 5th October. If it is not a leap year, normal year, 4th October. Everything is there in my notes, but you just are writing the pointers. What pointers are you writing? Write down on or after 4th October. On or after 4th October, half rate. Before 4th October, full rate. Very simple. On or after 4th October, half rate. Before 4th October, full rate. Simple. So this is how we should always compute. So in our Q&A book, guys, which I have sent you, open, we'll just solve one or two. I've sent you, no? Yes or no? Yes, open that. The other one will send, I'll send for printing and I'll give it to you. I told you that is purely RTP, MTP, previous year's question, everything like that. That is for your final solving you can use. For concept capsule you can use this book. Just stick to this material, nothing else is needed. The Q&A book that I am giving to you has everything there. This you solve for concept, that you solve for final. This is like net practice. And the warm-up matches that other book. Then you will directly go play the finals. That's all. This is net practice. You do the net practice with me here and there, and then we'll solve the warm-up match also. We'll do something. You solve these questions, concept capsules, and you solve that book that I'm giving you. Let me also see how you can't score more than 60. Open challenge. Provided you study GST also properly. But GST is handled by Vikas sir. He is also awesome. No tension. So you will score for sure. Right? So don't worry, guys. Come to this. So concept capsules and all you solve here. See, it should be like both of us should work hard. We cannot solve all the questions. You also need to put in a lot of effort. These answers are also there. I will send you the answers for this also. Handwritten answers I have made. My team has made actually. I will send you. You can refer. Most of it will solve. Concept capsule. Others, if you don't solve, then you can solve it on your own. But that book also we will solve together. In that everything we cannot solve, but all the important questions I'll solve. Remaining you solve. Answers will be given there in the Q&A book. Answers also I have given. So if you have any doubts, you can come to me. So you also please work hard at home. We'll also work hard here together. Let me also see how you cannot score 60 plus in taxation. Slow and steady. And we will ensure that the syllabus will be completed on time, way before time, so that you will get ample time to study for the examination. Don't worry about it. That's why from beginning only we are working hard. Every day till 12, 12:30, 1, 1:30 we are taking. Beginning only you are sitting for 5 hours, 6 hours. That's the reason. The reason is that only so that I don't want you to suffer later. Last batch we gave them little leeway. 2 hours, 3 hours and all we are taking. So that they'll get adjusted. Here no adjustment, direct attack. Throwing in the ocean. There we thought, okay, we'll first put in the small swimming pool, then in the large swimming pool, then in the river, then in the ocean. Then we thought, then what happened? Some 15 days extended happened. We don't want that this time. Directly I am calling you. You have come in one small swimming pool, CA foundation passed and come. Now directly jump into the ocean. That's all. In CA foundation swimming pool, and there also you have put that floater and all you have put around you and you have jumped in the swimming pool. But now I have removed the floater and you have made you jump where? Ocean. But don't worry, we are always there. It's easy, guys. That's why I always tell CA foundation to inter is the toughest. Because your jump is crazy. BCom to CA inter was also toughest. Because our study methodology only is different. We have to change. But CA inter to final will be easy because you are already there. Correct? If a person is already in jail for 10 years, if I tell him one more year you do, bro, he'll say, okay, no problem. Correct? But you are fully free. Suddenly I throw you into jail, you will have a problem. That is the phase that we are going through now. This transition is difficult. That's why you will feel that, okay, I have to copy everything, I have to write down everything. You will feel like that. Yes, it's the initial phase. Then you will get adjusted. After a point, you will be like, you do whatever you want, boss. I'm like this only. You will get adjusted to this. You will get adjusted to this 6 hours, 7 hours, and after that, so adjusted that after if the class get over, after all the classes are over, you will actually miss it. You will miss this torture, 6 hours torture. I missed it for sure during my class, and even now I miss my classes actually. I still remember my CA days. It's fun. Yes, guys. It will become fun automatically. Right. Let's solve a few questions. C 7.1.
Tell me, question number 1. Just the concept, you already know now, let's apply, let's try to apply. See, these concept capsules and all, they'll not give so much in the exam because just to clear the concept. How the questions will come, the other book, you wait for it, it will come. Full questions from MTP, RTP, everything is compiled, amended and given to you. Blindly follow, you don't have to touch any RTP, you don't have to touch any MTP, you don't have to touch any previous year's question papers, everything is there in that, right? So at least from my subject, I'll give like that. And everybody will have their own stuff, they'll give. See guys, these concept capsules is to apply the concept that you have already studied, one by one. Question number 1. Patient was treated in the year 2014 by a surgeon, was completely cured of his ailment. Sum of 2 lakh was also paid as professional fee. Later in 24-25, patient executed a will by which he gifted a land valued at 1 crore, indicating that the gift was made in order to show his feeling of gratitude to the doctor who had shown him kindness. So, upon his demise, he included that 1 crore. So guys, he did not give the money because he felt that the doctor had done a good job. That would have been nexus. He gave it later, saying that you actually saved my life. I really relate to you because you really are a very gem of a human being. So please take this land worth 1 crore. Is it PGBP or not? No. If I pay fees in the form of money or kind, then it is called PGBP. This is not PGBP because he gave it later and not because he is a doctor, because of to show his gratitude. That will not be PGBP, because for PGBP to happen, what should happen? Nexus. Sir, if it is not PGBP, will it be IFOS, income from other source? That we will see when we reach that chapter. If I simply give my land to you, isn't it taxable in your hands? We have to see. That's called gift taxation. That we will see later. I am not asking is it taxable or not. What am I asking? Is it taxable under PGBP? No. But is it taxable under IFOS? You will be able to answer this question after we do IFOS, income from other source. You did an excellent work. I am very happy. I'll give you my watch, Rolex watch 1 crore. That will be PGBP because it really is directly linked to the work. But here very clearly they have given, no, it's later after 4 or 5 years he gave because of his kindness to show gratitude and all that telling. That is what? Not PGBP. But is it IFOS? We'll see later. C you will not understand now because you have to do another section. B. Answer B guys. Read. Donations are donations are calculated, but you see here guys, you see in the course of such vocation and for practicing the same he received the donations who believed in the cause that he sponsored. So this the court said simply if you get donations it will be capital receipt, but here you are doing a vocation and vocation is a passion, for that you are getting money. That will now become a profession. All these Rara Baba, DVD Baba, all that they'll get donation only. No, will they get money? No. They'll get donations only. Nityananda will get donation. Everyone will do donation. So is it business? Yes. Normally you are right, donation is not taxable. But guys, I am doing this vocation for which you are giving me money. I told you there's a thin line of difference between vocation and profession. Profession includes vocation. So it will be PGBP. Got it? Question number 6. The following information was furnished in relation to M Limited. Opening value of the block 12 lakh rupees. Asset acquired and put to use on 15th January 2024. 5 lakh. Make this 25. 5 lakh. Asset worth 4 lakh was sold on 22nd December 24. This is the year 24-25. What is the cutoff date, guys? 4th October. If it is bought, if it is put to use on or after 4th October, half rate. Before 4th October, full rate. When was it put to use? After 4th October. So, for this half rate or full rate? Half rate. And it is a machinery. So, 15% into half, 7.5%. Some asset was sold also. So, what should I do? Opening WDV plus asset acquired during the year, 5 lakh. Less sales, 4 lakh. And whatever balance is left, in that up to 5 lakh will be half rate. Remaining will be full rate. How it is to be done, we will see. Second question is also there, we will see later. So guys, if you see the structure of these type of questions is given here. See, page 7.12. This is the proper structure. WDV of the assets in the immediately preceding previous year and the depreciation of previous year will give me my opening WDV. Many times in the question they will give the opening WDV. To that, what you should do? Add actual cost of the assets acquired during the previous year. In that I will add all the three. Put to use for 180 days or more means what? Put to use before 4th October. Second one, put to use for less than 180 days means what? Put to use on or after 4th October. Third one, acquired but not put to use. I will add it to the block, but I will not give depreciation. Let's say I bought an asset on 1st March and did not put to use at all. Should I add it to the block? Of course, yes. But should I give depreciation on that? No. Less, I told you, no, sale, etc. That is called as monies payable. Sir, but if I make a sale and I get money, isn't it money is receivable? Why is it money is payable? Lawmaker is trying to tell it is money is payable to the SSE. Is as good as telling money is received by the SSE. So, money is payable should be read as money receivable by SSE. Received or receivable by SSE. Should not get confused. Less money is payable. Money is payable means what? Selling, discarding, demolishing the asset, destroying the asset, together with what value? Scrap value, if any. Basically, deletions during the year. Are you with me? Yes. And finally, what I will get? This slump sale we will see later, you will not understand. Next, WDV for the purpose of depreciation. Less depreciation. So, I will choose those assets which are used for more than 180 days and give full rate. If it is used for less than 180 days, I will get half rate. Those assets which have never been used, no depreciation. And finally, what I will get? Closing value of the block. This should be the entire structure. So, in our question, opening WDV was how much? 12 lakh or whatever. Add additions 5 lakh. Deletions 4 lakh. Then depreciation. For that addition of 5 lakh, half rate. And remaining, whatever is remaining in the block, for that it will be full rate. That's all. I have not done the problem, but did you understand what to do? Yes. Opening WDV, additions, deletions. Sorry? 4 lakh will be sold and remaining only will be left. No, we'll solve. I'm just telling. Addition, something. He's asking, will you get depreciation for that? No. In Companies Act would have given depreciation, no, till the day it is sold and all, will give here nothing. So think about it. If I sell an asset on 30th March, will I get any depreciation on that? No. Even though it has been used for full year, I will not get any depreciation. In this problem, they have sold the asset on 22nd December. I have actually used it from 1st April to December. Will I get depreciation? No. Asset addition, deletion. Only on the balance you will get depreciation. Are you seeing the difference between Company Law and Income Tax Act? Yes. In Income Tax Act, even if you use it for 1 day, you will get half rate depreciation. On the other hand, if you have sell it off before the end of the year, will you get 1 rupee depreciation on that? No. Are you understanding? Did you get it? Is there depreciation? No. So anyway guys, how to solve this? See, I'll show you, then you can copy. Everything I'll show you, please see properly. I am only calculating the closing WDV. Opening WDV 12 lakh. Do you agree? Yes or no, all of you? Add actual cost of asset acquired during the year. Any asset, was it acquired for more than 180 days in the previous year? No. Was it acquired less than 180 days? Yes. When was it acquired? 15 January. How much? 5 lakh. Was any asset acquired which was not put to use during the year? No. So total 17 lakh. Less monies payable. How much? 4 lakh. What is the balance left, guys? 13 lakh. In this 13 lakh, 5 lakh is at half rate depreciation. In this 13 lakh, 5 lakh is half rate depreciation. Remaining 8 lakh. Remaining 8 lakh is at 15% depreciation. Everybody with me on this? Understanding? Yes. So if you see, for asset bought for 180 days or more, 13 lakh minus 5 lakh. For 8 lakh, 15%, 1 lakh 20,000. For asset bought for less than 180 days, 5 lakh. 5 lakh into 15% into half depreciation. That is 7.5%. How much? That is 7,500. So what will be my closing WDV? 11 lakh 42,500. This is how we should compute everything. Did you understand, guys? Opening WDV, add actual cost, in that split into 3. How much was bought for? More than 180 days. How much? Less than 180 days. How much? Not put to use. And whatever amount I'll get, less money is payable on sale, discarding, demolishing. WDV for the purpose of depreciation, I'll get 13 lakh. In that 13 lakh, what I'll do? Asset bought for 180 days or more, 13 lakh minus 5 lakh into 15%. One more, asset bought for less than 180 days, 5 lakh into 15% into half. Everybody with me? Yes. And ultimately this is how we should do. Okay. Now you can coolly copy. One by one. Yeah, you can figure it out. That's all. Yes, guys, that's it. Try to solve on your own and then you can see the book. I'm seeing the answer. I've given everything. Second part of the question is also there. We'll see that later. Down? Little? Yeah. Monies payable 4 lakh. WDV for the purpose of depreciation 13 lakh. You have a doubt? First bench. Doubt? Sure? Are you sure? Yeah. If you have any doubt, you please ask me. Don't be scared. Don't think, what will sir think? I'll not think anything. So please, you have copied till here? Till that previous one you have copied? Yeah. Less money is payable. How much? 4 lakhs. Got it? So in that 5 lakh, 15% I should take into half. Remaining 13 minus 5, I should take full rate, 1,20,000. What is the closing WDV as on 31st March 25? 11 lakh 42,500. Yeah? Playground. For what? Is there a building? I mean, is there a... Yeah, that is correct. It is all part of the building only. Yes. It is all part of the building. School, it's you're doing it for business, no? So yes. It is land on which something is built, right? So it's not just land as such. If it's only land, if it is only sports ground, then it will be deemed to be a land. So then there will be no depreciation. But you will have to work on the land, no? If I have to make like a cricket pitch or a football pitch, etc., I have to work on the land. So there it will be, and I will have these footpaths and all those things. So generally, to be on the safer side, what they'll do is they will not take on the land portion, but on whatever they have constructed on the land, for that they will take, to be on the safer side. If it's just pure playground land, then they will not take depreciation because it's ultimately land. But all things that has been used on that land to make the land as a playground, which means there should be like a football goalkeeper stand, there should be that basketball court, all those are actually what? Expenses which I have spent on the land. That alone I will take. Land cost I will not take. If land cost is 1 crore, to make the land into a sports ground, it is 30 lakhs. On that 30 lakhs, I will claim depreciation, not on the land cost. Okay. Same with building also. Land cost will not be included. Only the building cost will be included. Yes, all that will be part of the building. It will be part called building. If I build like an indoor stadium and all, obviously entire construction expense I can take it as a building. Now guys, second question you solve with the same structure.
if sale value of the asset was 14 lakh instead of 4 lakh, what is the depreciation? Come on, solve it with the same structure. The second question here, no? 6-2. Solve, guys. Come on. Please read examples 7.14 till here. So it should be put to use in that previous year. Example 6 important. 1 to 6 you please read. In that sixth example was the example where we spoke about other things. That is, next guys, Nirmala madam has given one more benefit. More and more companies had to enter into manufacturing. So for manufacturing companies, she said, apart from that 15% machinery, please buy more and more machinery, because in the year you buy and the year you put to use, I will give you something called additional depreciation. How much percentage? Apart from 15, 20% extra. So if you buy new machinery, how much you will get? 15 plus 20. First year you will get 35%. Next year you will get 15%. Next year you will get 15%. So a new concept was brought about by Nirmala madam many years ago. Not Nirmala madam, previous finance ministers many years ago, 15-20 years ago only, where they said there is something called as what depreciation? Additional depreciation. Is it for everything or only for machinery? Machinery. So write down guys, next heading, additional depreciation. 32.1.2a. 32.1.2a. No need to remember the section number, it's okay. But 32 you should remember. Depreciation which section? 32. What is charging section for house property? House property. 22. Yes, you remember. What is the deduction section for house property? Standard deduction. 24. See, I told you will automatically remember. Right, what is the charging section for PGBP? 28. What is building expenses? 30. Rent, plant and machinery expense 31. Depreciation 32. Like that you'll remember all section numbers. Sir, 32.1.2a, all that no need to remember, it's okay. Just remember 32. According to section 32, subsection 1, clause 2a, there is a concept called additional depreciation. For which type of companies? Yes, for manufacturing or production companies and also for power undertaking. Power undertaking who is using only WDV, no SLM. SLM you will not get any benefit. For which type of machinery? New plant and machinery acquired and put to use. Correct? Manufacture or production of article or a thing, power undertaking. What plant and machinery guys? New plant and machinery. Acquired and put to use. New plant and machinery acquired and put to use. So basically you can't just acquire it, you should put to use in that year only. Then only you will get additional depreciation. Now write down a few points. Can the business be old or new, or the business also should be new? Business can be old. What should be new? Plant and machinery. So should be new. So write down the first point. Business may be old or new. Business may be old or new. I don't care. Business may be old or new. First point. All pointers, guys, for revision. Second one. What is the additional rate of depreciation? 20%. 20% of actual cost. 20% of actual cost. Actual cost of the new machinery. 20% of actual cost. Only in the year in which it is put to use. Only in the year in which it is put to use. Only in the year in which it is put to use. You will not get it next year and all, only that year. Third one, no additional depreciation in the following cases. No additional depreciation in the following cases or for the following assets. Guys, when I say machinery, machinery has everything, no? It has motor vehicle, ship, aircraft, computer. What will you get 20% extra? You have other plant and machinery. And next one, should it be used for normal business or should it be used in the factory? Think about it. Infosys also buys car. It is using it in the normal business. Will you get additional depreciation or should it be only for factory? Dialogue you see, manufacture or production. It happens where? Factory. Which means when I say plant and machinery, will you get it on normal vehicles? No. Will you get it on ship? No. Aircraft? No. Computers used in office? No. But computer used in factory? Yes. Are you understanding? So it's basically the benefit is given only for manufacturing and production. So write down, guys. First one, ships. No additional depreciation for what all? Ship. Second, aircraft. Ship. Second, aircraft. Third one, building. Building. Next, furniture. Fifth, intangible asset. Ship, aircraft, building, furniture. Ship, aircraft, building, furniture, intangible asset. Intangible asset. Next one, vehicles. Next point, vehicles. Vehicles. So factory fellows, no? They went and showed Nirmala aunty this vehicle. This is called as a forklift truck. It will be used inside the factory only to carry boxes, to carry material. Have you seen like this? Yes. They said, sir, madam, this is also a truck used to carry large boxes in the factory. I can't take it outside. Then you would have seen big cranes, JCB, correct, JCBs used in the factory. They went and told, madam, what about these things? You are telling for vehicle it is not allowed. This is vehicle, madam, but its vehicle is used in the factory. Especially forklift vehicle and crane. Will you get additional depreciation? What do you think? Yes. So exception, write down. Exception. Two exceptions. Crane and forklift truck used in the factory, you will get additional depreciation. Additional depreciation is allowed for two things. Crane, that is your JCB, and forklift truck used in the factory.
Got it? Now, I am saying new machinery. Here, no, clearly they have written new machinery. What if I have imported the machinery from Dubai? In Dubai it was used. In India it is new. Is it allowed or not? In Dubai it was used for 1 year. I am importing it to India. In India it is brand new. When I say new, partly used asset abroad, that is also allowed, or it should be fully new? That was one question. When I say new machinery, is it new machinery in India or it is brand new machinery never used ever in the history? I should see that, right? So, what about, that's what, second hand plant and machinery, some questions. So 4 items are there, I will show you. Second hand plant and machinery in India or abroad. Basically you are writing this only, no additional depreciation for the following. 6 items you wrote. 7th item, plant and machinery, second hand plant and machinery, whether in India or outside India. Will you get additional depreciation? No. Understood? Will you get additional depreciation, guys? Never. So second hand plant and machinery, no additional depreciation, whether used India or abroad. Second, used in office premises. Used in office premises. Computer used in office premises. Will you get additional depreciation? No. Computer used in director's residence. Will you get? No. Second hand plant and machinery, never. Whether you have bought it from India, outside India, if it is second hand, you will not get additional depreciation. Next, used in office premises, you will not get. Used in residential premises, you will not get. Guys, I already told you about one section, 35 AD. What is 35 AD? Yes, directly full amount is debited. Already full amount is debited. On that additional depreciation you will get? No, depreciation only you will not get. Where you will get additional? Everything you have debited, no. You have bought an asset for 10 lakh. Full 10 lakh you have already debited. You will claim depreciation on that? No. Forget about depreciation. Additional depreciation? Additional depreciation only is not covered. How will additional depreciation come? There are 2 such sections. 35 is for scientific research. 35 AD, specified business. The 4th one, guys. Any plant and machinery for which 100% deduction is already allowed. You cannot, you don't have depreciation also, you don't get additional depreciation also. Any plant and machinery for which 100% deduction is already allowed. Example 35, scientific research. 35 AD, specified business. Any plant and machinery for which 100% deduction is already allowed. 35 AD. Will you get deduction? No. Will you get additional depreciation? No. $35 is what? Scientific research. 35 AD is what? Specified business. 35 and 35 AD. Now one question to you. I buy a new asset in December 2024. Okay. Brand new asset. Put to use in December 2024. Bought also this year, put to use also this year. What will be the depreciation? I will give you 4 options, you tell me. What new plant and machinery used in the factory? Let me be very clear. What will be the depreciation for the year? Will it be 15% plus 20%? Second one, 15% plus 10%, that is half rate depreciation. Third one, 7.5% plus 20%, or 7.5% plus 10%. 7.5 plus 20%. 7.5 plus 20%. 7.5 plus 10%. 7.5 plus 10%. 7.5 plus 10%. 7.5 plus 10%. 7.5 plus 20%. 7.5 plus 10%. 7.5 plus 20%. 7.5 plus 10%. 7.5 plus 10%. 7.5 plus 20%. 7.5 plus 10%. 7.5 plus 20%. 7.5 plus 10%. 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 7.5
Which one? Option 1, 2, 3, 4. 1 and 2 is wrong because this cannot be 15. This is 100% wrong. Now you need to tell me, is it 3 or 4? 7.5 is the half rate normal depreciation. I am talking about additional. Additional also you should make it half, or additional you will get full. What do you think? Full or half? So it's 3 or 4. In tax and law there is one logic. 4 logics are there. 4 steps. Step number 1, should close your eyes. Step number 2, take a deep breath in, deep breath out. Step number 3, from the pit of your stomach, answer will come. That is called gut feeling. Have you ever had gut feeling? Gut feeling is the feeling from the gut. Actually, you know that something is right, something is wrong. Gut feeling. So, gut feeling will generally be correct only. So, step number 1, close your eyes. Step number 2, breathe in, breathe out. Step number 3, gut will tell you the answer. Your gut is telling option number 3. Step number 4 is reverse your gut feeling. So in tax and law, you should always reverse your gut feeling. That only will be the answer. Correct? So answer is 4. Guys, when the normal depreciation also is half, additional depreciation also should be half. So it is 7.5 plus 10%. Got it? Because additional depreciation also is for half year only, no? So it is 7.5% plus 10%. 17.5% you will get. Now follow-up question. I'll make you write, don't worry. Follow-up question. Next year what will be the depreciation? Is it 15% only, or is it 15% plus 10, or is it 15% plus 20 again? That is 100% wrong. Is it 7.5% plus 10? No, only this 1 year only 7.5. So this 7.5 is wrong. Is it 15 plus 10, 15 plus 20? Not possible. I already told you it is only in the year of put to use. This also is either 1 or 2. Answer 1. Take a deep breath in, close your eyes. Gut feeling 1. Reverse the gut feeling. It is 15% plus 10%. I went to Nirmala madam and said, Madam, last year it was half, 7.5%. Okay. Additional depreciation you told me to take half. Okay. But madam, additional depreciation actually is 20%. No. Last time you only made me take 10%. This year please give me the remaining 10%. Tatastu. Okay. She inserted a law. Correct? Isn't it logical? When you are telling me I am giving 20%, you should give me 20%. I may take it this year, or I will take half and half, depending on when I buy it. You are telling me 20% you will give, and you are giving me only 10% just because I bought it 180 days. That doesn't make sense. It's logical. It's really logical. When I am telling you I will give you extra 20% you take, you should either get 20% that year, or you should get 10 and 10. Correct? Just because I am buying it after October, you are depriving me of that 10%. I will not buy only then. I will buy next year. Nirmala madam wants you to buy more or less? More. So she has to give you that extra benefit. No. It's very logical. So basically guys, if you buy for less than 180 days, it is half rate. But that extra half, no, you can use it next year also. This is inserted in the law already. There is no confusion. It is not an interpretation. It's inserted in the law. Got it? Understood everyone? Write down now. Write down guys. Plant and machinery bought on or after 4th October. Plant and machinery bought on or after 4th October, less than 180 days. New plant and machinery used in factory. Used in factory, half rate, that is 10%. That's because it's used for half rate, no? Half years it is used. It's used only for half. That's why you will take half. But that next year you are taking 7.5% logic. Next year I am giving you 15%, no? No, you take 7.5. Next year I am giving you full 15%. No, I am not giving you 7.5. The normal depreciation, since used for half year, I will give you half. Next year you use it for full year, you will get full. Additional is an additional benefit that I am giving. So now you take, since it's half year, I will give you 10%. Next year you take extra. Ultimately it's the same. No, I am giving you full benefit. Anything is extra, I will give you extra benefit. But normal one, I cannot give you again next year 15 plus 7.5. That then it will become like additional depreciation again. So that is the logic. Benefit. Only for benefit they are giving you benefit. Otherwise this 10 should not have been taken. Your answer would have been correct. It's only 15 then. Only because it's an extra benefit, I cannot give you, I cannot say that I am giving you benefit and then put some other conditions. I cannot tell you, please take CA classes 10,000 rupees off. Then I'll say CA fees is 2 lakhs. Right? Generally if you pay, what do you say, it's like you're in the scam they'll do in the mall, no? 5,000 rupees off, you'll be very happy. Then they'll say minimum purchase 20,000. Have you seen those things? They'll put one small star. Flat 50% off, small star. You'll go very happy and you'll go there. You'll buy one kerchief, one socks and one belt. You'll go there to the counter, you'll say, no sir, minimum purchase 10,000 rupees. All this put together is 500 rupees. Please purchase 9,500 rupees more, then you'll get 50% off. Why will you buy? It's always like that. So when I'm giving you extra benefit, I should give without any conditions. But since you're using for 50%, 50, I mean 180, less than 180, take 10%. Next year take 10. Same only, no. This year, next year, ultimately you'll get the benefit. Write down, guys. Remaining 10% can be claimed next year. Remaining 10% can be claimed next year. Additional depreciation benefit allowed additional depreciation benefit is allowed for power generation undertaking. Remember guys, power generation undertaking can go for SLM and WDV, but additional depreciation you will get only if it is WDV. I already told you. Additional depreciation benefit allowed for power generation undertaking, only WDV method. Only WDV method. Next guys, manufacturing of, did you understand? Here you see this one, no, here power undertaking, no, it is both SLM and WDV, right? It is both SLM and WDV, but for WDV only you will get additional depreciation. If you are using SLM you will not get additional depreciation. So that is what the dialogue here is. Additional depreciation benefit allowed for power generation undertaking, it is only for which method? WDV method, only for WDV method. Last example, no need to write, I will explain, then you write down. So guys, I am a radio jockey, RJ. In my radio station, I have bought a new radio machine. I have bought a new radio machine. Can I claim additional depreciation? Nirmala madam is asking, what are you manufacturing? Are you understanding the logic? A service, but am I manufacturing something? No, it's actually a service. Or is it a service? I am producing a radio show. It's called PJs. In the full show, I'll be telling only PJs. Correct? So now the question is, I will tell Nirmala madam, I have bought all this new stuff here. Entire console equipment. I have spent 10 lakhs. Please give me 20% extra on this. She'll say, what have you done? What have you done? Have you done anything? No. Correct? So my question to you is very simple. What will you take it as? Will you take, is it manufacturing of anything? No. It went to court. Court said, when I am actually producing a show, it is manufacturing of a thing, because the law says you can manufacture an article or a thing. Am I manufacturing an article? No. But I am manufacturing a thing. Thing was not defined. They defined it here. What is a thing? A radio show is a thing. If I am having a printing press, I print some newspaper. Newspaper is a thing. I print magazine. Magazine is a thing. So they said, if you have asset for printing press, if you buy asset for your radio station, is it deemed to be manufacture of an article or a thing? Yes. Can you claim additional depreciation? Yes or no? Yes. Did you understand, guys? I bought a new computer for my radio station, 1.5 lakh rupees, high-end computer, 2 lakh rupees. And using that, I am manufacturing a show. Is it a thing? Yes. Last point, write on. Printing, publishing, FM broadcast, printing, publishing, yeah, everything. TV shows also. It's all, this is example, etc. is there, no? TV show is also covered. Printing, publishing, FM broadcast is treated as manufacture of a thing. Additional depreciation allowed. You are having a new show now and you bought a brand new camera. Can you use it additional depreciation? Yes. Possible. Whatever I am doing now, recording, I buy a new camera. Can I claim additional depreciation? Yes. Because I am creating a product. It is called manufacture of a thing. Thing is not defined only anywhere. Who will define? Court will define. See all interesting cases. Right? Yes. So take a break, guys. After that, we will solve a couple of problems. Then we'll see what to do. Class will be there till question 1.5. Guys, are you understanding everything? Yes or no? Yes. Any problem, please reach out. We are all here for you. I want each and every student here to clear the examination first attempt. Mr. Gopal is a proprietor. Question 15. Do you think in the exam they will give you calculate additional depreciation? No. So what should you open your eyes and see? What type of company is it? Is it a manufacturing company or is it a person engaged in manufacturing or what? Okay, yes. Mr. Gopal, I'll put it on the screen only, don't worry. I'm just telling you, I hope you have it. Mr. Gopal is a proprietor engaged in manufacturing. The moment you see manufacturing, should strike you what? Additional depreciation. And first thing you need to see in every question is he an individual? Is it a HUF? Is it a trust? Is it a company? Individual, Mr. Gopal. Mr. Gopal is a proprietor engaged in manufacturing of pipe business, furnishing the following particulars. Gopal, individual, proprietor, okay, so sole proprietorship, engaged in manufacturing business, additional depreciation. Opening plant WDV 1424, 30 lakhs. New plant and machinery purchased and put to use 86, full rate. New plant and machinery acquired and put to use on 15/12/24, 8 lakh. Computer acquired and installed in office premises. You will get half rate of depreciation, but you will not get half rate of additional depreciation. Yes or no? Yes. Compute the amount of depreciation and additional depreciation as per Income Tax Act. They are only asking you to compute depreciation and additional depreciation. So what is it? Opening WDV plus actual cost of assets acquired. First is more than 180 days, less than 180 days, asset acquired but not put to use, that is nil only, everything is put to use. Then you will give minus sales, sales is nothing, then depreciation. Depreciation will be two parts now, normal depreciation, additional depreciation. Normal depreciation will be, for some it will be 7.5%, for some it will be 15%, and additional depreciation also will be something. Will you try? Try on your own, then I will show you the answer. Please try, come on guys. Normal depreciation, and that to half or full? Half, perfect. Try guys, come on, all of you should try. I don't care if it is wrong, but you should try. Write in that proper structure, opening WDV plus actual cost of asset acquired, 1, 2, 3, 1, 1, 1 is acquired and put to use more than 180 days, less than 180 days, like that. So check it out guys. Here computation of depreciation and additional depreciation. Presentation should be like this. You will have to make 3 columns. One is particulars, one is plant and machinery at 15%, one more is plant and machinery at 40%. Because each one is a different block, correct? Each one is a different block of asset. So 15% is a different block, 40% is a different block. Opening WDV 30 lakhs and nil. Why nil? Because there is no computer bought during the year. 30 lakh is which one? Opening WDV given in the question. See, which question are we doing? See, 30 lakhs. Opening WDV 30 lakhs. Whereas computer nothing was bought, so nil. Add actual cost of asset acquired, put to use for less than 180 days. How much guys? Here they have given new plant and machinery 8 lakh. Here 8 lakh will come. Then computer was installed less than 180 days, 2-1. So that will come 3 lakh here. Put to use for more than 180 days, new plant and machinery purchase on 8 June. That will come here. Correct? Acquired but not put to use 58 lakh and 3 lakh. Less money is payable, there was no sale this year, nil nil. So 58 lakh and 3 lakh. For depreciation, you can do working note number 1 and close it. Right? So how to do the depreciation calculation? Normal depreciation out of 58 lakh. Where 58 lakh? This 58 lakh. In that, less than 180 days is 8 lakh, more than 180 days is 50 lakh. For 50 lakh it is 15%, for less than 180 days 8 lakh it is half. So overall how much guys? 8 lakh 10,000 rupees. I'll give you time to copy, I'm just explaining. Computer alone 3 lakh into 40% into half, 60,000. Additional depreciation I will get for this 8 lakh and 20 lakh. This 20 lakh and this 8 lakh I will get additional depreciation. So 8 lakh into 20% into half, then 20 lakh into 20%, overall 4 lakh 80,000. How did you get this 20% into half? Because this 8 lakh is new plant and machinery acquired and put to use on 15 December. So I will get half rate depreciation, 20% into half. Similarly, computer, this new plant and machinery 20 lakh, I will again get 20% additional depreciation. So 20 lakh into 20%, 4 lakh. So what is the total additional depreciation? 4,80,000. Did you understand this? Yes or no, all of you? How did we get 4,80,000 and how did we get this one? Everyone understood, guys? Yes, last bench there. Got it? Now you will have to write down in this particular. So presentation should be like this. And please note one important thing. We have to write notes in the exam. We need to explain to the evaluator that we know why additional depreciation is not needed for, not required for computer, or not applicable for computer. So two notes should be written. I'll make you write the notes. One is on additional depreciation and the other one is on computer. Why additional depreciation is not calculated on computer? These notes are very, 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 very important. We generally miss out on these notes and we miss out on important marks. Got it? First copy the presentation, then we will write the notes. We'll write the notes together. Copy the presentation, guys. It should be like this. Or if you have already done it, make necessary changes. Presentation also is very important. It should be like this. Copy. I will scroll down later. Copy. I just gave you time for you to figure out the answer. See, you would have done the answer, but you are not presented like this. Will you get full marks? No. My intention was to just ask you to calculate the figures. If you have calculated the figures but not presented like this, full marks you will not get. Sir, I was unable to calculate the figures also. No problem. We are here to learn. How many of you did not get the depreciation amount? You can raise your hand. It's okay. Did not, where did you miss out? Last. No problem. No problem. It's okay. We are all slowly learning. No issues. Now did you understand calculation? Both of you? Yeah? Yes. Copy. This should be the structure. Plant and machinery 15%, plant and machinery 40%. Put neatly, you should write like this. Full marks you will get. I again repeat, it is not about the answer. It is about the steps and the notes that you write. Here and there, if the figures are wrong, it's okay. Steps should be proper. Presentation should be proper. That's why we are solving questions. Presentation is important to the core. Done. So now depreciation part. Depreciation you can just say working note and copy the figures. Working note I'll show you. Depreciation always, instead of calculating there only and cluttering, always you can say working note. Working note now 1, and in that normal depreciation 8,10,000, for both the cases 8,10,000 and 60. Additional depreciation 4,80,000. Working note, guys, see, normal depreciation 58 lakhs, less than 180, more than 180. Less than 180 is how much? 8 lakh into 15% into half. Why? Because it was done less than 180 days. The remaining portion is how much? 58 lakh minus 8 lakhs. 50 lakhs will be full 15%. 60,000 and 7 lakh 50,000. It is 8 lakh 10,000 rupees. Done. Additional, and computer is how much? Obviously 3 lakh into 40% into half. Why? Because it was acquired only in January, no? That's why. Next, additional depreciation. Additional depreciation is how much? 8 lakh into 20% into half, then 20 lakh into 20%, 4 lakh. Done. Now, two notes you have to write. What are the notes? Last bench, did you understand now? Additional depreciation? Yes. Where had you made a mistake? Additional depreciation. You? Normal depreciation. Now it's clear? Okay. No problem, guys. It's okay. Make mistakes. No issues. So, two things you have to write now. What you have to write? You have to write notes. Always remember, notes are very important. You should write notes explaining the evaluator why you took something, why you didn't take something. So first note would be obviously for additional depreciation. So write down first point. You can say notes and write down 3-4 points. That's all, not much. Everyone clear till here? Everyone written down? Okay. Note number 1. Additional depreciation benefit. Additional depreciation benefit. Additional depreciation benefit is available. Additional depreciation benefit is available for new plant and machinery. For new plant and machinery acquired and put to use in the same year. Acquired and put to use in the same year. Acquired and put to use in the same year. Next point. If the new asset is bought, is put to use, if the new asset is put to use for more than 180 days in the previous year, for more than 180 days in the previous year, for more than 180 days in the previous year, the rate would be what? 20%. The rate would be 20%. The rate would be 20%. Full stop. If it is put to use, if it is put to use for less than
180 days. If it is put to use for less than 180 days, if it is put to use for less than 180 days, then rate would be half. Rate would be half, 10%. Rate would be half. How much? 10%. The remaining 10% can be claimed next year. The remaining 10% can be claimed in the next year. Remaining 10% can be claimed in the next year. Then the last point, there will be no additional depreciation. There will be no additional depreciation for computer used in the office premises. For computer used in the office premises. For computer used in the office premises. So yes, for office premises, guys, there is absolutely no concept of. That's all. These are the things that you should write. Then you will get full marks. Got it? See question number 17 and tell me, no need to solve, just tell me about third and fourth adjustment. Third, fourth, fifth. Just the adjustment I want to know. New machinery imported from Dubai on 12th October 2024. New machinery imported from Dubai. New, half rate of depreciation. Additional also? Additional you will get or not? Yes, how much? Half. So it is what percentage you will get? 17.5%. 7.5 plus 10%. Next one. Machinery imported from Dubai on 12/4/24, 9 lakhs. Machine had been used previously in Dubai and first time in India. No additional depreciation, but you will get normal depreciation. Full you will get 15%. That's all. Third one. New computer installed in the generation wing unit. That is a factory. Over. 10 minutes. Generation wing unit. Generation wing unit means what? That is a factory. How much? No, 2 lakhs for percentage depreciation. Yeah, 40% you will get. Will you get additional also? Why? You will get no. Why? Why won't you get? Manufacturing only, no. See, it's in the business of. See, generation and distribution of electric power, they are using WDV. Allowed or not? Yes. How much you will get? Yeah, 40 plus 20, 60% you will get. Right? Calculation will be the same. But here, how many computer is different? 15 is. So, same calculation. 3 columns. Particulars, plant and machinery at 15% will be one block. Plant and machinery at 40% will be the other block. So, what are the classes of assets? Plant and machinery, intangible, furniture, then building. But in that there will be different blocks. 15% will be a different block. 40% will be a different block. And actually motor vehicle is a separate block. Just because 40% is there, you can't club everything. Pollution control equipment is a different block. And periodicals and books is a different block. Computer is a different block. So whatever I showed you, that chart that we wrote down, that those are all different blocks of assets. Just because rate is the same, block will not be the same. You should see the nature of asset and the rate. Both we should see to understand the block of assets concept. Right? Next, last concept for the day, write down proportionate depreciation.
Proportionate depreciation. So guys, there was a company called Tesseract, okay? It was purchased by Reliance. If that be the case, Tesseract is gone. The amalgamation or merger happened on 1/1/2025, assume. Now the question is, Tesseract's assets will now become Reliance's assets. Who can claim depreciation, new company or old company? This was the problem, new or old. So income tax department has now told that the old company will exist till which day? 1/1/2025. After that, old company is gone. New company will be Reliance. It's absorbed into Reliance. So lawmaker says very simple, WDV compute normally for the full year, as if there is no change only. Depreciation also you compute for the full year as if there is no amalgamation or merger. But then you should apportion the depreciation based on the number of days. Till now, what did I tell? Number of days and all won't come, I told. But for amalgamation merger, number of days will come. Depreciation you compute normally for the full year. Then you apportion. Total number of days is 365. But in Tesseract, it was there for 275 days. April, May, June, July, August, September, October, November, and December. 9 months. If you count the days, 30, 31, 31 like that, it will be how many days? 275 days. So 275 days out of 365 days, Tesseract you should give. And for remaining days, January, February, March. January 31 days, February 28 days, March 31 days. For remaining number of days, Reliance you should apportion. So if they ask you anything with respect to merger, amalgamation, succession, what will you do? First calculate normally as if there is no change, and then apportion between what? Two companies. Apportion between two companies. Apportion between two companies as if there is absolutely no change, correct? As if there is absolutely no change. Write down a sum, guys. Write down. Barber Limited. Just write, just pointers you write. Barber Limited. Opening WDV 40 lakh. Barber Limited. Opening WDV 40 lakh. Next, new asset purchased. New asset purchased 14,40,000. For what did I say? 14,40,000 on 1st November 2024. On 1st November 2024. 1st November 2024. Okay. Next, Barber merged into Dabur. Babar merged into Dabur. Babar merged into Dabur on 1/1/2025. On 1/1/2025. That's it. Compute depreciation to be apportioned between Babar and Dabur. So guys, tell me one thing. See the timeline, you will understand. First, what did I tell you? First is as if nothing happened, you should compute. Opening WDV plus assets brought in. What is the asset brought in? 14,40,000. Less sales, nil. Then normal depreciation on 40 lakh. Additional, and then half rate depreciation on 14,40,000. Will you get additional depreciation also? Yes or no? Yes, new asset. Or it's okay. You can just say ignore additional depreciation. You can write because it will get too complicated. Ignore additional depreciation, okay? So normal depreciation, how much you will get, guys? 15% into half. That is, you will get whatever it is, 7.5%. Ignore additional depreciation, it will get too complicated. Leave it. Okay, that is normal calculation. Then I should apportion. Apportionment we'll see later. Can you do the normal calculation and tell me? All of you guys? Opening WDV, addition, opening WDV how much, guys? 40 lakh, addition 14,40,000, total 15,40,000, 54 lakh 40. In that, normal depreciation on 40 lakh, half rate depreciation on 14,40,000. Then you do the closing WDV. That's all I want. That is normal. Then we'll do apportionment together. Don't worry. Solve. Try. Right. How much? 47 lakh 32,000. Yes, correct. Others write down, guys. No problem, solve. Guys, but you should write the full structure. If you miss out on the steps, you will lose marks. Opening WDV 40 lakh, add actual cost of asset acquired. Put to use for more than 180 days. Put to use for less than 180 days. Not put to use. In that less than 180 days, it should be 14,40,000. Steps are very, very important. Cannot miss any step while writing. No shortcuts. 54,40,000. Less monies payable, nil. Opening WDV 40, actual cost asset acquired, put to use for less than 180, not put to use. Less monies payable. WDV for the purpose of depreciation 54,40. Then depreciation normal rate, how much, guys? 40 lakh into 15%, 6 lakh. Half rate 14,40,000 into 15% into half. I told you ignore additional depreciation, no problem. 1,08,000. If it was new machinery, then additional depreciation also will come. How much? 10%. Ignore. What did I tell you about apportionment? Depreciation must be apportioned between Babar and Dabur. In what? In the way they have the entire whatever they have, right? We'll see. Is this clear till now? Till now normal. Apportionment is what I have to explain. Till now everybody got the answer normal. It's as if nothing happened. This is the provision. Now we have to understand if the apportionment happens, how will it be apportioned? Guys, till here everyone got it? Yes. Now you see, I'll explain you. Check. Guys, 1/4/24 to 31st March 25. In that, tell me when did the merger happen? 1/1/25. So I can say these fellows used for 3 months, these fellows used for 9 months. Which asset? The 40 lakh asset, no? The 40 lakh asset which was opening WDV, that these fellows used from 1/4/24 to 1/1/25. This is Babar, this is Dabur. So Babar used it for 1/4/24 to 1/1/25, and these fellows used it for 1/1/25 to 31st March 25. So can I say Dabur used it for January, February and March? Tell me number of days. 90. These fellows, 365 minus 90, 270. 275 days out of 365 days was used by Babar. 90 days out of 365 days was used by Dabur. Yes or no? Till here is it clear? Yes. So the depreciation on 40 lakh, we have computed. How much? Depreciation on 40 lakh, 6 lakh. 6 lakh should be apportioned between Babar and Dabur. In what ratio? Basically 275 into 360, 275 by 365 is for Babar, 90 by 365 is for Dabur. Yes or no? Yes. So how much will it come? See here. We'll do that. Instead of doing that, we'll see. For Babar, Dabur separately we'll do. Okay. Now this is clear. Yes or no? What is the this thing? Depreciation amount? 6 lakh for Babar will be 275 into 365. 6 lakh for Dabur will be 90 by 365. Everybody with me on this? Yes. Now the other asset. Other asset, when was it bought, guys? 1/4/24 to 31st March 25. The merger happened on 1/1/25. Other asset was bought only on 1st November 24. So Babar used it for how many days? November and December, 61 days. These fellows used it for how many days? How many days? 90 days. Correct? Again, apportionment based on this only. Correct? Overall days is 90 plus 61, 151 days. In 151 days, Babar used it for 61 days. 61 by 151. What is the depreciation amount? 1,08,000 should be apportioned for Babar. 61 by 151. For Dabur, 1,08,000 into 90 by 151. That's all. What is difficult in this? Easy, no? So each asset wise you should apportion. Understood? Each asset wise means block wise, block and addition wise. Basically apportion based on the number of days of usage. So the answer comes like this, guys. copy. Depreciation at normal rate will be so and so, depreciation at half rate will be so and so. I explained the logic, this is the answer calculation. Done. So how much will be debited to P&L account of Babar? Last part 4,52,055 plus 43,629. Total amount debited is 4,95,684. The other one 1,47,945 plus 64,371. 2,12,316. Are you understanding, guys? This is the apportionment. Any sum they ask like this, calculate as if nothing has happened and then slowly do the other thing. You should apportion it based on the number of days. Last concept, guys. 3 lines are there, that's all, because actual cost will take minimum 3-4 hours. I'm not going to touch this. Opening WDV plus what will you do? Actual cost. What is actual cost? That for that discussion minimum 3 hours. No more, 4-5 hours. That later. Last part over. Write down unabsorbed depreciation. Very easy it is. Unabsorbed depreciation. Nothing is there. 4 lines. Unabsorbed depreciation. Unabsorbed depreciation. 2 scenarios I'll give you. I'll explain, then you can copy. I'll explain this. See, scenario 1, I'll explain, then you copy. Income is 1,000. Okay, expenses excluding depreciation is 1,100 and 600. What is the profit before depreciation? 100. Here, what's the profit before depreciation? 400. Then depreciation is added. Nothing. How can you add depreciation on a loss? It's not there. And here, depreciation will be 500. So guys, here also loss is 100. Here also loss is 100. But what's the difference? Here it is business loss. The expenses is more than income, hence it is business loss. But here it is actually a business profit. But because I charge depreciation, it has turned into a loss. Can I say depreciation is not getting covered under the profit? Yes. When depreciation is not enough to be covered by profit, that is called as unabsorbed depreciation. when depreciation of 500 is unable to be recovered from the profit of 400, that 100 is called as unabsorbed depreciation. Means the asset is not generating enough income. The depreciation on the asset is higher than income generated. That extra portion is called what? Unabsorbed depreciation. In the first case, expense only is more, profit only is not there. That is business loss. That is the biggest difference between business loss and unabsorbed depreciation. And in taxation, this business loss can be carried forward and set off for 8 years. Whereas unabsorbed depreciation can be carried forward and set off indefinitely, permanent. Did you understand? All of you understood? What is unabsorbed depreciation? There is profit, but that profit is not sufficient enough to cover depreciation. What is business loss? There is no profit. Expense only is higher than income. So copy this concept, then we will discuss then last part is this only, 3-4 points you can write and you're done. Write down guys. Unabsorbed depreciation concept. Scenario 1, scenario 2. Understood guys? What is unabsorbed depreciation? There is profit, but depreciation is not enough to cover that profit. What is business loss? In expense only is more than income. Now this business loss can be carried forward only for 8 financial years, whereas unabsorbed depreciation indefinitely. Can you use it for tomorrow? If there is a profit, can you set off this? Yes. So you see, carry forward and set off 8 years, this is indefinitely, and it can be absorbed, it can set off against any other income except salary, unabsorbed depreciation, whereas business loss, business need not continue also, still it can be set off. And even if return of income is not filed, unabsorbed depreciation can be claimed. It doesn't matter whether you have filed the return of income or not. That part more in a better way you will understand later, don't worry, just copy down. Because we have to do set off and carry forward chapter, we have to do return of income chapter, that time you will understand it in a very, very better way. Okay, now you can just understand the overview. Unabsorbed depreciation, what is the overview? It can be carried forward how long? Indefinitely. Business loss can be carried forward how long? 8 years. Should the business continue for it? No. You can set it off. Unabsorbed depreciation can be set off against any other income except salary. Should you file return of income to claim unabsorbed depreciation? No. The moment it is arising, you can use it for setting off. That's about it. Okay guys, let's quickly revise whatever we discussed till now, so that one revision will happen very quick, 5 minutes. Then we can continue. So guys, we started off with PGBP 29, 30 and all that we did. Then we went to, what do you say, depreciation. So we understood depreciation the other day. So basically there is two types of method. One is called single asset method and one more is block of assets method. In single asset method it's very simple, where you will take one single asset and then you will give the depreciation on that single asset. But then ultimately at the end of the year you will get each asset and then accordingly you can do the calculation. But in block method everything is considered as one. It's all blocked into one. So in the same we saw that if a single asset method, the concept is called terminal depreciation, that is if any asset is sold at a loss. But if an asset is sold at a profit, it is called as balancing charge. Whereas in a block concept, everything is merged into one. So in the next 2 days, you will get your Q&A. It's already gone for printing. So you'll get the Q&A, which has all the important question and answers. Question and answer vault. 2 to 3 days you will get for sure. So opening WDV plus actual cost of assets acquired during the year and then sale, destroyed, scrap value, insurance compensation, and WDV at the end of the year you will get, less depreciation as per the Income Tax Act, and finally you will get opening WDV of the next year. Here if any asset is sold or at a loss or a profit, if it is sold at a loss, less amount is subtracted. Since less amount is subtracted, more WDV. If it is sold at a profit, more amount is subtracted. More amount is subtracted means less WDV. So rather than adjusting it that year, it is going to be spread across many years. That is what the law says. Excuse me. What are the conditions, guys? SSE must be the owner, except the deemed building concept and except hire purchase also. And then whether it is registered owner or beneficial owner. Beneficial owner it should be. And lessor also can claim depreciation. And depreciation, is it ready to use or put to use? Put to use always. But there are two types of put to use: active use, passive use. So active use is normal actual usage. Passive use is it is on standby. It is about to be, I mean it can be used any time though. Even though it appears to be ready to use, it's actually put to use. Usage should be in India or outside India? Both. Classes of the entire thing is divided into classes of assets. What are the four classes? Building, furniture, plant and machinery, intangible asset. And intangible asset we have all these: patent, trademark, copyright, except goodwill. I told you the logic why goodwill was not considered to be a intellectual property from 2020 onwards. Till 2020 it was part of the thing. So will you charge depreciation on goodwill? Never. Whether it is purchased goodwill also, it is never. So in the books if you find depreciation on goodwill, as company law books 100% correct. Income tax books you need to remove because it is not allowed. Then what do you mean by this building? Building of course will include road, well, footpath, etc. Temple, mosque, church, recreational places also is entitled to depreciation. Land definitely is non-depreciable. Plant will exclude livestock, that is animals, and tea bushes. Theatre, hotel, etc. is building only. Plant functional test like pond, oyster farm, all those things will be based on the functional test. Then method of depreciation we saw, if it is relating to, what do you say, generation of distribution of power, it is SLM or WDV at the choice of the SSE. All other businesses mandatory WDV. Rates we saw, guys, there are 4 classes of assets, but in each class there are different blocks, right? So in building class we have residential building block, general building block, temporary building, 5%, 10%, 40%. Furniture 10%, intangible asset 25%. Plant and machinery also has different blocks. One is motor vehicle block of 30% hiring business, otherwise it's 15%. Ship block 20%, aircraft block 40%. Computer and computer software. Software is not included now. If it is separately purchased, it will be called as royalty, right? 40. Books and periodicals 40. Pollution control 40. Windmill after 1/4/2014 again it is 40. Oil well 15. Plant and machinery 15. These are all the various blocks in this particular class. Now rate, if it is put to use for more than 180 days, full rate, less than 180 days, half rate. So 1/4/2024 basically after 4th October basically half rate, before 4th October full rate. Then we saw the sums, all those things we discussed, and then we understood the new concept called additional depreciation. It is for which companies? Manufacturing or production of article or a thing, power undertaking, new plant and machinery it should be. Business can be old or new, but the plant and machinery must be what? New. 20% of the actual cost, only in the year it is put to use. No additional depreciation for the following: ships, aircraft, building, furniture, intangible asset, vehicle. Exception is crane and forklift. For this it is allowed. Then plant and machinery, second-hand plant and machinery, India or abroad, not to be taken. Any second-hand should not be taken. It should be used in office premises. It should be used in residential premises. Any plant and machinery for which 100% depreciation is already allowed. There are two sections: scientific research and specified business. In these cases, 100% of the asset, capital asset, will be allowed as a deduction in the P&L account. So in that case, this will not come into the force. Then plant and machinery bought on or after 4th October, that is new plant and machinery used in the factory, you will get half rate depreciation. Next year, will you get remaining half? Yes. Perfect. Additional depreciation benefit allowed for power generation, only WDV method. Printing, publishing, then broadcast, etc. is considered to be manufacture of a thing. Even though it is weird, you may feel how it is a thing, it is called as a thing. Additional depreciation and all we saw a couple of sums. So you solved the sum. Then we understood something called proportionate depreciation. So if a company is going into merger amalgamation, you have to compute it normally as if it did not go for merger amalgamation, and then the depreciation should be shared between the two companies in the ratio of number of days. So we solved that question, Dabar, Babar and all that, just to understand how it works. And then we did one more concept, unabsorbed. Last concept we did was unabsorbed depreciation. So unabsorbed depreciation is, there are two types. One is business loss, one is unabsorbed depreciation. In business loss, expenses are more than the income. But in unabsorbed depreciation, there is definitely profit. But depreciation is so much so that you cannot adjust the profit. So that part is called unabsorbed depreciation. Normal business loss is allowed to be carried forward for 8 financial years, whereas unabsorbed depreciation indefinitely. And no need for you to file the return of income also, you can aramse carry forward the unabsorbed depreciation. Whereas business loss can be carried forward only for 8 years, and for that you have to file return of income, all that we'll see later. So all that we saw in the previous class. So in the today's session, my dear friends, we need to understand the wonderful concept called actual cost. What do you mean by actual cost? So write down the heading, actual cost. We solved sums also. Did you read the material? Any doubts? No doubts? Yeah, I told you once we attend the class, then you open the material and read, it becomes very, very simple. An open challenge, you open any book, including institute study material. Now you will find that in a structured format. Institute study material unfortunately is not structured. So we have done it in a structured format. I'm just saying, no need for you to go and read the institute material. I'm just saying, even if you open that and read, you will be able to relate, is what I'm saying, because we have designed the material in such a way. Institute is not, what do you say, they keep on amendments and all, they'll come late. So don't sit and study the institute material. My material is 100% amended. I've taken from institute material only and done it. So it is like a very structured, scientifically designed version of the institute study material. So do not touch that institute material, because whatever you have in your hand only is institute material. So do not worry about it. Yes, you're right. So because the amendments, now it comes once in 6 months there, they don't amend properly, then suddenly they will release something in RTP. So instead of searching all those things, you study this book. Apart from these, whatever is there in the book, if something extra comes, then we will do later. Sometimes they ask something extra, they will give it through RTP, revision test paper. Before revision test paper, they'll give you, these are the amendments applicable for this exam. That time when it comes, we'll see, don't worry, we will solve those RTP questions. But mostly everything will be there only, no tension. So unabsorbed depreciation we did, guys. Now write down actual cost. Actual cost. It's called actual cost. 43.1. Because guys, in the WDV we have always seen, no? First one is what? Opening WDV plus actual cost of asset acquired. What do you mean by actual cost? Example, if I bought an asset for 10 lakh, government has given me refund of 1 lakh. Should I take at 9 lakh or 10 lakh? Government grant, have you heard government grant? Yeah, I have bought an asset for 10 lakh, government has given me benefit of 1 lakh. So should I take 9 lakh or 10 lakh? That is question number one. Second one, I have bought an asset for 10 lakh, GST I have paid 18%. So my asset is 11 lakh 80,000. So in my actual cost, should I take 11 lakh 80,000 or should I take 10 lakh? I don't know, right? So these are the problems. I have taken a loan from a bank and then bought an asset. Interest also, should it be added to the cost? I have bought an asset worth 10 lakh by taking a loan. Interest I have paid 1 lakh. So actually to buy the asset, I have purchased it at 10 lakh plus 1 lakh interest I have paid to repay the loan. Now should I take my cost as 11 lakh or 10 lakh? Those are all the doubts which were raised by people. Valid doubts, no? Then I have taken a loan from abroad. I have bought an asset from abroad actually, brand new asset. There I have to pay in dollars. When I bought the asset on credit, the dollar rate was 80 rupees. But when I was about to repay, the dollar rate was 86 rupees. Which means I have to pay 6 rupees more to buy that asset. So should I increase the actual cost by 6 rupees or not? All those are valid doubts which people asked Nirmala madam. That's why she came out with this section 43.1. What do you mean by actual cost? For income tax purposes, what is actual cost? Right? So write down guys, actual cost. 43.1. So write down one by one. First one, purchase price. First one, purchase price. Purchase price is the rate at which I purchased for. Whatever rate you see, purchase price is number one. Next, subtract. You write down the structure, I will explain one by one. Full structure you write down, I will dictate. First is purchase price. Next, less, GST. Everything will explain one by one. Less GST. If ITC is availed, ITC means input tax credit. ITC means input tax credit. Since GST is not started, you will not know this, but some of you have worked in firms and all, you will know, right? Yes. So purchase price less GST if ITC is availed, if input tax credit is availed. Next, second one, subsidy. Subsidy means if government gives something, no, that is called subsidy. Subsidy. Third one, cash or other disallowed mode of payment more than 10,000 rupees. Cash or other disallowed mode of payment more than 10,000 rupees. Fourth one, Forex, decrease in liability, foreign exchange. Forex, decrease in liability. I'll explain everything, don't worry. Just write down this structure. Each and everything we'll discuss. Right? So GST if ITC is availed, subsidy, cash or other disallowed mode of payment, Forex, decrease in liability. Next, interest on loan, add. This is all subtract guys. From the purchase price, 4 items should be subtracted. 4 items should be added. 4 items should be added. 4 items should be subtracted. Last bench written it. Sure. 4 items should be subtracted. 4 items should be added. These are the additions. These are the additions. After you write down only, I'll explain everything. First one, interest on loan till asset is put to use. Freight, insurance, etc. Installation expenses. Installation expenses. Fourth one, Forex, increase in liability. Forex, increase in liability. Forex, increase in liability. Alright guys, nothing you would have understood, great. We will do it now, one by one. I just asked you to copy it, okay. This is called as the actual cost. Now guys, GST, right, GST. So me and you forget, we have to ultimately pay GST on everything. Let's think about business. Let's take KSA for example, right. So you would have paid the fee, let's say you have paid 1 lakh rupees fee, assume, right, 1 lakh rupees fee. KSA has charged you 18,000 GST. How much you are paying? 1 lakh 18,000. For you, nothing, no benefit. You have to actually from your pocket pay 1 lakh 18. You forget about you. We are thinking about, now we are thinking about KSA Advait and we are thinking about the teachers. Any teacher or anybody who earns, a teacher here is in the business only, it's not a profession, it's a business, he's of course into this teaching. Any person, by the way, if he is earning more than 20 lakh rupees in his personal bank account, he has to enroll for GST. He has to pay GST. Now this 1 lakh rupees, let's say you are collecting from you, okay, and let's say I am paying some teacher 50,000, I am paying some teacher 2 lakh rupees. He is also charging GST. Obviously, no, you have to pay him GST. He is charging 18% GST. So what is 18% of 2 lakh? 36,000. So guys, KSA has to pay 2 lakh 36,000 to the faculty and they are getting this much money. Correct? Now, the thing is, there are two types of services. Your IDT teacher will explain fully. I am just giving you the gist of the story. So this is the normal service stuff. So I am asking, one is called output service, the service which you give. One more is service that you take, input service. For KSA, forget about you, for KSA, what is the output service? Basically, whatever money that they collect from you is called the output. This one. So ultimately, final end user would be you only, no? Each student. So for that, KSA will be charging GST. So they have to pay the government how much? 18,000 rupees. So they will take income as 1 lakh 18 or income as 1 lakh. So when they are bringing the money, so 1 lakh 18 is coming into the bank, no? So bank account debtor 1 lakh 18. 2, what will they take? What income? That is the fees, correct? Fees is 1 lakh only I should take. Then to GST payable, that is not my expense at all, that is my payable liability. I am collecting from you and paying to the government, that's all. Is it my expense? No, it is my liability. So I will write 18,000 payable. But guys, like that many people would have gone 18, 18, 18, 18. This will come up to some 1 lakh rupees assume, or 1 lakh 80,000. 10 students join means GST payable will become 1 lakh 80,000. In providing this service, I will take the help of a teacher. Teacher is input service. For KSA, teacher service is the input service, and ultimately output is what I give you guys, students. So from students I am collecting 18,000, that has become 1,80,000 rupees. So 10 students are there, 1,80,000. And for that 10 students I have to pay the teacher 2 lakhs. So overall 36,000 is what I need to pay the teacher. Now tell me, I am collecting from you and paying to the government how much? 1,80,000 I have to pay. And I have to pay the teacher also from my pocket how much? 36,000. This is the input, this is the output. I have collected from the students and I am remitting to the government 1,80,000. In addition to it, I have to pay to whom? To the teacher 36,000. So I will pay to the teacher 36,000, that because he has to do the filing and all those things. Now the question is, when I am paying Nirmala madam, should I pay her 1,80,000 or should I pay 1,80,000 minus 36? Should I pay 1,80,000 full to Nirmala madam or should I pay 1,80,000 minus 36? So I will go to Nirmala madam and say, madam, I have paid that teacher 36. That teacher anyway is going to pay you only. Yes or no? Why we will keep it in your pocket? No. That is also GST, no? So for him also it will be GST payable. He will anyway remit to you. So I am going to Nirmala madam and say, madam, from my students I have to pay you 1,80,000. But in that I have already paid 36,000 to the teacher, and teacher has anyway paid it to you already. See the proof. Proof I should show. See the proof. So madam, can I please get that credit? What credit it is called? Input tax credit. Why input tax? This is an input service. Can I get what? Input tax credit. So Nirmala madam say, yeah, correct. You are showing the proof that fellow has already remitted 36,000. No problem. You have to pay 1,80,000 and you have already paid 36,000 through somebody else. So how much should you pay? 1,80,000 minus 36,000 you pay and close it. This is called concept of input tax credit. Now the question is, this is for service. What about asset? I need to pay for asset also, no? KSA buys a projector, AC, everybody will charge GST. Now should I subtract or should I add is the question. Is it, if I buy an asset worth 1 lakh, should I make my actual cost 1,18,000 or should I make it 1 lakh? Since credit is being taken, should I take depreciation benefit also on that? No. If I make it 1,18,000, won't I get depreciation benefit? Yes, on extra 18,000. But that 18,000, have I given it to the government or I am using it? Giving it to the government. I have taken credit also on that. Correct? So in this entire thing, if I am buying an asset worth 1,18,000 rupees, I cannot take depreciation benefit on that extra 18 because I have already availed the credit. Means I have already subtracted it somewhere later. There also benefit, here also benefit, won't work. So Nirmala madam says, if the purchase price is 1,18,000 rupees here, purchase price, how much I paid for that asset? 1,18,000. You should subtract the GST if you have availed the ITC. How much have I availed? 18,000. So 1,18,000 minus 18, you should show it as 1 lakh is what she is trying to tell. This is if credit is available. In some cases, no. For example, if I buy vehicles, Nirmala madam says at any cost you cannot take credit. The rule only they have given. You cannot take credit if you buy vehicles, which means what? You should pay it from your pocket. So today if I buy a vehicle worth 10 lakhs, I will pay 1,80,000 GST. So how much is the value of the purchase price? 11,80,000. Minus 1,80,000 can I do? No, because Nirmala madam says that is called as a blocked credit, that you cannot take only credit, that you learn in GST. Some things you can take, many things you cannot take. So now what will be my purchase price? 11,80,000 or 10 lakh? 11,80,000, because you can take depreciation on that extra 1,80,000 because government did not give you credit. So in simple words, if ITC is available, then you should subtract from the purchase price. If ITC is not available, then you should add it to the purchase price and take benefit of depreciation. Did you understand this? If ITC is available, more in depth your GST teacher will teach. This much basic is more than sufficient. So for every output service, there will be an input service. Output service also is GST, input service also is GST. Can you set it off? Yes. Who are the losers but end customer? You. What input you will take? Nothing. Your output is how much? How much you are paying from your pocket? 18,000. What you are getting? Nothing. So GST is a killing burden for the end user only. Middle, all these fellows can take benefit. So KSA unfortunately is charging 18,000 extra from you. But is 18,000 an expense for KSA? No. From all the input services that they take, they will adjust the output service. It is set off. Very simple. Is it clear? Everybody? Yes. So first part is purchase price. First, if ITC is availed. If ITC is availed. So write down the first point, guys. Here. Simple example. I'll explain and then you can copy. GST 10,000, GST, the purchase price 10 lakh, GST 1 lakh 80, 11 lakh 80 is the asset. GST, if input tax credit is allowed, then subtract 1 lakh 80 from the cost. If input tax credit is not allowed, that is vehicles. That vehicles is called as block credit. Cost plus GST. Full amount should be taken as purchase price. Okay. For some things it is allowed, some things not allowed. Everybody with me understood? Yes. Copy. Done, guys? Any doubt? Yes. Second point, write down subsidy. What is subsidy, guys? This is like a refund from government. So write down subsidy. Subsidy is like a refund slash benefit from the government or any entity. Subsidy is like refund slash cashback, refund slash cashback slash benefit from government or any other entity. From government or any other entity. So they will tell you buy a set worth 20 lakh, I'll give you 1 lakh cash back. So your actual cost will be 19 lakh or 20 lakh? Answer. 20 lakh ka buy an asset, 1 lakh cash back. 19 lakh or 20 lakh? 19 lakh, that's all. So hence should be reduced. Hence it should be reduced from the government / other entity, I told you. Hence it should be reduced. Done? Very simple. Next tries. Third point, write down. Third point, that is just write 3. Cash payment more than 10k. Cash payment more than 10k. Cash payment more than 10k. Now tell me guys, if I pay cash to buy AC, AC is capital asset or revenue expenditure? Capital. One is if I pay more than 10,000 in cash to buy AC. One more is if I pay more than 10,000 as salary for you. You are my employee, I am paying salary more than 10,000 in cash. To stop cash transactions and to stop the unnecessary usage of cash. If you see, after the UPI thing came, we all use, do you carry cash? First of all, very rare, no? It has fully changed. Even one vegetable fellow, 2 rupees, 3 rupees, 5 rupees vegetable, you can swipe you can use UPI. It has become so awesome now. We don't carry cash only, right? Everything has been digitized. But think about it, the government doesn't want more and more cash transactions. So they are saying, they're telling the companies also, boss, if you are spending more than 10,000 rupees in cash to buy an asset, I will subtract from the asset. Imagine, I bought an asset worth 1 lakh. In that 40,000 I paid cash. They said, why did you pay cash? Please pay through bank. I need to track your transactions properly. Since you did not pay through bank and you did not follow my instructions, your asset value, I will not allow it to be 1 lakh. I'll allow it to be only 1 lakh minus 40, 60,000. Crazy. This is purely to do what? To discourage people from spending cash. Everything should be tracked to the bank account. Don't do it through cash. Did you understand? This is for the asset. What about expenses? I paid you salary 15,000 in cash. Will it be allowed to be debited, or if it is debited, is it added back? Is it allowed to be debited, or if it is already debited, will it be added back? Means, is it a genuine expense? Yes, but I paid through cash. Government said, I'll punish you. More than 10,000, any expense cannot be paid in cash. If you pay, even if it is genuine, what will the government do? Add back that expense. So if you add back the expense, what happens to the profit? Increases. And how much tax you have to pay? More or more or less? More. But can you go and argue, sir, it's genuine? Yeah, it's genuine, but you should not pay cash. You should pay what? Through bank. This is the government's way of doing what? Ensuring cash dealings are less. So can you pay more than 10,000 to buy an asset? No. Can you pay more than 10,000 as an expense? No. Both are covered. Both are banned. But now we are talking about asset or expense? Asset. So asset part is covered in 43(1). They are saying if you pay cash, subtract it from the actual cost. Means asset value will be less. Asset value will be less means depreciation will be less. Depreciation will be less means profit will be more. Profit will be more means more tax. On the other hand, expense. If I pay more than 10,000 expense, they will say if it is debited, add back. If you add back, profit will be more. Tax will be more. In both the cases, you are caught. So cash expenses, cash expense also can't be more than 10,000. Payment in cash to buy an asset also can't be more than 10,000. This is the law. Understood, guys? So I'll give you the chart. You see, I'll explain again. Copy. See, cash payment more than 10,000. Revenue expenditure disallowed. If debited, please add back. For that different section, guys, we'll see that later. 40A3, 40 capital A3, because I'm talking about expense. But for capital expenditure, subtract from the cost of asset. Subtract from where? Cost of asset under 43(1). So we are doing the asset portion now. So if you have actually paid cash more than 10,000, you should subtract from the asset. Understood? Understood? Okay, copy. Copy down. Have we done, guys? Done? So revenue expenditure. Now, I simply told cash payment, but the language used by law is otherwise than account payee check, or bank draft, or NEFT. Other than account, they have never told cash. They have told other than account payee check, or bank draft, or your usual modes of RTGS, IMPS, UPI, Paytm, UPI basically, Google Pay, Phone Pay, all those things is allowed. What is not allowed? Other than account payee check. They have never used the word cash. They have used other than account payee check. So my question to you is, if you pay by, what do you say, cash, that is definitely subtracted from the asset. What if you pay by, and again, more than 10,000 rupees, is it in a day or is it in many days put together? Is it per transaction? What if I pay one person only 2000, 2000, 2000, 6 times in a day? That is one question. Second one, what if I pay you 5,000, 5,000, 5,000 every day? Overall payment is more than 10,000. These are the things that they ask in the exam. Simply don't blindly, let's not study more than 10,000. No. 10,000 where? Is it to a person? Is it to a person in a day? To the same person across many days, is it okay? Asset is 60,000 rupees. I will pay 5,000, 5,000, 5,000, 5,000 every day in cash. 12 days. Is that okay? Next, asset is 60,000. I will pay 8,000, 8,000, 8,000 like that to 5 different people. Or 10 different people. 80,000 is the asset. Is it possible? What do you think? So that is what we need to know. Is it cash payment in a day? Yes, guys. It is what? Cash payment to a person in a day. So when you're writing third point, I mean this, I can say note. Note, what is a note? What is barred? Cash payment to a person in a day. Cash payment to a person. A person means single person in a day. Cash payment to a person in a day. Means what? If I pay to different people in the same day, less than 10,000, is it allowed? Yes. Secondly, to the same person on multiple days, I will pay 5,000, 5,000, is it allowed? Yes. Law cannot provide for multiple circumstances. Law only tells one thing. Can you break that by paying 5,000, 5,000, 5,000 like that different days? Yes. So if you see here only in the main thing, the law is very clear on this, guys. Sorry, here. There. See, payment to a person in a day exceeds 10,000 and it is made otherwise than by account pay check, account pay bank draft or use of an electronic clearing system, NEFT, IMPS, RTGS, these are all the bank transaction system, UPI, BHIM, all these payments are allowed. What do you mean by otherwise than? When it is not account pay check, it has to be cash. That's why in simple words we use cash. But what is the legal language? Otherwise than account pay check. Next question is, what if I give a cross check of 15,000? CA Foundation knowledge, tell me. Negotiable instrument, that was there or not there? Sir, we left it in choice. No. What is the difference between account pay check and cross check? An account pay check is account pay. Cross check is crossed. An account pay check is other than cross check. Cross check is other than account pay check. Tell me guys, what's the difference between account pay? That's what I told you. What you learnt in CA Foundation is full waste only. Because like on time pass, you would have studied and come. It's okay. Leave that. Who cares? But your past, no, that's the big thing. Right? Yes. Now tell me. And direct entry fellows, I don't even have to tell you anything. BCom, how we passed, we only know. Correct? Stories, songs and all you would have written. I wrote songs and all in my exam, I remember. Yeah, we can write, no problem. BCom, it is based on weight of your answer sheet. They'll put that weight in a weighing machine. 600 grams, 60 marks. 675 grams, 68 marks. Correct? That is Bangalore University level. Nothing can be done. So you you forget about whatever you studied before, but at least if you remember or if you know, difference between account pay check and cross check, what is it? Secure? Account pay check is not secure? Did you have that types of crossing and all that? Okay, no problem. It's okay. I mean, it's not in the syllabus, sir. It's there, no? No? I don't know. Maybe. You have to tell, I have to say yes only, no choice. Correct. Yeah, actually I think it's not there. But basics are there, no? Types of check and all was there, I guess. Or types of negotiable instruments were there. Oh yeah, crossing is, you're right, crossing is not there. Anyway, I will tell you difference between account pay check and cross check. Guys, if it's just a cross check, no? If I simply give a check like this without doing any crossing, I can go to the bank and say, look, this my name is written, give me cash. But nobody does that. That's why they will do two parallel transverse lines like this. If I put two parallel transverse lines, it is called as cross check. And if there is a cross check, no, it means it should be only, no cash can be paid, it can only be given via bank account. So if I say pay PJ, my name is written, and if it is crossed, it means it should go only to the bank account. It cannot go through cash. Means if I go to the bank and say, give me cash, they'll say, no, I'll deposit it in your account. In account pay check, they will write the word account pay. What's the difference between the two? Sorry? No. In both the cases, you cannot pay cash. Account pay means, again, that also is bank account only. Cross check also bank account, account pay also bank account, then what's the point? Which one? Which one? Me only, okay. Here?
Correct answer, but ulta. Correct only. The logic is correct, but reverse. In account pay check, no. If it says pay PJ, pay PJ. Now PJ can endorse it to somebody. I can say, I don't want the payment, pay somebody else. That somebody else can say, I don't want the payment, pay somebody else. So the problem is, in an account pay check, even though cash is not given, sorry, in a normal cross check, even though the cash is not given, but it can go to anybody's bank account by a process called endorsement. If I say pay PJ, I can sign behind the check saying that please pay this money to somebody else, Mr. Rahul, and I can sign. Rahul can say, no, 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 don't pay me, pay it to Mr. Rohit, and he can sign. So a cross check can be endorsed and transferred to many, many people. Whereas in account pay check, if I say pay PJ, that's it. It cannot be endorsed to anybody else. It has to go into the bank account of PJ, nobody else. So the purest form of banking, where the money goes to that person only, will be account pay check or RTGS, NEFT, IMPS. All that I am transferring to your account only, no? Always. In Google Pay, I'll transfer to somebody else's account, no? You will give me your number, no, I'll transfer. Whatever number you give, I'll transfer. So my question to you is, government says even the cross check is like cash only at the end of the day. That's why they use the word what? Other than account pay check. They never say other than check. So if you give like cross check, is it like a cash? Yes. It's like cash. Got it? Because in an account, in a cross check, okay, cash is not given handed over, but it is actually transferable to any account you want through a concept called endorsement. Is that allowed or not? No. That's the beauty. So what is not allowed? Cross check is not allowed. Cash is not allowed. Everything else is allowed. One example I've written already. I will show you, then you can copy that. Listen to the example. Did you understand this, guys? All of you? Yes. Example you see, guys. I've given an example, you see. Asset is purchased for 10 lakh, okay? In this 10 lakh, 5 lakh is through NEFT, RTGS, IMPS. Allowed or not? Yes, allowed. Green color. 30,000 is UPI. Allowed or not? Yes. Then 1 lakh cross check he has given. So should I take that? No. Why? Cross check is like cash. Cash 10,000 he has given for 20 days. Allowed or not? Yes. You cannot give to a person in a day more than 10,000. So if I have given to the same person 20 days, no problem. 70,000 I did through Beam payment. Allowed or not? Yes. One day I gave 5,000 rupees 20 times to the same person. 1 lakh. Allowed or not? No. So if I ask you what is the asset value that I should take in the books, only the green items I should take. So if there is 10 lakh, I should subtract 1 lakh and 1 lakh. 8 lakh it will be. If they have given in the question 10 lakh is the asset and the breakup of the payment they have given, what should you subtract? Cross check and this one. Because why? Paid one day 5,000 rupees 20 times. So if they give in the exam so many things, 7 lakh, 8 lakh, 10,000, 9 lakh, 10, all those things. So 3 types of check are not covered. Basically 3 types if they give in the exam, you should subtract. Bearer check, cross check and cash. Here bearer check is deemed to be cash. Cash is cash only. Cross check. Bearer check means what? Whoever has the name in the, whoever goes and deposits to the bank saying that I am the bearer, I am holder of check. You see your money also, no? In your money, that the one dialogue is there. Promise to pay the bearer sum of 10 rupees, sum of 500 rupees. RBI governor is telling whoever brings this to the bank and say take this, it means RBI will value it to be whatever it is written on the note. Is it your money or somebody else's money? I don't care. If you, bearer, whoever holds it, he is the owner of the money. So bearer check, cash and cross check. These 3 things are covered or not covered? Not covered. Means should I subtract or add? Subtract from the total asset cost. Understood? Same logic for expense also. I told you, no, 40A3. If I am paying salary more than 10,000 rupees to a person in a day more than 10,000, disallowed. If I am paying via cross check, disallowed. There also same logic. Here it is asset, there it is expense. Logic is the same. Understood? Copy. Example for what, guys? This 40A3 and basically that 43(1) both. Written down? All done? Simple, guys. Bearer, cash, cross check. Very, very simple. All these three things to be kept in mind. So you have written down which one here. First one is GST, subsidy, cash. Now this 4 and 4 here to be read separately. 4, I mean, sorry, to be read together, sorry. Forex decrease in liability, Forex increase in liability. Means what? Very simple. I have taken a loan of 10 lakh, $1 lakh dollars. $1 lakh dollars I have taken the loan. Or I have taken an asset on credit, $1 lakh dollars. At the time of taking the loan, the amount was 80 rupees. $1 was 80 rupees. So if 1 lakh dollar I have taken into 80, it is how much? How much? 80 lakh. That's fine. I have to pay 80 lakh. But at the time of repayment, let's say $50,000 I have to pay in 6 months. At the time of repayment, while paying that $50,000, 80 rupees has now become 90 rupees. Correct? So 10 rupees extra I have to pay, which means $50,000 into 10 rupees extra is how much? 5 lakh rupees extra I have to pay. this 5 lakh extra will be added to the cost or subtracted from the cost? Obviously added to the cost. So I have already repaid $50,000. Remaining $50,000 I have to repay 6 months later. That time when I am repaying, 80 had become 85. Now 85 has become 75. But anyway, initially I had recorded it at 80. But now that has fallen down to, let's say, 78 rupees. It has fallen down by how many rupees? 2 rupees. I recorded everything at 80. I recorded everything at 80. 80 became 85. So I added 5 rupees. Now that same 80 which I have recorded has become 78. 2 rupees decrease. So my liability will increase or decrease? Decrease. So what should I do? Decrease 50,000 into 2. 1 lakh you decrease. So ultimately I bought an asset and showed it for 80 lakh. And now suddenly during the course I have to pay 50,000 into 5 rupees more or 10 rupees more, whatever I told you, that will be added. Then now it has again asset value has decreased by 2 rupees. So 50,000 into 2, 1 lakh rupees I have to decrease. So this is called Forex increase and decrease in liability. So I have to increase and decrease accordingly. Understood? Did you understand? Very simple. There is nothing great here. But that's the logic. So in the exam, if they ask you, at the beginning of the year when you recorded, it was 80 rupees. During the year, you repaid $20,000, of which it had, by that time the cost had increased by 3 rupees. So the 20,000 into 3 you have to add back. And then again, later they say one more 20,000 and you are giving, your recorded was 80, but now it's showing 77. 3 rupees you should decrease. What you recorded, that only you should take as a base, increase and decrease. From that 80, where it has gone? It has gone to 85. Even if it has gone to 83 also, 80 has increased to 83, no? Because you have recorded at 80. So 3 rupees you have to increase. 80 should be the base. Don't compare 80 has become 85, 85 has become 83, don't decrease 2 rupees. What have you recorded at 80? 80 has become 85, 5 rupees increase. Then it has reduced to 83, but still it's an increase of 3 rupees from what I have recorded. And then it has become 79, 1 rupee decrease. This is called Forex increase and decrease in liability. Understood, all of you? Yes or no, guys? Yeah. So today is festival also, no? Yeah. Thank you, guys. Same to you. Unfortunately for CA students, there is no Sankranti, no Yugadi, no Deepavali, no Christmas, no New Year. Only thing we know is previous year assessment year. That's all. Correct? Nothing else. But yeah, anyway, happy festival. We'll also leave. That's why I didn't want to keep it for a longer time. I know festival, at least food and all, you can go eat. No problem. So I think the office also will give you here and there off whenever the target is met. So that's why yesterday you got an off, because because we have already seen the schedule. It's very, very smooth. I'm very happy about it. Touch wood. Let it continue like that. So we have kept it in such a way that by September end, hopefully 99.9999%, September end only it will be over. So you have October, November, December, 3 months to study, which is awesome. In that 1 month will be all your SAP exams and all those things. 2 months properly. This is the best way to do. Let's ensure that we follow this. I've seen the actual full schedule now. As it looks that by September end it will be over. By taking like this only, 8 to 1 every day, not increasing. Here and there, some classes, as I told you, will be till 2 to 33, but it will not be like last time. Last time was 8 to 6 and all that. That and all will not be there. Don't worry. Because last time we followed the other way of spoon feeding and telling Papa to you, all of you. Papa, they are studying so hard. Let us give 3 hours class, 4 hours class. Let's give 1 day off. That and all is not there this time. So on a festival also you are coming and sitting. Correct? Awesome. You guys are very sincere guys. You will definitely pass. So just keep at it. Do not miss any class. Even if it is late, it's okay. Come. Festival. All your parents will understand. They will understand always. But the thing is, when you are doing CA, it's like the entire family doing CA. True, yes or no? It's your family like doing. They're like, what is your program today? This stupid fellow is called on festival also, 8 a.m. to 12, you will tell your parents. It's okay, go attend the class. Then, okay, we are supposed to have the puja and all at 9 a.m. Since you are coming late, we will do later only. So then you will say, what about Rahu Kala? You said, no Rahu Kalam, you are the only the Kalam. Alright, you come, whatever column you come, that only will be the actual column you come. That basically the family changes according to you. That's the truth. 4 years of your life, they'll also do CA. Just that you're adding one more thing, you're writing the exam. They are not writing the exam. So, from CPT days only it begins. They will change their entire thing according to you. So, the least we can do is give those 2 letters before your name. That's all they want. And also attend classes sincerely. Do not miss any class. You will 100% pass. If you miss class, gone. So, when I was doing CA, there used to be one teacher called Jayakumar sir. Whatever I studied in law and taxation to understand the Bear Act and all, he only taught. Brilliant teacher. Correct? He used to come from Hyderabad. 400 students in a small room. No AC, nothing. Now students are like, no, I want AC, I want this. It's okay. Times have changed. During that time, 10 years ago, it was the teacher is king. Now students are kings. Of course, the times have changed because whatever students want, we should do. In the sense, if you are comfortable, we should see the comfort. There, no comfort. Stupid benches, and we had to sit on the ground till here. Small room, guys, 400 people, no space. Ground and all we have sat here like this. Teacher is here, we are here. I'm not joking. So that sir, no, little mental fellow I was. Brilliant sir, but very strict. He only used to call, I am mental fellow. Like the very funny guy. So sir used to come at, the classes used to be 6:15 to 10:45 without break. That to law. 6:15 a.m. to 10:45 a.m. Almost what? 4.5 hours without break. No break. No 5 minutes breather also. He used to come at 6 a.m. sharp, guys. Now when I tell 7 a.m. will start, no, I only have to come and teach myself. Nobody will come. Correct? So 6 a.m. and I was staying in South Bangalore. That class used to be North Bangalore. So 6 a.m. means 6 a.m. And that sir was so strict. If you come at 6 a.m. 1 second, he'll not allow. Every day he'll come at 5:45 and he will sit in here. He used to sit. He had one huge stomach. Mic used to be placed on the stomach. Imagine. And used to wait from 5:45 to 6. Jayakumar sir used to wait for students to come. He will not tell anything. Nothing. So still 6 a.m. nothing. 6 a.m. 400 students would come. Then he would say, good morning, my dear students. With a very thick voice he had. That's it. Pin drop. Have you heard pin drop silence? If you drop a pin, you should listen to, you should hear it. 6:15, I mean 6 o'clock sharp start, 6:15 actually, sorry. 6 o'clock used to come till 6:15, nothing. 6:15 used to tell, good morning, my dear students. Then if you say, I want loo break, no, if you go, get out, don't come, I'm not joking. Crazy guy. 6:15 a.m., 1 second late if you come also, he'll not allow only. No mercy, not allow. Get out. Don't come inside, leave it. Don't, you stand there only. Used to make you stand for 1.5 hours and all. Crazy guy. So, but very good teacher. He passed away a couple of years ago, maybe more, 3-4 years ago he passed away. Before COVID only he passed away actually. Sad. But anyway, so the thing is, very good teacher, very, very good sir he was. Now why I am telling you this is, one day I was riding the bike in the morning and there was oil spill on the road. I didn't see. I went and nicely skid. You know, watching in the movies, no? Full two-wheeler. Skid and full on the road. One lorry came and passed also, almost, just miss. Correct? So, true story. Then what happened? My jeans pant became stylish jeans pant. Everywhere. Holes everywhere. Bleeding everywhere. And this hand, it's still there, you see. And you see this black mark. This black mark full split open. This is actually the same accident. Split open like this. So actually it needed stitches and all that. Because it split like this. There is a black mark still very much present, you can see. So then I was like, oh, what to do? This was already now 6, it had become 5:55, accident 5 minutes gone. So ideally I should have rushed to the hospital, but I was on mental fellow. Have you watched this Lifebuoy advertisement? 99.99% germs will be, which means you'll always come to school on time. I was that Lifebuoy guy. I was like, whatever it is, I'm not missing class. I was on mental fellow. So whatever it is, I'll not miss class. I will go.
it's okay, this and all pain we'll do later, no problem. So I went to class that day, sharp that day, 6:14, thank God. I ran and went. Everywhere bleeding. Obviously you can't see because all inside. Here also it was bleeding. I was wearing like this shirt only. I covered it up. Didn't want to show. In that painful class I sat, I remember. And I remember till today what all he taught in that class. He started with section 186 of the Companies Act. Because I know the pain. Correct? And I sat through the full 10:45. Then I went to the hospital. That fellow said, are you mad? That all, nothing you have put. What is this? I said, okay sir, you do. You put whatever you want and close it. Then I had to go out to office also. No, that's not the point. Point is, I'll tell you the reason why I'm telling you this is, I didn't want to miss class. But the beauty is, the first ever question in my May 2012 CA final exam in company law was from that particular class that I went to. Imagine, how cool is that? The first question only came from that concept. 186 or 185, whatever those two concepts, it came first question. Imagine. So it's not luck, it is actually hard work. So I am not a person with amazing intelligence. When such is the case, no, you will have to work hard, right? So that day, I don't know if you saw Chinmaya sir had come, he had met me. That fellow is one mental fellow, abnormal guy. I'll tell him in his face only, no problem. He's my very good friend. He is all India rank 13, 3, 39. He is really smart. He is like another level. For him, what we study in 5 hours, in 1 hour he'll finish off. That smart he is. When you see him, you won't make out that is that smart. Brilliant guy. So those are different people. We are all normal fellows. We have to study, work harder. So in that, if you don't come to class now, then it is a big problem. Because we such people, we first of all have to study on our own. We don't understand so much so clearly. To work hard extra, right? Yes. So that first question only came from that class, which I still remember. Which means you should never ever miss class, whatever it is, right? Even if you are not well, this, that, try. I mean, if it's really not well, it's okay, nothing can be done. But today I don't feel like going, you don't have an option only like that. There is no feeling, cut all your feelings. You are doing CA. I don't feel like going, nothing like that, you have to come. Correct? So that attitude if you build, 100% you will clear. Because all of us here sitting here, I know we are not some amazing, brilliant people. We have to work hard. All of us have worked hard. We will work hard also. And this is one exam where your entire life you have never failed. In this exam you can fail. You can see the word FAIL or unsuccessful for the first time in your life, which is a horrible feeling. Correct? So what I am trying to tell is you have never failed in your life. Suddenly you are saying unsuccessful. You are like, what happened to me? I was a smart kid. But no, there's no smartness and all needed here. It is just hard work and a little bit of smart work. So that's why it's a beautiful course where a very, very intelligent person also can clear and okay person also can clear through sheer hard work. You have to put some extraordinary efforts, then you will clear. So that's why I'm saying, guys, I'm very happy that you guys have come on a festival. You will be not like a festival today, we'll eat. I'm leaving early only. I'm not taking till 1:30, no problem. I'll leave by 12 o'clock. I'm also giving you some concession, but class cannot be missed. So I'm happy that you guys are there. Stick around. You will pass the exam. The only way to clear CA exam is sincerity, not seriousness, sincerity. With sincere efforts, 100% you will clear. So that cut is still there after so many years. 2012 means it's what, 13 years now. And the thing is, I still remember that class. And I still remember how I wrote that examination when I saw that question. Because in that pain when you study, no, you'll remember everything. So that is what it is. And things have changed. That time we used to sit down, mosquito and all used to bite in the morning. Odomos one cream comes, you know, full body Odomos. So for full whatever, during the tuition days, everyone was smelling of Odomos. Correct? If you come early, you will get seat. Otherwise, down. See how things have changed in 13 years. Students now want AC. Students now want projector. They are nothing that time. It's not that old, just 13 years old. It's not too, but things have changed. Now we also have to change. No, we can't say, no, sit on the ground. They'll not come only then. So things have to change for sure. It has changed, which is very good. So if you see, yes, but the thing is, one thing will never change is what I am trying to tell is Odomos has been shifted to AC room. superb ventilation, excellent infrastructure, AC, that too this AC is 2.5 lakh rupees per AC this is, correct? It's not even a split AC, it's a centralized AC sort of a thing, correct? Cassette AC it's called. So normal AC is that it will start leaking everywhere and only one person will get that. This we wanted to ensure that you guys get at least, very comfortable, and it looks also very classy. 2.5 lakh rupees per AC, right? So if you see, now you will sit and count 1 AC, 5 lakh. Chartered accountants, no, CA students. That room 3 ACs are there, 7.5 lakh. Yes. So if you see, anyway. So ultimately, what I am trying to tell is, just stick around, guys. You will pass. So Odomos may have changed to these rooms, but what should never change is sincerity level. So that's the bottom line. If you are sincere, you will 100% pass. You guys have passed foundation also. 6 of you in this class have passed foundation. Others also have taken the step to do, CA after BCom. It's an excellent step. So hang in there, you will pass. Sincerity, even after 20 years also, same sincerity if you put, you will succeed. There is no way that you will not succeed. So I am happy that you guys have come on a festival. You are attending class, and I am thankful to your parents also actually to have changed and for you, and they are doing everything for you. Just 3 years we should live like, there is like on tapas, vanvasa we should live in such a way that after that it's chill, guys. Once you become a CA, then no tension. Still hard work is there, still everything is there, but you have the degree. Once you have the degree, that's it. Nobody can touch you. Right. Cool. So good. So if you see, Forex example, if you see, I'll just give you an example. Whatever I told you, it's written here. $10,000 you bought an asset on credit. That time $1 was 80 rupees. I'll explain and you can copy. So at the time of recording, what did you do? 10,000 into 80, 8 lakh rupees. Then on 39/2024, $1 had become 75 rupees. You have to repay $5,000. It is less repayment or more repayment? Less. 5 rupees less. So that 5 rupees, 5,000 into 5 you will subtract from 8 lakh. Then again on 31/3 it had become 95 rupees. Increase by 15 rupees actually. 80 has become 95. Increase by 15 rupees. So 5,000 into 15, you will add 75,000. So as and when you are repaying, you have to keep on adding or subtracting. Is it clear? Copy, guys, copy down. Please copy this example. I have given you example already. One more example, and you can copy and close it. There you go.
Done guys, very simple. So that 75,000 is added. So you see here, so what all we have finished now? We have finished GST, subsidy, cash, Forex. 2 and 3, nothing is there in that. Freight and insurance. Obviously, when I am buying the asset and I am transporting the asset from the factory to here, that freight charges have to be paid. That will be added to the asset. And I will buy insurance also for the, if it gets destroyed or not, I need to buy insurance. That also will be added. That's okay. Installation expenses also. So I'll have to ask the AC guy to come and fix this. He will take some service charges. That also will be part of the asset. AC cost is 40,000. The wiring and service and installation is 5,000 more. 45,000 I have to take as the asset value. That's all simple. Last point is interest on loan till it is put to use. If I want to buy an asset, I can take a loan to buy the asset. When I am taking a loan to buy that asset, interest will be debited to P&L account or added to the asset is the question. Generally interest is debited to P&L account, but the lawmaker says until the asset is put to use, that interest must be added to the asset. After the asset has been put to use, then what should you do? Debit to the P&L account. So if you see, if you check that, I'll give you an example. You see, asset is bought in April. I'll give you a time to copy, but I'm just telling. Asset was bought in April 2024 for 1 crore rupees. 1 crore rupees, and as I bought an asset, but through what? Through only loan. I borrowed 1 CR in April 2024 and I bought the asset. But the asset was put to use only in May 2025. 1 year. For 1 year I paid an interest of 10 lakh rupees. After this put to use, every year 10 lakh, 10 lakh, 10 lakh I am paying. For example, 30 lakhs in this example. 30 lakhs will directly be debited to P&L account in a section called section 36. Section 36 is for expenses. But the question here is, what happens to this 10 lakh rupees? This 10 lakh, what to do? This 10 lakh will be done what? This 10 lakh. What do you think? Added to the actual cost. So my loan is 1 CR, asset value is 1 CR, interest is 10 lakh, so asset value will become 1.1 CR. Got it? Only till the year it is put to use. After it is put to use, what will you do? P&L account. It makes sense because once it is put to use, it will go and sit there. So this was inserted because of Mukesh Ambani, Dhirubhai Ambani. Dhirubhai Ambani, what he used to do, he used to buy lot of assets through bank loan only. 100 crore loan, 100 crore asset. And that time there was nothing called debit to P&L account. Everything could be added to the cost. So he used to keep on adding to the cost. All the loans he added to the cost, all the interest he added to the cost, and claimed depreciation also. Think about it. First of all, I am borrowing money. On top of it, I am paying interest. And I am adding that interest to the asset. Asset value instead of 500 crore has become 700 crore. On that I am claiming depreciation and reducing my tax. So that's why they said nothing doing, and he's doing business also superbly. Company law profits are lot, tax losses he is showing. By debiting, instead of debiting to P&L account, what is he doing? Adding to the asset and claiming more depreciation. Hence, to stop that from happening, they said interest to be added to the asset only till which date? Till the date it is put to use. Once commercial production begins, it will no longer be added to the asset. Where will it go? Debit to the P&L account. This is the reason. Dhirubhai Ambani, more than 100 changes in law is only because of one man, Dhirubhai Ambani. Brilliant guy he was. So many things, always finding loopholes in the law. So once Chidambaram is there, no? Chidambaram, he wears lungi and comes everywhere. White dhoti, white, always white. That fellow told, this time I have only written the budget. I have ensured that all the loopholes are covered. He told once in 97, some 2000 he told. 97, before Dhirubhai Ambani passed away, yeah, somewhere in the 90s.
So Dhirubhai Ambani said, no problem, challenge accepted. In 1 month, he found 5 loopholes and he played around with that also. Imagine, the brilliant guy. He means his entire team, brilliant people. Because of him only so many laws have changed. Right? Okay, copy. Done, guys? Okay, okay, no problem. If you are done, take a break. We shall catch up in 15 minutes.